REC has always been at the forefront of embracing new and upcoming technology-based initiatives in the green space. With each investment, we are reducing the country's reliance on traditional fossil fuels and coming closer to our goal of a greener tomorrow. Our goal is clear: development with sustainability to fulfill the needs and dreams of today while nurturing the earth for generations to come. At REC, green is our compass. Every step we take today shapes the emerald horizons of our shared future. REC has always been at the forefront of embracing.
Welcome to the 14th edition of the Business Today MindRush and India's Best CEOs Awards. I'm Sakshi Batra, Senior Associate Editor of Business Today, and it's an absolute pleasure to welcome you all to the biggest event on the business calendar for India Inc. Business Today MindRush serves as a premier platform for thought leadership where industry leaders exchange ideas, strategies, and insights in an ever-evolving business landscape. This distinguished event not only fosters dialogue on emerging economic and business trends, but also it celebrates excellence and honors the winners of the BT PwC India's Best CEOs Survey, an annual ranking of India Inc.'s finest leaders selected by distinguished jury. So let's dive into a day of inspiration, innovation and excellence as Business Today itself enters its 35th year. Let's take a look at the legacy of this iconic event. Let us have the AV, please.
It's that time of the year again. Time for the Business Today MindRush and the Business Today India's Best CEO Awards. Since 2013,
start of BT MindRush this evening, friends.
The much-awaited annual event has been the ultimate crucible of leadership, where captains of India Inc. recognize the achievements of outstanding leaders. For over a decade, the Business Today MindRush event has been the beacon of excellence in the Indian business landscape. This year, we celebrate the 14th edition of the awards, a testament not only to the visionary leaders who have shaped India's growth story, but to business today, which has followed and logged every step of India's economic path. The selection process for the BT PwC India's Best CEO Awards is rigorous. The quantitative analysis of the companies in the BT 500 universe is followed by a qualitative analysis by a high-powered jury. This year's jury was chaired by Harsh Mariwala. Trailblazing titans of India Inc. across 20 categories, honored for their outstanding achievements.
To begin, and we would first like to thank our esteemed partners. Our presenting partner for BT MindRush is PwC India, Conglomerate Partner Adani, Celebration Partner Art Horse and Outglass Fair, Hospitality Partner is Sofitel Mumbai, BKC Real Estate Partner Sri Naman Group, Power Partner REC. And now I'd like to call upon stage Mr. Siddharth Zarabi, Group Editor of Business Today, to please come upon stage to deliver the welcome address. Warm welcome and a huge round of applause, ladies and gentlemen, Mr. Siddharth Zarabi.
Good afternoon, very warm welcome, namaskar to all the dignitaries. I know we will, as the program gets on, have full tables, especially in the front row, that's the winner's row. But a very warm welcome to what will be a power-packed series of discussions in Business Today MindRush. The 14th year of Business Today MindRush, the 14th edition of these awards, and through the day you will see some of the most contemporary issues, including markets, our energy security, our fertilizer security, what corporate India is doing to cope up with all of these challenges. All of that will be discussed, followed by a stellar lineup of some of India's largest, best performing companies, CEOs coming and accepting their awards. So I welcome all our guests here today for making the time on a Saturday. in Mumbai. And with that, congrats to all the winners and to all those who are here for participating. Thank you very much from the bottom of our heart. Thank you.
Thank you so much, Siddharth. And now I'd like to call upon stage Mr. Sanjeev Krishnan, the chairperson of PwC in India, to come upon stage, please, to deliver your keynote address. Huge round of applause, ladies and gentlemen, for Mr. Sanjeev Krishnan.
Good afternoon, everyone. Thank you, Siddharth, and Business Today. Sorry, I'm just going to put this here. It's an honor for myself and, of course, for PwC to be partnering with BT. I think this is a platform that we have been working with BT for a few years, and it always gives us an opportunity to engage with the best of India Inc., figure out what's going through their minds, what challenges they are navigating at this point in time, and what disruptions they are facing and how are they dealing with it. That gives us an opportunity. Also gets us the opportunity to bring some of our insights from some of our global insights as to some of our global clients, global ecosystem, what insights they have, what points of view they have, and bring that into the discussions. Now again, if you were to go back and do this discussion maybe 6 years back, I would have possibly started the same way as I'm possibly going to start today, because I was asked to briefly speak about leading in uncertainty. And I can only say that even as I start, that whatever I might say today, the reverse of that may be equally true 1 year down the line. The same thing was possibly true in COVID times, when we did not know what's really hit us and what's going to change. And today we find ourselves on a similar crossroads with significant amount of uncertainty. The two things that we care for most, capital and technology, they are the ones which are causing both the disruption and will potentially cause also opportunities. And the question, and getting to the topic as to what would it take for us to lead in uncertainty, which is what I'm going to try to cover very briefly. From the perspective that we look at it, I think there is clearly an opportunity in this uncertain world. But for that to happen, for us to be differentiated, what is possibly needed is clarity in the minds of the leadership. Now you might say that how do we get clarity when there is so much uncertainty? As I said, that's both a challenge as well as an opportunity. And the acronym, the noun to the word clarity, is clear. And I will just try and explain to you how leadership could attempt to be clear with some anecdotes as well. So when I talked about clear, what I will talk about is very briefly again, control, learn, evolve, act, and rethink. The first thing first. When we talk about control, there are many things which are not in our control at this point in time. But does that constrain us, or does that make us do things differently? Take the opportunity which might not be visible, but where we have conviction. And when I talk about that, the best example that comes to my mind, and I actually spoke to my partnership about it some time back, was the example of how Amazon Web Services came along back in 2006, 2009. It was a very similar time after the financial crisis of 2008. At that point in time, everybody was looking to conserve cash. And here was a gentleman by the name of Jeff Bezos who was actually going the other way around and spending a lot of money in creating what we today know as Amazon Web Services. He took the chance, he took control of the execution, and I think the important thing really is taking control of the execution, which means that you need to be in the trenches to be able to deliver. But today we know what value AWS has created for Amazon. So that's control. The second one is learning. And again, we all say that we have to be in a continuous state of learning. That example, I think the best example that resonates with me is the example of Microsoft. You go back 2014, Microsoft was an organization which was struggling a little bit. There was a lot of internal insecurity at that point in time which was happening, and they had an attitude that they possibly knew it all. What did Satya do? I'm sure many of us have the opportunity to read his autobiography, and many of us might know him as well, was to move the organization from an organization that was a know-it-all organization to a learn-it-all organization. And this simple but radical shift in some ways made the leadership not vulnerable, but willing to learn from each and every incident that were to happen to the company and from the smallest part of the ecosystem. And again, the change or the transformation is in Microsoft is for all to see. Then moving on to the next one, evolve. And I think when I think about evolution, you can well imagine, I think there is no better example than NVIDIA. Look at the value that they have created. Back in 2006, 7, 8, 9, they were mostly on gaming applications. But it took somebody like Jensen Huang to actually say that I need to focus on artificial intelligence, and the whole GPU process started back in 2006, 7, 8, 9. At that point in time, forget finding out the TAM for artificial intelligence. One did not know as to whether that the investment that he was making in the whole concept of GPUs was ever going to cause any kind of outcomes. But today, it has caused a huge AI revolution, and that again was a bold move at that point in time, which needs to be applauded, which we sit and applaud today, but that has a lesson for us, and which I will come to just very briefly. The next one is act. I did briefly say when I was speaking to you about the Amazon example to execute with a lot of intent. And I think if I were to get closer home, when I talk about acting, it is not about taking any reckless actions. It is about making sure that one is taking the whole of the firm to address the opportunity that might exist. And the example in India closer home which comes to mind is the example of Jio. We were at that point in time coping with very high data cost and very low digital penetration. And what did Jio do really? It sort of reduced the data cost in a very significant way and created a digital ecosystem that today, in fact, I was just mentioning to somebody that when crossing a road, at times you could just have to stop the car because somebody is actually watching a movie as he's passing by the road. That's the revolution that Jio has caused. Which brings me to the last point, which is about rethink. And I think the best example of rethink, when I think about it from an Indian parlance, is what transformation the Tata Group caused many years back. At that point in time, many of you would remember that Indian companies were not very comfortable in acquiring anything outside. Not only did Mr. Ratan Tata ensure that both his flagship companies, including Tata Steel, which actually made the first large steel acquisition in the UK, and then, of course, followed by the very marquee acquisition of Jaguar Land Rover by Tata Motors. In some ways, Tata's was not a brand that needed, for us to be told that Tata is such a critical brand for the country, or it's such a renowned brand. But how do you refashion a brand? How do you rethink a brand and create more value? And of course, Mr. Chandra thereafter has taken it to a different level altogether. So if I may, just in conclusion, why did I think about clarity and clear as the reasons for me to start this conversation is that there will be a lot of things which will challenge us at this point in time. There will be an intent to make sure that we are conserving resources, which we should, but that should not come at the cost of focusing on innovation. That should not come at the cost of spending and taking those calibrated risks which will possibly create value tomorrow. I do believe that this is also a big opportunity for the leadership. The leadership of India Inc., I'm sure, will show up and want to be counted, because it is not just a time for optimization. It is a time for creating alignment and also for driving a commonality of purpose to achieve India's Viksit Bharat ambitions. Whether it is just maintaining our momentum, which we have got, or whether it is navigating some of the challenges, I do believe that one has to make sure that uncertainty does not become a roadblock, but uncertainty inspires us to act fast, and most importantly, act together to create value for us and for the ambition of Viksit Bharat that our Honorable Prime Minister has set for us. Thank you so much and enjoy the day.
Thank you so much, Mr. Krishan. And now, ladies and gentlemen, it's time for our first session this afternoon. This is going to be a crucial conversation on Beyond the Markets Mayhem. Please join me in welcoming our speakers. We have Mr. Madhusudan Kela, the founder of MK Ventures and market veteran. Also, Mr. Shankar Sharma, market veteran and founder of G-Quant. And chairing this discussion will be Shailendra Bhatnagar, chief analyst and editor for Markets Business Today, and Aabha Bakaya, consulting editor for Business Today. Truly, this conversation will explore insights into navigating market volatility and identifying opportunities beyond the short-term disruptions that we are seeing at this point in time. Huge round of applause, ladies and gentlemen, for this first session on stock markets.
Good afternoon, ladies and gentlemen. Great to see all of you here. And we're kicking off with a firecracker of a session. We couldn't have asked for two of the better minds when it comes to stock markets, experts that have been monitoring markets and historic movements over the last few decades. It's going to be really interesting to dive deep into it with them, given what's currently going on in West Asia. Thank you so much, both of you. You know, everyone has been going on about the India story, the domestic story, and how we can withstand anything. But Madhu, has the time come when we need to realistically look at the possible hit on the back of what could happen to oil?
Aabha, first of all, Aabha, Shailendra, thank you for having me here. Appreciate. Shankar Bhai, thank you so much. I think, I would say then, before we get into oil, I want to set first the context here, you know, that everyone will have his own perspective of looking at things. And no size fits all. So what my advice or what my genesis is something which works for me. For a lot of people it may not work. Even the thought process may not work, right? So people have to contextualize that in the context of my understanding I am speaking, right? So as an investor, what have I learned in last 35 years? This is not the first time I am seeing uncertainty. We have seen 2008, wherein we didn't even know the largest institution in the world will survive or not. We've seen COVID, where I didn't even know I will survive or not myself, right? And we have seen many crises in our life. So for someone like me, I always look at all of this as a great opportunity, because I do not think exceptional returns ever are made in a bull market. You know, exceptional returns are being made when you invest in times like this and wait for the bull market, right? And when the bull market comes, the reward comes to you.
Right. So then let me reverse the question in terms of, when you're saying don't invest in a bull market, are we even close to a fair valuation yet?
So that's what I'm saying. This is not an event. I can't say that that event is there on Monday and you invest on Monday, or the event is there on Tuesday and you invest on Tuesday. When I am investing, I am prepared that this may last for 3 more months. And index may go down, go down even from here. A lot of individual stocks may go down even from here. With the frame of mind, if you are investing, then you will do it in a very disciplined manner. You will make sure that you are not overextending yourself, right? I am not leveraged at all. So whatever the damage of the portfolio is my own money. I am not answerable to anyone. But have I started seriously looking for those opportunities? The answer is yes. Have some of them are visible to me? The answer is yes. But can it become more compelling in the next 3 months? Because this is not a small thing which is happening right now. I do not think that, people should take Iran lightly. It's a very different country. It's been built over thousands of years. And they have a 200-year track record. It has got, 8 years of history of fighting Iraq. So in what way it will manifest, we don't know. But, so that's another comment on the war. But see, I am not an expert, neither do I want to be a geopolitical expert to predict how long can this war last, when will it settle down. But for me, will it throw many opportunities than challenges? I am sure about it that the opportunities will be bigger than the challenges which are there in the short term.
Right. So, ladies and gentlemen, Shankar Sharma and Madhu Kela for you, two gentlemen who've navigated the Lal Street for the last 35 years. Shankar comes straight in from Dubai, will give us a first-hand view of how the missiles are flying around. And Shankar, the world has served you only wish. We present to you Madhuji.
So right now, I think more than Madhu, we need a Madhushala to
You will have to wait till 9 p.m.
because, it has been a very, very interesting period to say the least, and it's a very gut-wrenching period for people who have been in the war zone. And till you see or hear the intercepts and you feel the bombs going off close to where you stay, you don't understand what it feels like. And then when you see the drones flying at night, it's a very different feeling when you realize how life can be brought down to whether tonight anything bad will happen or not. It is literally that. But going through that time, and I recall this is 1 month ago, at least I had the presence of mind on February 26th, 6th actually, 28th it started, because I had done a lot of work prior to the war starting, and back in the Middle East at least we knew it was a matter of a few days when it would start. And on the night of the 25th, I heard a lot of jets flying overhead. That was probably sorties being flown by American fighters, which was from the aircraft carrier in the Gulf. So I could not sleep, and I went down to the lower floor of my home and I started to read. And the conclusion, and I read till morning, and the conclusion I reached is that people are underestimating Iran, as Madhu pointed out. And I really spent 5-6 hours reading up, and I was very clear that this is not an easy war for the aggressors to win. And if it's not an easy war, then the outcomes will be worse than what we expect. The Strait of Hormuz closure was already on the cards in the previous June episode. It was already talked about. That it happened, that it did not happen was only because of a ceasefire. So I did the only logical thing that my 35, 36 years has taught me, that we look for opportunities. So I went and bought a lot of oil. The next day the market opened. So I'm sitting quite okay, to be honest with you.
So is it
It's not a bull market that people like, but I am a bull, just that I look like a bear, but actually I'm not. It's just that I play the bull market across the world. There is always something where I can make money, even in a war zone. So while things were going around, I was actually fairly relaxed. So it worked out quite okay so far, fingers crossed, we'll see.
I must say for Shankar, he's been a good friend for many years. His ability to identify the next leg of trend or the market is absolutely unprecedented. And you could not have got a better person than Shankar to be on this forum. Because, for instance, I don't even claim that I understand these things. So I want to really do things which I understand. I have no real understanding of what the next leg of the market will be. So to that extent, I really, really admire Shankar a lot, that his ability to shift to the next big trade and stay there till the time it lasts. So tomorrow if the war ends, for all you know, his oil position will be zero before we
100%.
Before we even were able to catch him and give his comment.
Do you see oil hitting 200? Because at 150, the market's already spooked. The Indian basket is already at about 150. Is 200 realistic? And what's going to happen then? Because that's going to be a huge shock for the economy.
No, for India, I mean, unfortunately, this crisis has shown us up to be, at the surface, it's a very strong economy, we know that, but below the surface, we look not that strong. This crisis has exposed really the fault lines and the weaknesses. So oil we always knew, but fertilizers, for example, this people had not figured out. I had not figured out that the chain will reach fertilizers, it will reach homes, households where LPG will become a problem. This has exposed us to that very, very big crater underneath our otherwise very good economy. And I think that's a cause of worry, but hopefully because of this crisis, as Madhu and I were discussing, we do something as a nation to plug this very big hole, because without energy security, without energy independence, more importantly, we will just build castles in the air, literally. I think this is that wake-up call we needed.
Okay, let's look at the practical part of this crisis that we are facing. What do you do? What does the retail guy at this point of time do in India? He doesn't have the flexibility like you to invest overseas beyond a certain amount of time. But what now? Is it an opportunity to put in some fresh money, or maybe wait for 3 months or more?
So one of the other things that has come out in this crisis, which I have said for the longest time, is that there is just too much equity focus of Indian investors, I mean retail, and that's primarily because of the industry being largely equity focused. And that works for a few years and suddenly one day it stops working. People who had the foresight or even basic risk management that too much equity is not good, we should have some gold. You may not be able to do oil that easily in India, but gold is a fantastic asset, but that was never talked about 2 years ago. That started getting talked about last 12 months. This has exposed in a good way to investors that there is a game beyond equities, and if you want to survive long term, forget about prospering. You want to survive long term, you have to look at the options available in India itself. And there are pretty good options. Aisa nahi hai ki khali equities hi hai. But unfortunately, the whole narrative and the marketing centers only around equity. This is a good time when people have woken up to other assets, opened up to risk management. I think this is the time for small investors to really look at their portfolios, which are maybe perhaps too equity heavy, and say we need to have a little bit more of other things, including bank fixed deposits. I always say it's a very good product in India. It gives you maybe not inflation beating, but at least at inflation returns. There's nothing wrong with that.
Deposits are certainly having their day.
To put things in context, actually gold is a multiple time bigger asset class in India. Whether even though by default, it has happened over the years, but if you look at the size of gold holdings today in India, it will be close to $4 to $5 trillion, because it used to be $1.5 trillion at COVID time, and from there the gold prices have gone up 3x. Forget the incremental accumulation. So it's like $4 to $5 trillion in size. The size of the equity holding will be maybe a few percentage points. But as you were saying, that may have happened by default. Over the years, the household believed in saving in the form of gold. So, but equity is not as big an asset class as it looks like. Because in the recent times, we have seen surge of this SIP. So it looks like disproportionate money has gone into equity. But if you still look at it, real estate, gold and fixed income, it still remains, in absolute terms, very large asset classes in India as compared with equity.
But gold is behaving so unusually at a time like this, despite the recent gains, and partially because of what's happening to the dollar. I want to get your view on that as well, because we're seeing action on the dollar. The rupee is, of course, crumbling. So we're really being hit by all sides. But if you're talking about alternative assets, how's the dollar looking right now?
No, so I am long-term reasonably bearish on the dollar, but actually speaking, when you're bearish on the dollar, you have to be bullish on something else, because dollar is always a derived value. There's no absolute value. This weak dollar against what? Well, I think the trade basically is anything which is denominated in dollars looks good. Hard assets look good. soft assets like equity may not be as good for the next foreseeable future. Please also understand, India has been in a bear market for 2 years. But the world was not in a bear market. I mean, if you look at like 12 months, 24 months returns from global markets, they have been off the charts. They have been astounding to say the least. So now that big excess returns from equities will get corrected in favor of more hard assets. The world will realize, and it is realizing, that oil, it is a bad asset. We don't want it to go up. But if it goes up, we have to find ways to play oil. You have to find ways. Maybe in India you can buy ONGC. And there's not a recommendation. I'm just saying, or a coal India, because alternate fuels, alternate producers of energy, maybe solar at good valuations. You have to look at things outside of the traditional ways of looking at markets. Because this crisis will produce those winners. But dollar itself, given the kind of policies America has, will continue to fall out of favor. Now we know that Iran is selling oil in terms of being settled in yuan. Russia has been selling oil settled in yuan. There is a big part of, not big, but reasonably big part and growing part of oil, which is the largest traded commodity in the world, going outside of the dollar system. So the whole petrodollar itself is now coming into a big question mark. These are big shifts happening. We need to find ways to play those big shifts.
I'll just make one point on gold. See, last 3-4 years, gold went up not because of only geopolitics or not because of the war. It went up because all central bank and all the governments were buying big time gold. And I would say the recent move in gold, in spite of war, logically the gold prices should have gone up, right? But everywhere there is a squeeze. The ability of central bank, the money is going to spend somewhere else. So their ability to put more incremental dollar in gold has diminished somewhat in the last 2 months. And maybe, who knows, some of them may be liquidating also gold to face up this to the crisis. And that possibly explains...
Yeah, Russia has been selling some gold.
That possibly explains the move in the gold, right? The other thing, when you look at what Shankar touched and we were talking about it, see, how do we look at opportunities? So I personally feel, Kirit Bhai is here, one of the most respected voices here, but I'll just make one small point, that this is exposed India, that on a 4-day, 5-day war, 25% of household may not have gas. So I feel unprecedented amount of reform and work will happen in this area as soon as things settle down. We have a lot of proven oil and gas reserves. We have a lot of alternate sources of energy. So you can say, I can still continue to import mobile phone, I can continue to import gold, and I may stop the mobile phone and I may stop gold. But can you live without energy? Can you live without self-reliance on energy? So for all we know, this might be the next big sector where there's a lot of money being made, because see, you have to be little ahead of the curve. You have to have some untraditional thinking. I'm just saying, if you just say commonsensical approach, if you were in government, will you not think, will you not be compelled to think that how do we make sure that we have energy security in this country? And when you play for energy security, there will be lots and lots of plays across to make money over the next 5-10 years.
Both you gentlemen have been very, very close to the big bull, Mr. Rakesh Jhunjhunwala. Unfortunately, is no longer with us. To you, Shankar, what do you think he would have done at this point of time?
That's a different question. So, people who knew Rakesh, I mean, one is the public utterances that we do, one is what you do privately. I'm sure he would have been shorting apart from being long. So, I mean, understand this, that you can't reveal 100% of what you do. I mean, that's not what we are required to do also as private investors who manage their own capital. As a fund manager, you have to be out there on TV every day, but when people like I manage my own capital, I think Madhu manages pretty much his own capital. We don't have to reveal all our cards. But the reality is that the reason why all of us have survived 35 years in the game is because of the ability to manage risk. And in risk management, many things come in. So the ability to, short at the right time, the ability to sit on cash at the right time, all those things are not spoken about. So I'm sure he would have had an ace up his sleeve to at least prevent you from having permanent loss of capital. I'm sure at the back he would have done that, as any reasonable investor who has done 3 decades in this will do.
Madhuji, to you.
So I had the privilege of really being very, very close to him. At least last few years I spent a lot of time. I can clearly hear his voice even though he is not there. So I don't know about his trade, whether he would have been still short or long, surely not long for sure in trading. Maybe he would have been short. But he would have told me only one thing. चुपचाप बैठ. तेरे को मालूम है कब ये खत्म होने वाला है? Don't try to be brave in this market in trading. If you are trading, go with the trend, right? And second, like I remember in COVID, you know, he was very, very careful. But the moment he realized that the bad news has stopped impacting stock prices and the market, he called me one day, कितना घर में सोना है? बोले भैया क्या मालूम, आज तक काउंट नहीं किया, सब बेच के इक्विटी ले ले, सब कुछ. I want you to be 105% invested in equity. And he gave me 5 examples of 5 different companies, saying देख इसका लॉट खत्म हो गया, इसका लॉट खत्म हो गया, इसका लॉट खत्म हो गया, एक भी रुपया घटता नहीं है भाव, और लॉट खत्म होने के बाद 20% बढ़ गया है. So he would have really watched for the markets to stabilize and bad news stopped impacting the prices and they stopped reacting negatively. And there will be a point of time, Shailendra, you and I are here. You will see the bad news will continue to come, but will stop. Markets will stop reacting and the prices will stop reacting to the bad news. And maybe that will be the turning point of the market. So I can clearly hear his voice in my ears that चुपचाप बैठ, तुझे नहीं मालूम है ना क्या होने वाला है, अभी देखने का time.
Which is what risk management is all about. You don't have to be playing offensive big shots in a difficult situation. Sometimes just don't play. Leave the balls. We'll see how it goes. But that's what the difference between the men and the boys is, that the boys will be always aggressively playing and you have permanent loss of capital staring you if you play aggressively in markets as we are right now, for example.
Shailendra bhai, इसमें क्या होता है ना, some people like us we are paranoid about our survival. All the time, I may look like a bull all the time, but if I was bull all the time, तो it's like a game of cricket. If you want to hit 6 every ball ना, तो फिर pavilion में जाके भाषण ही देना पड़ेगा, ऐसे खेलो वैसे खेलो. You will be out of this game. So even though we are bullish, but we have our senses, you know, how to approach the market, you know, how to remain sane in this kind of environment, how to not leverage. However bullish I am, I can find companies in this market where cash is higher than the market cap. Cash is higher than the market cap. How bigger a deep value you can get? But I am not yet buying because of the paranoia of surviving through these difficult times. You know, so you have to at some point of time realize your view is different, market is telling you something different. So I'll be buyer of all of this, but wait till the time prices tell you that bad news has stopped impacting the markets and it has no impact on the share prices. And that time will come, whether it is now or after 15 days or after 1 month, that I don't know.
All right. I think we're out of time, but just one quick question, since you know both of you are, of course, very experienced in this. But this new trend of Trump coming up with some googly every morning, is there any kind of speculative or you know, with secret leaks or selective leaks that they're putting out? Any kind of market maneuvering that you are seeing in your experience point of view? Do you think that's happening, at least in the global market?
Yeah, I mean, that's so obvious. I mean, I don't think they require a great deal of intelligence to figure it out. There has been a lot of energy market manipulation, stock market manipulation. It's all over the internet in terms of block trades happening just 5-10 minutes before such announcements. But understand before we go the one simple thing. For America, it is very simple. They want to control energy independence of the whole world in their hands. If Iran falls into American hands, and this is very important, I shudder to think of that future for countries like India, for example, let alone the other country. We are Indian, we are worried about India. You will, barring Russia, all the oil in the world will be directly or indirectly controlled by America. So you see Venezuela was taken over 2 months back and now we have a war. Venezuela's oil wells were aging. At $60 it was not viable. At 110, 120, everybody will invest therein. So now you can join the dots to see why the war also happened. You see what I'm saying? So the point being, let us only pray for one thing, that we maintain some degree of energy independence. Otherwise, if we are permanently going to take approvals to buy this oil and that oil, that is not good for a country like India. I'm worried about that.
I agree with him. One final word from me. Aabha, I want to share 35 years of my investing experience for people buying or listening. So this is the time you can worry about 100 things. You can worry about oil, you can worry about Iran, you can worry about the war, you can have view on everything. But this is a time to remain sane. Do not overreact. Do not watch television or media or social media very often, because that can create
or Trump's tweets.
or tweet, whatever works for you. Remain sane. Use this maybe possibly as an opportunity in the longer run. But do your risk management very, very properly, right? So this is not a time to be reactive. We don't have to react to everything. If you're a trader, then I am not a trader. I don't have any advice to give. For an investor, it is always proven wise to be sane in times like this and behave very intelligently. I can tell you, COVID was 50 times bigger crisis than this. The existence of the world was at question. We did not know even whether the vaccine will be there and when it will be there. And lakhs of people were dying every day. We came out of there also. And who knew that the biggest opportunity of lifetime lies in the crisis? The next 4 years post-COVID was the best time to make money in the market. So we don't know how these crises are also manifold, and they actually provide you opportunity. So on that kind of realistic and optimistic note, I wish people that they behave with a lot of sanity and then they don't overreact and extrapolate any event in their life, because event is only just one event in the life of long investing career.
Wonderful. Thank you both, gentlemen. Very kind of you.
Next panel, huge round of applause there. May I please also request Shri Siddharth Zarabi to please come upon stage and present a token of appreciation to both our special speakers for the first session. Let's have a photo op. Thank you very much. Huge round of applause, ladies and gentlemen. Thank you so much, Mr. Shankar Sharma, and thank you so much, Mr. Madhusudan Kela. Our next session, ladies and gentlemen, is sea lanes and supply chains. As India advances as a key economic and strategic power, ensuring that we do have secure maritime corridors, and securing them has perhaps never been so critical. This is particularly evident considering the ongoing conflict in West Asia, which has disrupted global shipping, crude flows, and energy security. And against this backdrop, the conversation will explore evolving geopolitical dynamics, the Indian Navy's strategic priorities, and the industry's role in strengthening maritime resilience. For this session, I'd like to invite on stage Vice Admiral Krishna Swaminathan, PBSM, AVSM, VSM, Flag Officer Commanding-in-Chief, Western Naval Command, Indian Navy. Huge round of applause, ladies and gentlemen. To moderate this session, let us welcome Gaurav Sawant, Senior Managing Editor, India Today Television. Over to you, Gaurav.
Ladies and gentlemen, good afternoon. Today is day 29 of the US-Israel war with Iran. And on day 29, Tehran is being pounded, so is Beirut. Iran has launched a number of counterattacks. They've targeted many localities in Israel. They're targeting Saudi Arabia. They're also targeting the United Arab Emirates. The sea lanes of communication remain blockaded to a large extent. There are reports that 2 Chinese flagged tankers, they've just been sent back. India has managed to get some tankers out, both oil and gas. To talk more about this emerging situation, it is a privilege to be joined by Vice Admiral Swaminathan. Vice Admiral Swaminathan is Flag Officer Commanding-in-Chief of the Western Naval Command, and you have several Indian Navy ships that are currently out there in the Arabian Sea escorting our tankers back home. Admiral, welcome.
Thank you very much for having me here. I'm very deeply honored to be part of this event, and very good afternoon, ladies and gentlemen. I'm so happy to be here in front of you to interact with you this afternoon.
Admiral, what is your assessment of the current situation, especially with sea lanes of communication blocked? What does this mean in India's context about our energy security and about our maritime security?
So when we talk of the security of the sea lanes, I think we need to break it up into 2 different segments. The first thing of what it means to the world as a whole, and then what does it mean to India. We continue to live, of course, in a globalized economy, in an interconnected world, and commodities go from one part of the world to the other part of the world. There are several parts of the world, there are several nations that are import dependent entirely for their economic well-being and economic stability. So if it's an interconnected world, I think in my view, it is the sea lanes and supply chains that actually make it interconnected at the physical level. And if they get threatened, then of course in an interconnected world, any conflict or contingency that occurs in one part of the world, it's extremely difficult to keep it confined, the impact of that conflict to just that localized location. It's very difficult. There will certainly be spillover effects of very large consequence to other parts of the world. So I think that's the first lesson that all of us have learned and learned once again. And that's why I think it's important for all of us to understand the importance of the sea lanes and the importance of the security of the sea lanes. Purely in terms of transportation economics, it is an established fact that transporting anything by sea is a lot more, commercially, economically viable through sea. Just by means of a small comparison, I understand it's, transporting any item by sea per kilometer is something like 95% cheaper than transporting it by road, and 80% cheaper than transporting it by rail. So somebody actually said that, if you want to transport a cell phone from Shanghai to Rotterdam, which is something like 20,000 kilometers, it would cost you less to transport it by ship and by sea than to transport the same cell phone from a warehouse in Delhi to the showroom in Bombay, which is just 1,400 kilometers by road. So purely in terms of transportation economics throughout history, the sea has been the most economically viable means, and therefore the system of trading, the system of energy, the system of commodity exchange across the world has been established and predicated on sea lanes and the stability, the predictability, and the safety of sea lanes. So this is an episode that is challenging that notion somewhat. If I just come to India's situation, of course, India is crucially dependent for its energy security on fossil fuel imports. All of us know that. Something like 85% or a little more than that of our fossil fuel requirements are imported. And a large proportion of that is from the Gulf area. So it does get impacted. So therefore, it once again reinforces the notion to us that for us, our energy security is ensured by maritime security in the Indian Ocean region, and that's what the Indian Navy does. And so maritime security, of course, in turn impacts national security. So therefore, as far as we are concerned, we always say energy security equals maritime security equals national security, and therefore you can draw a direct thread of logic from energy security to maritime security to national security.
And right now you're trying to ensure all three: energy security, maritime security, and national security. How is it happening right now? where are our ships, our Indian Navy ships, how are they escorting the tankers back? Because I believe some of our ships are going into harm's way. There are Iranian missiles on one side and you have the American warships on the other.
So one of the things that that happens normally in a war zone is that you find the entire war zone becomes a shooting zone, and for us the North Arabian Sea, the Gulf of Oman, the Persian Gulf, the coast of Oman, and all along the coast of Yemen, the Gulf of Aden, the east coast of Africa, that is broadly my jurisdiction as an operational commander at the CNC of the Western Naval Command. We keep that area under constant surveillance and the constant watch. At the moment, of course, we have ships that are stuck on upstream from the Strait of Hormuz, and I think our first national priority is to get them out. And so I know that our national leadership has been speaking to the national leadership of several like-minded countries. I know our foreign minister and our foreign policy establishment has been talking to the counterparts all over the world. My job as a military commander is simply to make sure that I have ships in sufficient numbers and sufficiently prepared so that when the task is handed to me, I can safely escort our ships, depending on where they're bound, out of the war zone. And so we normally do what we are meant to do, which we always do, which we keep ourselves in a very high level of readiness. We keep the entire area under maritime surveillance. We keep a very good awareness level of who's coming, who's going, and who is intending to do what. We see our ships, we meet them, and we give them close escort support so that if they are threatened or their passage is threatened by anybody, we get to know well in advance and we react well in advance so that they are safe.
So I believe there is some good news. We've got 2 ships out yesterday, and I believe 2 more ships are en route. As this happens, how are we prioritizing Indian flagship first, and then what are the level of priorities to get own ships out?
So frankly, the prioritization is not done by me at my level. It's done by somebody much higher than I am. I'm given a task of escorting a ship, but we know that there are several ships that are stuck upstream from the Strait of Hormuz. Of course, we as a Navy are in communication with all of them. One of the things that we do extremely well as an Indian Navy is that we keep a very high level of what we call maritime domain awareness, which is, we are exactly aware of how many vessels are in the Indian Ocean region anytime, how many vessels enter, how many vessels exit. We've got a very good organization called the Information Fusion Center of the Indian Ocean region that is manned by the Indian Navy, that is owned by the Indian Navy in the National Capital Region in Gurugram. That's where we get inputs from several sources across the world. We compile a very, very good picture. So at any given time, we are in a position to know exactly who's where do they come from, where are they going, what kind of cargo they're carrying, which is the last port of call, which is the next port of call. So we generally keep track. That's a part of our daily lives. Now, of course, we know there are Indian flagged merchant vessels stuck there. There are foreign flagged merchant vessels that are meant to come to Indian ports. Cargoes have already been traded. We are keeping track of all of them, and we are also in communication with all of them. So, all of us are concerned about the well-being and safety of the crew and of the ship. And as and when is indicated to us by the national leadership, we go meet those ships and escort them back to safety.
There is trouble at the Strait of Hormuz, and for a moment I want to show you the map, because this part of the world is becoming extremely dangerous. Now, one blockade is there at the Strait of Hormuz. I believe there's a second trouble that's coming up at Bab al-Mandab, and that's the second choke point. So Iran dominates one directly and the other through Houthi rebels. Again, your area of responsibility, how difficult does that make your task? How difficult does that make energy security for the country and trade for the country? And all the big CEOs who are sitting here, they'd be very worried looking at this picture.
So firstly, I'd like to tell all the CEOs who are looking at the picture, please don't get worried. One of the things we recognize is that geography is a reality of life, and choke points like that are a reality of geography. So we've got to make our plans, we've got to make our force level building, everything based on the geography that we have. Geography is something we cannot change. So we are very cognizant of the importance of choke points and straits and constricted sea spaces. And, of course, there are coastal states that either straddle the strait, or they flank the strait, or they rim the strait somewhere, and they have better access to the strait than anybody else. And in a way, they get the leverage to impact happenings in the strait more than anybody else. But that's something that we know. The way to ensure that the shipping passes peacefully and safely through the strait, there are several options that are available to us. As a person who's charged with the responsibility of making sure that our trade is unimpeded through the Strait of Hormuz and the Bab el-Mandeb, I've got my forces there. One of the things the Indian Navy did several years back, and all this predates the current war and the previous war, is that we have adopted a philosophy of having what we call mission-based deployments. And one of our missions, one of the things we are mandated by the government for is to ensure the safety of sea lanes, the safety of our trade, because all of us know, this is common knowledge. More than 75, maybe 75% of our trade by value and 90% by volume comes by sea. So we are a trade-dependent economy, and for our economic growth, the sea lanes being safe, the ocean spaces being somewhat stable and predictable is very, very important. And the Indian Navy, as the biggest and primary manifestation of the nation's maritime power, has been given that responsibility. And therefore, for several years, we have been locating our ships, pre-positioning them, in fact, in many places on what we call mission-based deployments. We also keep tracking global developments, so it's not very difficult for us to know where a hotspot is going to be, or where a potential hotspot is going to be. And it's not very difficult for us to pre-position a ship there with a ship that's capable of looking after our own interests there. So we've been doing that for several years. We know the geography very well. We are positioned there even as we speak. And so should the government require us to bring our shipping safely from there, I think we are more than equal to the task.
So are we in a position to say that things may improve, this one-on-one conversations that are happening? Is it also happening at maritime diplomacy level? Is it government to government level that personal conversations also help get our ships through?
So to the best of my knowledge, much of this, our Prime Minister has gone on record several times and said that all of this, needs to be resolved through dialogue and diplomacy. I'm a military man. My job is just military. I'm a soldier. So I'm not talking to any government. I'm not talking to any Navy. But I know that I'm deployed there in strength, and should the government or the naval headquarters or my boss, the chief of the naval staff, require me to do anything, then I'm ready, and my ships are ready.
Now, what is also very heartening right now is, in a very difficult situation, India's projection of strength. We are the only country in the world that has an ocean named after us. We are a maritime power, but compared to what is expected of us, the North Arabian Sea to South China Sea area of responsibility, do we have the capabilities, or a lot more needs to be done in that regard?
Well, that's a very interesting question. Certainly, one of the views that we have always held as a Navy is that, first and foremost, we are a maritime nation. We are surrounded by the seas. We have a very, very advantageous geography. We straddle the Indian Ocean region where there's a lot of trade passes. We are located in a place where a lot of important international sea lanes crisscross. And so we are in a position to take advantage of our geographical location. And because we are a maritime nation, our linkages, for example, if you see India as a country, as a landmass, our linkages to the north are blocked by either, inimical countries to the west and the north, or the mountain ranges. The only expression that we have of our connectivity is through the sea. And so, it'll be ill-advised of us as a nation not to recognize the fact that we are a maritime nation. All our outflows of our cultural exchanges, our diplomatic exchanges, our economic exchanges are all through the sea. We are crucially dependent on the sea for our economic well-being. And I think all of us as a nation need to recognize that, we need to give a lot more importance to the sea and our own engagement with the sea. And so, in the last several years, one of the things I've noticed in my own career in the Navy is that the role, importance and relevance of the Indian Navy to Indian security and India's long-term well-being and economic prosperity, the relation between what the Indian Navy does for the nation, for national security, is being recognized year after year. Our role is expanding, our force is expanding, purely by way of statistics. We are something like a 140-ship Navy, and in our own vision, we hope to be something like a 270-ship Navy or so. We have said that we'd like to be that by 2035. It's unlikely to happen. But certainly by 2047 or 2050, we'd like to be a 270-ship Navy, so that we can do justice to the aspirations of the country, we can do justice to the security requirements of the country, and wherever the country needs us, we are available in strength and we can support every of our country's needs. So if you ask me a straight question of whether our force levels today are enough, I would only say that the force levels have grown based on our own analysis of our requirements. Our requirements continue to increase, and therefore there is a need for our force levels, both in terms of numbers and in terms of technological capability, to rise, and we are very much engaged in that exercise even as we speak.
I want to show us a map, and this map is more for the rest of the country to reimagine India. Now, how do we imagine India right now? We imagine India like that. That's the way we've been traditionally taught we are. Is it time for us to imagine India like that? That will project our real maritime power. We've had this conversation a long time back, by the way.
So thank you so much for showing this map. You know, this is something that the Indian Navy has been showing wherever it can and to whoever who cares to see it for many years, for the longest time of our conversation. We'd like to see India, we are not naturally oriented to looking towards the north and saying that's the north and this is the south. But the fact is, it escapes our attention very easily that we are surrounded by such a huge ocean mass. And therefore, this is the picture that we need to see, because all the outflows from India, all our intellectual energies, all our cultural, associations, all our trade links, they need to flow out from the peninsula India. And I think this is a very good depiction of how important the seas that surround us is to our security and our national well-being.
When we imagine India like this, I want, since all the top CEOs are here, industry partnership is required for you to become that 270-ship Navy. What is it that you expect from the industry? Because the industry says, if we invest so much and we don't get orders, then we are stuck. Our investment is stuck. You want it, and it has to be Atmanirbhar Bharat. How do you bridge that gap?
Thank you so much. That's such an important question, and kindly give me 2 minutes to answer that. One, of course, this is an Atmanirbhar Bharat. But of course, like most of us know, the Indian Navy has been an indigenous force, or we've aspired to be an indigenous force for the longest part of our history. We set up what we call a Directorate of Naval Design in the late 1950s, and we rolled out our first indigenous warship in the early 1960s. From then, we've not looked back. Of course, it hasn't been a completely successful journey. It's been a difficult journey. We've learned our lessons, we've become stronger, and we've come back. Very recently, we commissioned the 102nd warship that was designed and built in India. So it is a silent story of great success of indigenization. And I think, to the best of my knowledge at least, for the tonnage that we have, our ships, the latest ships, can compare to the best in the world. Of course, when we talk of indigenization and we talk of indigenization content, in our conversations we break our indigenization into 3 different segments. If you can conceive a ship, you say there's something called the float segment, there's a move segment, and there's a fight segment. So in the float segment, of course, we are 100% indigenous. The fight segment, we are somewhat indigenous. We make weapon sensors in collaboration with others. There's a lot more that is required there. But I know that there are a lot of programs with the DRDO, apart from the DRDO, that we're doing to get weapons and sensors indigenized in India. But the move segment, where the propulsion, we've got 5 or 6 different kinds of propulsion systems that propel ships. There are gas turbines, there are steam propulsion, diesel engines, fully electric propulsion, nuclear propulsion, there's gas, water jet. There are plenty of propulsion systems. That is where we need a little more focus, and that's where we are engaged in conversations with the industry for several years. One of the things that's also happened, and I think this is perhaps a very legitimate comment of the industry, that for several years the Indian Armed Forces have dependent almost wholly on public sector enterprises to fulfill the defense construction needs. I think that is changing. The government's mantra of Atmanirbhar Bharat in a way is trying to establish a level playing field between the public sector undertakings and the private industry. I know for a fact that there's plenty of incentivization of the private industry coming into defense manufacturing. We know that for several years the government has invested a lot on creating infrastructure in public sector undertakings, and therefore the per unit manufacturing cost in public sector in terms of logically could be less compared to a private sector who's got to first set up the infrastructure and then start constructing. I think some of that is changing now. To the best of my knowledge, the government is promoting the private industry a lot. The Indian Navy is promoting the private industry a lot. We have gone on record and said that by 2047, when we're looking at Viksit Bharat 2047, we're looking at an Atmanirbhar Navy by 2047. So we want to make sure that by 2047 we try and be completely self-sufficient, and if we do need to import something, it will be by choice rather than by compulsion. And so we are quite happy to engage with the private industry. We have a very, very good program called Swavalamban that is run from Delhi, where it's an annual connect where we call the industry at large. We specifically target the MSMEs, the startups, give them opportunities. We've actually put a lot of challenges. They call IDEX challenges on our website and say that here are our challenges. If anybody cares to address them, please come and partner with us. We are quite happy to underwrite some of the risk. We are quite willing to invest some of the money in research and development. And we've also come to a position where we encourage startups to come and invest money in doing research and development. And if that should not automatically develop into a product, that's quite all right with us. We take that as a learning and move on.
So when you look at the current conflict that's on, do we want to be an aircraft carrier navy, large aircraft carrier strike groups like the United States, or a country like Iran that can use relatively inexpensive undersea drones and make those aircraft carriers move away from the battle zone? So are we talking more about sea control or sea denial in future?
That's a wonderful question, and it's such an interesting comment that you've made. Certainly, firstly, you build a force level for the threats that you perceive. There's no one size that fits all. You've got to make your forces aligned to your own requirements, your own national position, your own neighborhood, and everything else. You also need to have a balanced force. What are your threats? Who are your threats? What is it that they can throw at you? Technologies, sometimes the shelf life of technologies today is something like a year or two. You can't, in a large armed force, keep changing your inventory every 6 months or 1 year. You can't do that. So when you plan your force levels, you plan it based on a perceived threat, and you build platforms that are generally capable of addressing a wide spectrum of threats. You don't have a single purpose, a single use entity, because firstly, it costs a lot of money. Two, it takes a lot of time to build. In the intervening period, the threats may have changed. The technologies may have changed. So you've got to you've got to look at the long term and see, where the world might be. There is a method to doing this. For example, we have in the Navy something that we call the Maritime Capabilities Perspective Plan, which is a 15-year year-on-year roll-on plan. And we look at 15 years from now and try and recognize where the world might be, where India might be, who might be our friends, who might be our adversaries, what is it that they may have, what may be our challenges, and therefore what is it that we need to plan today so that 15 years from now we're able to feel what we think today that we might need then. We might be way off the mark, but there is a method to doing all this. And our view is that you can't have one capability or the other. You need to have a mix of capabilities that address all national security requirements. A large deck aircraft carrier has its relevance. For us, it's an article of faith. We are an aircraft carrier Navy, and we find huge utility, not just for the Navy, but also for the nation, of just having aircraft carriers. But drones also have the relevance. So we don't, a lot of people have this conversation, and in my view, oversimplify it. I think we've got to just see the nuance in it. You've got to fight the war the way it's presented to you, and sometimes an aircraft carrier has a place, and sometimes those drones have their place as well. So you need to find that balance and build your force based on that balance.
So if we were to project future, and I know we've run out of time, but permit me one question. We have about 1 crore Indians who live and work in West Asia. A lot of our energy requirements are met. We have civilizational ties with that region. Does our force projection also need to do a lot more to protect our interests in that region?
I think we need to do that, and I think we do that as well. You know, during normal peacetime, we go to all of these places. We try and we connect with a lot of navies, but in the process of connecting with navies, we connect with the diaspora in all parts of the world. We try from at our own small level to give them confidence. We know it for a fact that if there should be any contingency, even in recent history, if there's any contingency in any part of the world, the government of India has tasked us to be there, and we have been there. So, you know, we certainly want to reassure our diaspora anywhere, certainly in the Middle East, that, you know, their interests are uppermost in our minds, and where they want and where the Indian government permits, the Indian Navy shall be there.
It's a very dynamic situation, and I don't think anybody can predict when this war will end. And since it's still happening, are there any lessons for us from this conflict that's on in West Asia?
Well, the last ball in this match has not yet been bowled, but we've learned a lot from here. One, of course, we've learned is that sea lanes are very, very important for strategic stability. And some of the tasks, routine tasks that we do, you know, safety and stability at sea can never be taken for granted. You know, you cannot assume it. You always have to ensure it. And ensuring it takes the whole 9 yards. You've got to be there, do the hard work day after day after day. And I'd just like to assure you that the Indian Navy is doing exactly that, and we will continue to do the hard work to make sure that our oceans around us are safe and secure, and we do our very best to ensure our national interests always and every time.
Thank you very much, sir. Very heartening to hear that. And the claps also tell you that. Thank you very much for being a part of the Business Today MindRush and joining us here in India Today.
Thank you so much. It's such a privilege for me.
Thank you so much, sir, for those powerful takeaways. May I now request Mr. Alok Nair, CEO of Business Today, to please come up on stage to felicitate our special guest, Vice Admiral Swaminathan. Thank you so much, sir. Let us have a very warm round of applause, ladies and gentlemen, for this special conversation that we've just witnessed. Moving on to our next session, ladies and gentlemen, which is titled Energy Security Shock, the Unfinished Journey. With the Strait of Hormuz shock already sending in global energy economy into a tailspin, energy has snapped back into the center of economic and strategic risk. This session will capture India's top dilemma. Heavy dependent on imports for both oil and gas, the country definitely faces a stark dual challenge, navigating immediate price reforms and, of course, a decisive push to boost domestic production. India's energy ambitions are definitely something that everybody wants to hear from Dr. Kirit Paket, also Chairman of Integrated Research and Action for Development and former Member Planning Commission, Dr. Samiran Chakrabarti, Managing Director, Chief Economist, India City Bank, and to moderate this session, we have Mr. Siddharth Zarabi, Group Editor of Business Today.
Thank you very much. Once again, a very warm welcome. We just saw a very, very fantastic map, and many of you might have looked at it and hopefully thought about it, how that map shows us what is really important. But on the panel today, we have time to discuss one very, very important topic. And Dr. Parekh, you dedicated your entire life to this, so I have to ask you this. Why are we not self-sufficient in energy? Is it because we are not blessed with the same amount of hydrocarbons that West Asia or the United States or Russia, Venezuela or Iran has? Or is it because we have not done enough to bring it out of the ground and fulfill our needs for Atmanirbharta?
No, I think this is a very important question, and I'm delighted to be here and see whatever I can throw some light on these things. My understanding is that many large exploratory countries, companies in the world assess Indian potential to be very, very poor. On the other hand, people believe that, West Asia has oil, Iran has oil, Indonesia has oil. We should certainly have more oil than what we have discovered. Now, I think so far our policies have not been conducive to attract explorers here. And one of the important policy was that we were using price control. And now we have now given freedom for selling and pricing their products to explorers. They are not fully trusting us, simply because we have had in the past couple of incidents when we have made retroactive policy changes. So they don't know what India will do. It takes years to build trust, but within minutes you can lose it.
Not just oil, sir. We thought we had lots of gas. KG-D6 was something that even a child in primary school knew about. It's disappeared virtually from public memory. What really happened, sir?
No, I think that's really a very tough question to answer, because Reliance had projected that they are going to produce a huge amount of gas in few years, and suddenly they said it is not possible. Somewhere something went wrong. Either they mishandled the reserves, or that the earlier estimate of the reserves were wrong. But I think certainly exploring is one thing we should do, but that's somewhat of a medium-term or a long-term solution for India to be energy independent.
Shamiran, before I come to you, I have one more quick follow-up. Sir, you spoke about policy and the sort of possibly various instances where foreign investors in particularly didn't find it conducive to invest in the Indian market. Was the retrospective tax amendments and the changes in energy policy one of the reasons that large foreign explorers have stayed away from India?
I certainly think so, because I think they don't want to come in a situation when the government by policy changes suddenly constrain them from doing what they can do. They cannot earn adequate returns on their investment and risk. They would be reluctant to come there. There are small firms which are willing to try that, and there are some of them, for example, this has happened in the past, but I do believe that the new policy that we have been pursuing for some years now should really attract people. But I think exploration is a short-term, is not a short-term solution. In the current crisis, we need to really worry about how quickly we can cut down consumption of diesel and petrol or oil products in general. And of course, our biggest energy resource is solar energy. And we have to really use this. We are pushing it very hard, but at the same time, it's not in step it's not a harmonious development in some sense.
Right.
We have put so much of solar that now solar generation is not bought by the discoms, and that's really discouraging others from going into solar.
We will in fact take up that subject in a subsequent panel. Samiran, you're the macroeconomist on the panel. I want to ask you, this ongoing crisis, 4 weeks now, and we don't know how long, and this is a point made by so many experts. Even if the war were to completely stop tomorrow, the oil and gas disruption is now going to stay for many months. I think there is complete agreement on that. What are the macroeconomic consequences of this disruption in your estimation?
Thanks, Siddharth, for having me, and it's an honor to be sharing the dais with Dr. Parekh. First, any economist trying to do this exercise will have to make 3 assumptions. One is about the duration of the conflict, the second is about the severity of the conflict, and third is about how the new normal is going to look after the conflict is over. And you can make n number of permutation and combinations with these assumptions, and that's how you could arrive at many scenarios. So let me talk about the simplest of the scenarios, that oil stays above 100 for 3 months and then subsides after that.
You are talking about Brent or the Indian basket? Because the Indian basket is already 20, 25, 30% higher.
To be fair, the Indian basket has lost its relevance today because our import share is not exactly in the same proportion as what the Indian basket share is. So I'm talking more about Brent here, not about the exact India's crude import price. So first we have to understand that there are two things which are positive for India. One is that we don't use gas for electricity production. For us, that ratio is only 3%, and most Asian countries are above 30% on gas as the source of electricity. And we know that gas has been impacted more than oil in terms of longer term damage to infrastructure. And second is that we are exporters of petrol and diesel, not importers. A lot of Asian countries actually import petrol diesel. Like Philippines import almost 25% of their petrol diesel from China, and China has stopped exporting petrol diesel. So effectively, two extremely important parts of the economy, power and mobility, has not been impacted in India and unlikely to be impacted even if the shock is there. And that's where our sense is that the GDP impact will probably be lesser compared to other countries, maybe about 20-30 basis point impact to the FY27 GDP.
Right.
But this time around, the inflation impact could be higher because we are having not just oil price shock, but a price shock across a variety of petchem products, which we have not seen in the past. And how they feed into our CPI numbers is very difficult to estimate. So our ballpark estimate is that about 50 to 75 basis point upside risk to inflation. But I will end by saying that the biggest risk we have is on the balance of payment.
On the balance of payments. Dr. Parekh, you wanted to come in on this.
Yeah, you know, when the oil price internationally goes up from $60 a barrel to $120 a barrel, and Indian basket is even higher, India's import cost of oil in a year goes up by something like $80 billion. So I think we have to recognize that it's a huge stress on the economy. Currently the duty cut that the government has made, it's also going to cut down its budget, its revenues, and that is also going to lead to higher inflation because it may be forced to have printing more notes and so on. But I think, and we have already seen that the impact of this on the rupee, it has gone down and so on. So I think
we will come to that. Dr. Parekh, one more quick point. You referred to this, but for the benefit of our audience who might want to understand, in your sense, sir, is this a temporary disruption, even if it lasts 6 months or thereabouts, or has the energy landscape, particularly for India, been completely and permanently altered?
I believe that this is a temporary thing, that it should not last more than 3, 4, 5 months, but the destruction of energy resources, production has been done in the 80s, may have a longer impact for a year or so. But what India should do is to quickly reduce oil and gas consumption, and particularly diesel oil and petrol. We are already pushing a lot of.
How do you propose to do that, sir? Because we have seen a rationing in gas, but there is no rationing in petrol and diesel, and the government has taken a hit on its fiscal to protect the oil companies and their liquidity. How do you propose to do this?
For example, diesel. One can shift a lot of trucking, the goods truck movement to railways. Railways now already have a trucks on train system. We should expand this. Railways should bring that rail on schedule. Scheduled train should be run. So a person knows that the goods will be delivered 24 or 36 hours later there.
Dr. Parekh,
and at the same time, I think What this requires is that the cross-subsidy we are getting from freight charges in railways to passenger has to be reduced dramatically, and railway fares have to be rationalized.
Okay, so we are now walking on political ground, Dr. Parekh, but pump prices of petrol and diesel, you've spoken about consumption curbs, but pricing has been frozen for 3 years and more when it comes to petrol and diesel. Is this a sustainable situation?
No, personally I believe that this is a freezing prices is not the best thing we could have done. We should have raised the price a little bit so that people will use petrol and diesel more economically and frugally. So I think that should have been done.
Samiran, weigh in on this. You spoke about inflation and growth impact. Now let's assume at some point there is a pass-through. We are seeing some pass-through on premium petrol, premium diesel. What will its macroeconomic consequences be? And in the long term, is that the right thing that the economy actually needs?
So very mechanically, right now our CPI basket has about 5% weight of petrol and diesel. So if you do a 10% increase in petrol diesel price, that's about 50 basis point impact on headline inflation straight away. And then there could be second round effect on bus fare, auto fare, etc., and you could have a more generalized inflationary impact coming out of that. But you know, this is always a very difficult challenge, that how much of the cost to the economy. Ultimately, whatever we are importing at a higher price, there's a cost to it. That cost has to be apportioned between the household, the government, and to some extent to the monetary policy side. How you do this apportionment, I don't think there is a perfect answer to this. There is always an economic angle to it and a political angle to it, and also the context matters. Like for example, right now we are starting off in this conflict with a very low inflation. So our ability to absorb the inflation shock is relatively better. When we were during the Ukraine war, our inflation was already touching 6%. So our ability to do that was that much limited. So I think given all this, we see the potential of some price increases happening on petrol, diesel also, if this conflict lasts. But at the same time, this is not the first reaction of the government. They will try to absorb as much as possible on the fiscal and then probably pass it on.
That's a good point, but also our fiscal buffers are not unlimited, and we've gone through the 2022 Ukraine war impact, where on certain commodities we actually saw higher prices, Samir, and you will remember that. Dr. Parekh, I'm coming back to you, and on the point of what, if you were in government, you spent such a long time being there, today, what would you tell the government to somehow incentivize production, exploration, particularly through foreign investors? Is it a mix of, like a PLI scheme, for example, or is it some other assurances so that we can explore every single possible well that Mother Nature may have bestowed the Indian subcontinent and our sea shelf with?
I have not spent so many years in the government. I was only for 5 years member of the Planning Commission. Otherwise, I have been a professor or a researcher all the time. But let me come to your question. I think as I said, we need to really talk to them, find out what is it that they think is missing. And we should also have Indian explorers also go into it, and we should really encourage exploration, and that would require government saying that we are willing to take some of the risk of exploration from you, provided you are successful, after you are successful.
Okay, government should take the risk, but I'm also reminded of what happened when a retrospective tax amendment hit a productive well in Rajasthan and how that destroyed investor confidence.
That is really the major problem that we have to face. But we have put X on our own foot. That is really
we hit ourselves with
self-inflicted wound.
Self-inflicted wounds, and these are very important points. Yeah. Samiran, I also want to ask you about the impact that is playing out in India and what we have done vis-a-vis many other countries in Asia. You're seeing a lot of negative news of curbs, of other kinds of dependencies being exposed. So tell us, how is India positioned relative to the rest of Asia when it comes to the impact?
So Siddharth, as I was mentioning that there are two differences for us. One is we don't use gas for electricity production, and second is we are a net exporter of petrol, diesel, not importer. So that's why the reaction in some of the other countries are different from ours. And the third point there is what we were discussing a while back, is how much of this energy price increase you actually pass on to the consumer. Certain countries do it in a very mechanical way. There we are already seeing that inflation rates have started moving up. The moment inflation will start moving up, monetary policy will have to think about tightening. Whereas in our case, the first effect is coming on the fiscal. We are absorbing the shock to the extent possible on the fiscal, which is why monetary policy can stay in the wait and watch mode. So
how long will monetary policy stay in wait and watch?
So let me say that within city universe, the countries that we track, 1/3 of our economists have already increased their rate hike projections for their own countries.
Okay.
So that can give you a sense of 2/3 versus 1/3. 2/3 is still on the pre-war path.
But Samiran, is a rate hike inevitable even if the timing is debatable?
It will depend upon how long the conflict lasts. If we are lucky that the conflict is only for 3 months, and because we are starting from a very low level of inflation, I don't see a need for rate hikes right now. We are taking the inflation shock through the fiscal channel. We don't have to activate the monetary policy channel. And let's not forget, and we are not discussing enough about it, is that this is a very different shock where the growth impact will come not from just prices, but also from the quantity. The lack of supply of different things would also be a very major growth headwind, and central bank can't completely ignore that.
Absolutely. There are at least 36 sectors which are being called second round, third round impacts of this shortage. You already have concerns around semiconductor production in the world, for example, due to a shortage of helium gas. Now, who knew that this would happen and happen out in such short time? Dr. Parekh, I want to come back to the point of gas security. For years now, we have, for multiple reasons, also, for example, for pollution in our cities, we have moved our mobility increasingly towards compressed natural gas. For domestic cooking, we've done piped natural gas. We did a Give It Up campaign where we moved cylinders to those who didn't have, so that their health outcomes would be much, much better. But in all of this, did we lose sight of this fact that someday some black swan event could take place and our import dependence on gas would be caught out in such a glaring manner?
Yeah, I mean, to me, gas is not such a major issue at the moment in India, simply because we are not producing electricity with gas. Though we are importing 50% of our gas consumption is based on imported LNG. I think that there are substitutes available, electricity maybe, in many, many uses of gas, and that one can really find short-term solutions for taking care of the gas shortage. And obviously, this is creating, for example, everybody is going for induction cookers. And that's the right thing to do, because in the long term, if you are going for net zero, you will have to have very little gas consumption. So I think electric cooking is something that will spread rapidly. Another point I would like to make out is that while we may be net exporters of diesel and petrol, we should realize that 85% of our consumption of petroleum products is based on imported fuel, imported crude oil. And that is really the big problem here, that we are importing so much, the prices have gone up, that means our costs are going up. And I think that has to be passed on somehow, and that is going to cause inflation in any case, unless these prices come down dramatically.
Samir and Dr. Parekh here is talking about a pass-through. It makes good economics. I don't know if it at all makes good politics at this point of time, particularly since we have several state elections that are lined up. We will see if things change after that. You wanted to?
But you know, I think in crisis is where good politics is often becomes rational politics. So let us hope that this will happen.
आपदा में अवसर ढूंढना चाहिए. That's a good point. I will come back to you on this point of gobar gas, and I mean this in seriousness. So please, nobody here get me wrong on that, because methane is also a credible alternative. But Shamiran, let's come back to the second-round impact on the economy. The rupee. When early on in this conflict, people said 100 to the dollar for oil, eyebrows were raised. Then 150, then 200. But when it comes to the rupee, people are already saying in whispers, 100. Now, I don't know if you can project a level, but what should we expect for our exchange rate?
Well, we are in a dichotomous situation where we entered the conflict with this terminology for India on Goldilocks. Our growth inflation balance was very good, high growth, low inflation. But we had a very peculiar problem to start with, which is that for the first time after 1991, we had 2 consecutive years of balance of payment deficit. FY25 and FY26 both were balance of payment deficit years. We were hoping that FY27 would turn out to be balance of payment positive, because that's our norm. But with this oil price shock, that looks unlikely. So we're going to have 3 consecutive years of BOP deficit. And the challenge is that the central bank cannot determine the currency and peg it at a particular level if you keep on having balance of payment deficit. If the dollar demand is more than dollar supply, how long can you keep on doing it? So what the central bank is trying to do is get a little bit steam out. But to my mind, the more important thing is that we have to take some steps to get the balance of payment back into positive. And this time around, the source of the problem is on the capital account, not on the current account. So how do we get our capital account sorted? I think that's the bigger policy challenge.
Talk about a couple of steps if you can. What would those steps be?
So one part is just getting the gross FDI numbers up. So one simple thing is that we have about $10 billion of FDI announcement in the financial sector, which is waiting for certain kinds of approvals. If we can fast track that, we'll get $10 billion in within a month's time. The second could be that...
Very, very important point that Dr. Chakravarti makes, and this is all about speed of doing business and not just ease of doing business. $10 billion waiting for approvals, and he is saying it in a very sort of muted way, but clearly the message is understood. Continue.
The second is that we have already seen that Indian bonds were included in the JPM bond indices, and we got about $30-odd billion of inflow on that. And in this crisis, we have seen that bond inflows are more sticky than equity. There have been hardly any bond outflow. There are 2 other bond indices, the Bloomberg Barclays and the FTSE bond indices, where discussions are like, whatever, 90% done. If we can just get it across the line, we'll get about $20 to $30 billion inflow within the course of this year. And then we have to start thinking about what we did with FCNRB in 2013. Can we do a scheme of that kind? And in the very short term, try to take some steps where you can force exporters to sell their dollars. Today, an exporter does not want to sell because if he holds on to the dollar, tomorrow he is definitely going to have a better price to sell. So how do you change that psychology through policy intervention? I think that's also important.
Clearly a step of measures which I'm sure will be currently under discussion in the right policy circles, and hopefully we'll hear of that. Dr. Parekh, I come back to you, and 2 points. We've already touched upon it, but for the benefit of our audience, we started a strategic crude oil storage reserve program. I remember reporting on that from 2005 onwards when the first moves were made and we got some strategic crude oil reserves done. One reserve in Odisha has been pending for 7 years for want of land. Are these issues of policy and implementation, the rigidity and local issues, the real difficulty why foreign investors don't think it worth their while to invest in India? They say, the rest of the world is far more easier.
Yeah, I think so. I think it is, for example, this is one example of not being able to build the reserves in time. But if you look at the railways, the dedicated freight trade corridors, these are also delayed for want of land acquisition. So I think we need a dramatic change in these laws so that people cannot really hold you for such a long time.
Sir, I want to ask you, when this crisis started, people started digging up data. Country A has reserves of 300 days, small island has reserves of 400 days. We have somehow come out with reserves of 20, 25, 30 days, depending.
60 days is what.
60 days. What is the ideal level? Basis this crisis, the lesson, what would you advocate as a policy expert in this space of the ideal level of crude oil strategic reserve in India?
We had suggested in various policy reports that I was involved in, a 90 days reserve would be this, because large reserves also cost money, and that we have to be prudent and balance the thing. The 90 days reserve simply on the ground that wars cannot last more than that, and disruption would not last more than 3 months, and that after that we can really start saving, stretching it out a little more by rationing, by raising prices, by taking some measures. And so.
Also time to seriously consider massive gas reserves, sir, gas storage reserves on the coast?
No, I think, we never considered gas reserves in some sense, simply because we had not much gas in the past, and that what we were using, our imports have started only recently, and currently, as I said, we are importing 50% of our consumption is based on imported LNG. So I don't think gas reserves were really considered seriously at any time, if I remember it right.
Perhaps it is time to do that. As we wind down the discussion, Samiran, you made this very interesting observation. Are we therefore, should we sort of very dejectedly assume that the Goldilocks moment for the Indian economy is over for now at least, before things come back to normal?
I think, no, go ahead. I don't think so. I think it will come back. But I am an eternal optimist.
Sorry. I guess the central bankers are back to what the central banking dilemma has always been. Between growth and inflation, there is a trade-off. So that trade-off discussion we'll hear for the next few months more than anything else. But it's still a wait-and-watch period more than anything else. I don't think we have to be trigger-happy and start doing anything immediately on the rate side. But I think there is urgency to do something on the balance of payment side.
Urgency to do something on the balance of payment side. The last month of the current fiscal gets over in just 2-3 days from now. It's been a rough ride. The government has taken a massive hit to ensure that oil marketing companies have liquidity to buy oil, and by all accounts, they are going and buying oil at any rate and wherever it is coming from. Even the Russians have stopped offering discounts. And on the issue of strategic crude oil reserves, the knowledge that and the belief in the stock markets that buy the dip is also relevant to crude oil. We should have bought the dip and created more crude oil reserves when oil prices were at $55, $60. Now they are double, and perhaps we don't know where they are headed. But I think we will get those things right. But from our panel of experts, both of them here have made it clear that a lot needs to be done, and hopefully, Dr. Parekh and Dr. Chakravarti, your points will find resonance in the right circles. Thank you very much for your time with us today.
Thank you very much for inviting us.
A very warm round of applause, ladies and gentlemen, for those compelling insights. May I please welcome on stage Siddharth Chatterjee, publisher Business Today, to please come up on stage and present a token of appreciation to both our guests. Let us have a photo op, please. Thank you so much, Dr. Parekh, and thank you so much, Dr. Chakraborty. Huge round of applause, ladies and gentlemen. And our next session, ladies and gentlemen, is now titled Fuels of Growth. The world has to deal with an unprecedented energy security solution and situation amidst the ongoing Middle East conflict. India imports 85% of its crude oil needs, and the Strait of Hormuz is where we almost get our 50% of those supplies. The session delves into how the conflict brings focus back into India becoming self-reliant to meet its energy needs by diversifying the energy sources, lock in much larger underground storage for oil and gas, while we still have some time and fiscal space to do as well. Please put your hands together to welcome our next set of panelists. Ladies and gentlemen, G. Krishna Kumar, former CMD PPCL. We also have on stage now Ashish Kumar, MD of Bio India, Atul Muley, President of Bioenergy Praj Industries, Arnab Basu, Chief Industries Officer, PwC India. I will be moderating this session, and I'd like to call on stage my co-moderator, Karishma Asoodani, special correspondent for Business Today Television, to also join me to drive this conversation forward. Good evening, ladies and gentlemen, once again. The session is titled Fuels of Growth. But at a time when the world is itself grappling with the deepening energy crisis, the big question is, how secure is our growth really? Can India truly isolate itself from the global shocks that we are facing at this point in time? And are we using this opportunity, this moment well enough to become Atmanirbhar Bharat in terms of energy security? That's what we will try to understand from all the stalwarts who are present on the panel with us. Mr. Krishna Kumar, I'll start off with you. To try and help us understand, are we facing the biggest oil crisis since the 1973 oil crisis in India? Would you say that? At this point in time, how do you gauge how deep, how long, and how pervasive the impact of the West Asia conflict on energy crisis could remain on India?
Good evening. Without a doubt, this is the biggest crisis the world has faced ever since the 1973 oil crisis. It's never happened before, and I don't think it should happen ever again. It's unprecedented. Okay. The very fact that the airstrikes by Israel and Iran hit, Israel and US hit, it spread, it's already escalated into a wider regional conflict. In retaliation, Iran has hit the US assets in the Gulf as well as Gulf infrastructure, but the main hit has been on shipping lines. If you look at it, the shipping premium for insurance has gone up even before the closure has actually happened. So the cost in effect has multiplied. India, if you look at it, imports about 60% of crude through the Hormuz. The almost similar numbers in LPG, and it's going to have some effect in it. But we must say that we have mitigated so far very well, but we need to do much more. We can do much more so that such things don't repeat.
Very well said. Quite some time now. And I'd like to actually bring in both Atul and Ashish on this, and you both on ground play a very important role. Let me begin by asking you, Atul. All the preparations that the government and companies like yours have been doing on biofuels and green energy, is this the D-Day to prove that?
So well said. So it should not have been the D-Day because what we have seen in the last 1 month, it should not have been like that. But then, all in all, if you see, the green energy has come onto this dais as a central stage, and we have been talking about the energy security all the way, and green energy about a month back only was discussed about the carbon intensity reduction and climate action. That was one of the solutions to go to the net zero. But today the discussions are happening, can we have a green energy as an energy security? That itself shows that it's a really D-Day for that. And when I talk about it, the green energy, India has a particular thing that we have seen a great success of ethanol blending program of EBP 20. And when EBP 20 was launched about 6 years back, the vision was probably to go to EBP 20 by 2030. But the way all government authorities, agencies, stakeholders, ecosystems work together, including the OMCs and farmers for that matter, today we are ahead of this EBP 20 almost by 4 to 5 years. And that shows the confidence of government, the stakeholders, that yes, we as a country, we can really do. And to give some numbers, like last week when in Delhi they were talking about that we have saved by EBP 20 about 45 million barrels equivalent crude. Now that's the saving if it happens in 20%. If you really want to go to EBP 100, or maybe now people are talking about the flex fuel, it can be multiplied by 4 times. So that's the strength of a green energy. And I'm sure that it's India and each country is really talking about the energy security, and that's become one of the key words now.
Rightly said. And as we actually speak here, ministers back in New Delhi, Ministry of Petroleum is chairing an important meeting on how they could actually further increase green energy for flex vehicles and for other reasons as such to make it more sustainable. Ashish, let me bring you in from ground level. Have we underestimated the power of green energy, or has policy been ahead of what the reality is?
The answer is yes. We have underestimated significantly. And we, without sounding overly critical, we still are in a very evolving policy framework stage. Just to throw out a couple of numbers to get perspective. When we use the words like biofuels, bioenergy, anything which can be derived from organic, and we have organic all around us. Whether we talk about agricultural waste, we talk about municipal waste, we talk about animal waste. Yes, the waste is all spread over. It's it's not concentrated. But the volume of waste, what we are talking about in a country like India, is significant enough. And when I use the word significant, it can replace. Again, some numbers. LPG imports in India is about 15 to 20 million tons. Natural gas imports is about 70 to 80 million tons. Crude is about 200 to 210 million tons. The potential agricultural residue alone has about 50 to 60 million tons of natural gas production. And we are not even 1% of that. So it is clearly underestimated. We do not have enough policy framework, enough. It's there, but it's not still viable enough to get on a capacity creation on a war footing across the country. This is not just a concentrated topic. So for example, what we have done as a company, we have set up India's largest biomethanation unit in Punjab. Every year we talk about stubble burning. So this is the country's largest production unit for biomethane. But how many of such units do we have today? It's probably not even more than 20, wherein this number can be 2,000. That's the scale of potential we are talking about.
All right, Mr. Basu, I'll come to you. And I want to understand, if the war prolongs, have you already gauged in and penciled in crude prices inching towards $200 a barrel? If that happens, how do you see India's own vulnerability, especially because even at $110 a barrel for the world, India's own crude basket is at $157 a barrel. So what are we staring at? How do you see India's vulnerability?
So I think, as the other speakers have said, let's face it, we are vulnerable, right? There's no denying that. But if you look at what's happening, we can rattle out all the numbers in terms of how much percentage of the oil is flowing in, crude oil is flowing through Hormuz, how much of the LNG, how much of LPG and all of that. I think the biggest thing which I feel which is staring at India is our agriculture and its exposure to these oil shocks. I think that's something which we are still not talking about. If you look at the overall impact on fertilizers and chemicals, 60% of our ammonia, comes in from Saudi and Oman, and that has a very large impact, direct correlation on, agriculture. And generally, we would not connect the dots between agriculture and oil, but if you think of it, the input prices for the farmers will go up. We will see food inflation coming in. We can see selective or, food exports, food items exports getting impacted, especially if you look at items like basmati rice and many of the others. So that would have a very strong impact on the GDP forecasts, whatever we will have for FY27. Obviously, it's too early to speak about specific numbers now, but, being the agrarian economy that we are, I think that's something which we are not yet speaking of. We are talking about household LPG and all of that, but if the oil prices continue at the way they are, continuing to grow now, that's something which the government would have to look in very clearly.
What is the biggest risk that you see India is facing at this point in time?
See, the risks are manifold. It's not just about the energy security. You're looking at definitely inflation growing. You're looking at the currency, being under pressure. You're looking at our food basket being under pressure at some point. You are also looking at, the household LPG getting affected. Obviously, if you look at the industry, the ones which are a bit more energy intensive, they would have impact on their corporate earnings. I'm sure if, the crude continues the way it is growing, we will not be able to hold on the prices as we are holding on to it now. So it has to give at some point.
Mr. Krishna Kumar, we were also having a conversation back end, and you just mentioned of the fact that how this is one of the most volatile crisis or moment for India in terms of the oil disruption, energy crisis coming in. Even if Hormuz opens, currently it is selectively, but even when it comes from a full lens, does this priority passage in any way help us to overcome short-term challenge?
Even today, I think we are about 25 cargoes short every day. Even with all these priority cargoes coming in, the kind of requirement we have, the consumption, with the PMUI going up in numbers, we are the 5th largest consumer of LPG in the world. So the kind of cargoes you need, at least we are short by 25 to 30 cargoes. This is our belief. But we have to manage it in much different. Cooking is encouraged. Various other means of CBG and hydrogen is encouraged. So these are ways, alternative ways where we can manage. So managing LPG, it becomes very critical then. While there will be shortage at some point in time, we need to manage with alternate sources. Otherwise, it will have its own societal impact. When LPG hits cooking at homes, it will have an impact. The other effect which we may have in the long term is LPG is also a feedstock for petrochemical businesses. That exports will have on him. China will demand, all over the world there will be demand for LPG. So there will be a crunch in some time to come in the future.
Yeah. I never anticipated I'd actually say this, but how long will it take us to come back to the normal? Because this is a statement that's coming in right after pandemic, and nobody would want to celebrate a 5-year anniversary like this.
It's anybody's guess. I don't want to take a guess at that.
All right, Mr. Gule, I'll come to you, and I want to understand, as far as this crisis is concerned, is it already forcing India Inc. to rethink the supply chains, reimagine the way they're doing businesses? You already are talking about the alternatives that one should have probably bet big on, doubled down upon much earlier than one should have. What are their immediate reactions to this at this point in time?
So again, as we said that this energy security, energy crisis has really given us the new normal in energy. Okay. So new normal in energy, it's not only the bent crude.
That's the good normal.
It's not only the bent crude, but it is a green crude. Now, what is the green crude? So, when we were discussing internally, our founder, chairman, Dr. Pramod Chaudhary, always, he has a vision to have a biorefinery. Okay. And when we talk about the biorefinery, that each of those refinery of a crude refinery, we produce, like we produce petrol, gasoline, we produce diesel, we produce sustainable aviation fuel, we produce LPG. So, each of those products can be also produced from a biorefinery, and the feedstock can be an agro residue. And what Ashish was also mentioning, that this is availability of agro residue is there. Yes, it is definitely available, and it is probably on a paper, on a research, it is more than available. The aggregation, the supply chain management, and connecting to the last level docks, that's very important, and that's exactly where the government is thinking and working on that. It is made a success into the ethanol. And the time has come also it is to make success into the second generation ethanol or compressed biogas matter for that matter. So the new normal of an energy, considering the bent crude and green crude, is going to solve this problem.
Ashish, I'll just follow up on that front, and I want to understand, since much before, at this point in time, how long do you think will it take, now that we've realized that we should have bet big on the alternative fuels much earlier, how long will it take for us to cover up on the gap that still exists?
So see, of course, it's not something which is going to get corrected in short term. It's going to take a while, but we need to start yesterday. We need to get into this first capacity build-up phase, wherein, and it's not a very geographically centric topic. It's an all over India topic. Each state of the country has enough agriculture, enough source of organic waste or material available. We need to get into a mode of, state governments are mandated for capacity creation, that certain share of their overall energy mix, not just at a central level, but need to bring it down at a state level. Just imagine, we are talking about a country having, going back school days, when you used to get a essay on India or something like that, our starting statement used to be, Bharat ek krishi pradhan desh hai, right? Now, an agrarian economy not having enough bio as a source of energy doesn't make sense. This should have been done decades back. We are talking about a country with 450 million acres of land which is deployed for agriculture. And every year we are doing at least double or 3 rotations. So there's enough waste getting generated all over the country. And all the numbers which are floating around, nobody has been able to validate that. Somebody is talking about 500 million tons, somebody is talking about 700 million tons. The point here is there is enough to significantly reverse or substitute the imports what we are dependent on. The capacity build-up has to start. Where the government really needs to play a significant role is to create that infrastructure, to collect, to aggregate these fragmented sources of energy creation. Because the way we did this whole program of electrification a couple of years back, similarly we should be talking about gasification. How do I build a nationwide level gas grid which is not just doing the job of distribution, but it is doing a job of sourcing. We are not used to sourcing, we are just used to importing it. Hame apna potential abhi nahi pata hai, and there is significant.
Before I go to Mr. Basu, just a follow-up question. Because you emphasized the word enough. How much enough is enough to kind of survive a challenge or a disruption like this?
2018, there was an initiative. Atul did talk about, let's maybe come down to basics of petrol, diesel, CNG, right? Now, let's draw parallels to the biofuels. So we talk about the E20 program, which straight away has impacted the petrol consumption, right? So it's a big plus. We should be talking about taking it further ahead. Without getting into any kind of political discussions, there is a lot of potential which can, we have enough capacities in the country. We have created capacity of 2,000 crore liter. And of that, currently about 50 to 55% is only utilized. That is one. Second, when we talk about diesel, there is no blending happening on diesel today, right? We are probably not even 1% or 2%. So there has got to be a policy framework which needs to be done for the diesel as well. Now the big topic at the moment is the CBG part, the biogas. I think in the previous session it was there was a mention of gobar gas. It is not gobar gas any longer. We need to correct our nomenclature. It is biomethane, right? The moment you call it gobar gas, suddenly product ki positioning badi bichari si ho jati hai, right? This is biomethane. It is as lethal or as strong as LPG or CNG, right? Today, the plants which are producing CBG are serving LPG crisis also, right? So, and it doesn't need to be blended. It is an Atmanirbhar fuel. You know, it doesn't need any support from anybody. So how much is enough? I mean, we talked about numbers like 15 million tons is the target of the government of India, which was set in 2018 to be met until 2023. You know, it is already done. We are not there. So, capacity build up, infrastructure to be able to aggregate what has been created, and there's enough demand in the market. So these are the blocks. And of course, the big point is to give it the right price. To be, I mean, let's be clear, a fossil fuel cost structure is not going to be comparable to a biofuel cost structure. Biofuel is expensive. It's much more. It's going to be a factor of at least, it can go up to 1.5 or twice of the cost of a fossil fuel. So yes, somebody has to pay for that. And that is the reason why this capacity buildup has not taken that much speed what it would have ideally should have been.
Okay. Mr. Basu, I want to come to you, and this is yesterday when the announcement rolled, of course, was rolled out by Government of India, Ministry of Finance. I was in the policy corridors in Delhi, and I was only wondering and apprehensive of the fact that what will the fiscal path look like, with government definitely trying to cushion the OMCs, but on the other end of it is also how will it try to maintain its discipline of 4.4%?
So I think it is, see, we have to understand that you can't manage the fiscal part without managing the core problem. You know, the core problem has to be solved, and we have to get into some sort of demand management and price management for sure, right? And it would mean that you would selectively focus gas towards particular sectors. You would probably have targeted excise cuts. I would say flexible fuel taxation. You know, those kind of things have to come in. The subsidies have to be looked in very carefully. But I think it's also important that we need to also think of negotiating with our Gulf, you know, with the Gulf states in a different way, how we can look at, you know, getting, you know, fuel from the Red Sea side, what we are doing with Oman. I think it's also the time is there to, I would say, look at how do I look at the supply chain and what I'm doing with South America. I think we have to look beyond the Gulf. We were talking about the strategic petroleum reserve, okay? I think there has to be fast tracking of the projects. The project in Chandikhol, the additional, you know, I would say amounts in Padur. I think we have to work on those and fast track those projects, because if you don't do it, this is not something, as you know, nobody can say how long this will go on, right? And you can't manage it fiscally. This is not a fiscal issue. You have to first solve the underlying problem.
Also, Mr. Basu, if you could highlight, at this point in time, a lot of India Inc. representatives, the top CEOs, may be also rethinking whether one should be aggressive in this kind of a, you know, uncertain environment or a VUCA world at this point in time as well. So they may be holding back to build up capacities, what Ashish and Mr. Mule have been alluding to as well. So what are you guiding companies to do? How to, you know, probably move forward with a balance of caution and at the same time aggressive bets when it comes to expansion?
So I think, you know, if you look at the, you know, capital deployments are still happening. I wouldn't say capital deployments have stopped. Of course, we are asking our clients to become, do a bit of wait and watch. But if you think of it, we are already 29 days into the war, right? So when we were saying wait and watch, we were thinking, okay, something will happen in 15 days. At 29 days, you know, what's our level of comfort about 60 days or 90 days? Nobody knows, right? But I do think that there are certain capital, you know, deployments which have to be done by the government as well. So it's not just corporate India which has to do it. Government also has to come up and do its part. So it has to be a combination, and the ecosystem has to work rather than just saying that corporate India, go ahead and make your bets. You know, they are answerable to their shareholders as well.
A follow-up question, and of course this will also go to Mr. Krishna Kumar, on the fact that OMCs play a very important role. I mean, it's also a lopsided turn of the fact that they have to absorb the cost, but they also have to ensure that the final price is not passed on to the consumers. I want to ask this question because you told me that you're now free to speak about it. Will the final cost come to consumers anytime soon, or do you think we are resilient enough to absorb it?
I think at this moment in time, the OMCs are resilient to absorb the costs, okay. But beyond a point, they will not be able to do it.
You finally spoke.
No, I'm just saying, that's reality, okay. Because if you absorb the cost beyond a point, you won't be able to invest. You need to invest in infrastructure. The very fact that we don't have gas storage or enough SPRs is because somebody doesn't have the capital to invest in it. You can do good for some time, but after some time, demand destruction also will happen when the price goes up. So we'll have to figure out how to handle that for a long. We shouldn't be reactive. We should be able to manage the situation or crisis which comes in future. So to a point we can absorb. That's for the larger corporate good, but beyond a point, somewhere it will break.
Thank you so much. Warm round of applause, ladies and gentlemen, for those fantastic insights that all of our panelists have given us. And may I please request Masuma Parekh to please come up on stage to present a token of appreciation to all of our guests right here. Warm round of applause, ladies and gentlemen. Thank you so much, dear panelists. Our next session, ladies and gentlemen, as a global trade powerhouse, ports have emerged as critical engines of economic growth and strategic influence. With shifting supply chains, evolving trade routes, and increasing geopolitical complexity, the role of port infrastructure and maritime logistics has never been more pivotal. In this context, the session now will explore how India can enhance port-led development, improve efficiency and competitiveness, and also position itself as a global maritime hub amid changing global dynamics. For this session, please put your hands together to welcome Captain Bipin Kumar Dhiman, Nautical Surveyor and DDG Technologies, Government of India, and Ashwin Arvind, Deputy Executive Director, PSA Mumbai. And this session moderators are Krishna Gopalan, Executive Editor of Business Today, and Karishma Asoodani, Special Correspondent, Business Today Television. May we have the next set of the panelists on the stage, please.
Well, global trade is being redrawn at a real time, and just a while ago, two back-to-back interesting panels talking about how the current geopolitical situation has changed the supply chain equation across the globe. But the opportunity here is for ports. Opportunity and challenge both. Currently, ports can just not be looked as an infrastructure asset, but more of a strategic asset. Can India actually take this as its silver lining moment? I have two gentlemen who will decode this for us and answer this in the next 15 minutes that we have. And let me begin by asking this to Ashwin. Ashwin, you're dealing with this in real time at one of the India's busiest terminals. Tell me, has this been an opportunity or a challenge?
Thank you, Karishma. And, I'm very happy to be here and speak at a very prestigious forum and represent PSA. PSA is the largest terminal operator in the globe. We operate in about 54 locations. I am part of the team that runs the largest gateway terminal in India, in the largest gateway port in India, which is JNP at Nhava Sheva. So this crisis and this current disruption is both an opportunity and a challenge for us. A challenge because we're dealing with disruptions of lanes of communication at sea, cargo flow, and especially at a very important time in the Indian economy and especially for the state of Maharashtra, because this is the grape season. The largest amount of grapes and reefers go out from Maharashtra in these months from February to April, and that's been disrupted. Also because there's no cargo which is flowing from India to the Middle East. It came to a complete standstill. And those were the challenges that we were dealing with when this started. But I must tell you that we have adapted very quickly and converted that challenge into an opportunity, especially in a terminal like mine, where we had the capacity. We created additional capacity to handle transshipment cargo destined for the Middle East. So cargo which was directly flowing into the Persian Gulf, into Hamad or into Jebel Ali, into Dammam, is now getting transshipped at my terminal and then being picked up by feeder operators to be taken into ports that are not affected by this crisis on the east side of the Arabian Peninsula, which is Khor Fakkan, Salalah, Jeddah and other ports. So it's been both a challenge and an opportunity.
Ashwin, before I let Krishna take over, I'd like to know if you have seen increase in volumes, because I see that you have emphasized the fact that it has actually been a silver lining to you. And this morning when we started the event, there was a mention of the fact that how previously, even the 2008 financial crisis had a silver lining to it.
I don't want to use the word silver lining because no war should ever have a silver lining. But yes, it has created opportunity for us to increase volumes in our terminal, not just in mine, in all the terminals at Nhava Sheva, and also in ports like Mundra, Kandla, Hazira, and all the other Pipavav ports on the west coast of India. How long this will last is anybody's guess, but we are already seeing the industry adapting fast. And so you will find that along with these feeder operators who are picking up cargo from terminals and now moving it, you will also see other ways and means opening up where they need not transship. So we are ready for that also. So in an industry which moves up and down on a sinusoidal curve, we are very happy when we are on a crest, but we are always prepared for the trough.
Ashwin, it's almost, it's a bit of a case study in terms of you looking back, but if you have to identify some of the key learnings or takeaways through this experience, what would those be?
So I think, at PSA, since we operate in the entire globe, we are used to these tensions creating opportunities and challenges. We have a framework called the GALE, where G is geopolitics, A is AI, L is labor, and E is the environment. And here it's geopolitics for us. Some of the key learnings for my team, and I must appreciate that we have a 2,200 strong team that works at my terminal, and they've been outstanding. Some of the learnings for us has been how do we develop, when we open up new capacity, how do we ensure that we have the capability to handle that, and then have the competency to move from being a pure gateway EXIM terminal to a transship terminal. It requires us to adapt technology, it requires us to adapt the way we plan, the way we discharge, the way we load. So a lot of processes and procedures. So all this has been great learning for us.
Great. Let me bring in Captain Bipin here, and you evidently play a very important role in what is happening out in the world. And for the benefit of our audience, I want to put it this way, that we have the rule maker and we have the rule operator. So I will very gently try to be the rule breaker in this. Captain Bipin, just give us some idea of how quickly can India's maritime system respond from a regulatory and operational point of view when geopolitical situations like this occur?
Thank you. Good afternoon, good evening, ladies and gentlemen, and thank you very much. I will say thanks from our Director General, Shri Shyam Jagannathanji IS. He's the Director General. So I will say thanks to BT team, and I'm an odd man out over here from the government. But yeah, I will try to keep some balance. Okay. I am from the DG Shipping. Basically, it's going to be called as a Director General of Maritime Administration. We are the regulatory body. Of course, the times are very demanding right now. Our main role is the regulatory conformations, wherein we handle the ports, the shipping, and the complete waterways. The times are tough. We are working hard. But the question relevant to you, I will just talk on that. As I said, the times are different now. Our main focus, besides the regulatory compliance, is now changed, or you can say the more focus is on bringing back home our seafarers, those who are stuck in the Gulf. We never know the precise figure, but I will just give you somewhere around 21,000. Believe me, ma'am, we are working 24/7. We have a 24/7 cell. It's in the DGCOM center. Right now, also being manned, and few ships are coming. I cannot talk much more because which is not in the forum. But believe me, we are doing really tough. And to bring these people back home is not easy. I tell you, a family who lost one of his member there, each member of their calls are separately. Very tough to answer them, believe me. We had 3 fatalities, few injuries, and many more in help. So bringing them back home is our priority at this moment, and we are really working hard for that. And believe me, we together with Ministry of Home Affairs, Ministry of External Affairs, and all our embassies around in the Gulf region are working 24/7 on this. I think besides the regulatory body, this is what work we are doing right now.
Captain Bipin, thank you very much. And of course, we all respect the fact that how much the government is doing, and at the helm of it, you have been working towards. It's emotional, and also it takes a lot to do what you are doing. If you could give us some idea on the compliance and safety side of it, in such tough situations where, you have to, of course, look at families, you have to also ensure that the supplies are coming to India, where the country is looking up to you to ensure that normalcy is retained. How do you ensure the compliance and safety is also maintained?
Okay, let me put it this way. Since we are the regulatory compliance body, by time to time, from the day the war has started, or we had information that something going to happen, we have started giving a lot of circulars to the shipping companies and all the stakeholders not to move to these countries. But how our countries, the people need employment, people have gone there, now they're stuck there, so we are bringing them home. Time to time, the safety norms are implemented and told to all the shipping companies via many stakeholders. Besides that, when the ships, those who are stuck there with the LPG and LNG cargo, which our colleagues were just saying before this, there is a precise figure, but probably I would not like to point out on this forum. Believe me, at this particular time also, few of them, probably you will hear a news that some of them are coming. So there are a lot of, safety aspects which changed day to day. So these factors are incorporated in our circulars, And these are put across our media and all the stakeholders to comply with.
Captain, but it also means a substantial part of your role has been redefined. This is a new DG, if I may say so. What would you have to say to that?
You have very correctly said, DG in past few years have really played a very, very, very crucial role, I can tell you. Yeah, as I said, the times have changed now, and our main focus is to bring back our people home. That is the priority we are having right now.
Ashwin, I want to come back to you, and this is to talk about India's position globally. When it comes to ports and when it comes to handling logistics and having a stronger supply chain. How far are we from, say, countries like Singapore or Dubai, and how long will it take for us to be there?
Good question. I wish I had a straight answer to give you. But I work for a Singapore headquartered global terminal operator. And so a lot of our benchmarking is done with Singapore in terms of processes and the way we do stuff. India is a country, having served in the government in my previous avatar, I think is in the right direction in terms of building infrastructure and capability and capacity. To compare to Dubai and Singapore would not be very correct at this point, because both of them have been doing this container transshipment business and the maritime trade business much longer than India has. We are still new kids on the block and getting into the game, but we are big players. A large part of it is going to be driven by the fact that we will have a huge domestic demand that will be driving more cargo to flow to us. I think the port that my terminal sits in is looking to come up with Vadwan very soon, just about 200 kilometers north from here. That's going to be one of the largest ports in India for sure, and also in this region. So we are in the right direction, and I'm sure we will start to catch up. If you look at transshipment, what we are going to now trying to do in the Great Nicobar is also another way that we are trying to do this. I see Vilnius catching up in Kerala. So yes, we're in the right direction.
While Captain Bipin has already emphasized the fact that government is doing a lot, and it takes such difficult times, takes tougher measures in order to operate. But on ground, where do you see the challenge is? Is it on the speed, on policy, or on infrastructure? And while you answer that, I'm going to let Captain Bipin also respond to if that challenge is solvable in a short-term crisis like this.
So my own experience is that when we are hit with a crisis, and this is not just a crisis, it's a black swan event. Within the first week, 10 days, we gave storage waivers, we gave tariff discounts to cargo which was already stuck heading for the Middle East. It's very important because these were reefer and highly valuable cargoes. We have also, the port and terminal operators have worked to provide easy procedures for containers to come back to town and move into the domestic market since they were stuck in ports. The government has also moved very fast on the customs side of it to come up with new processes and procedures to be able to ease trade flow. So the government has moved and moved pretty fast. I do believe that the challenge is ahead. When this crisis resolves or when the Straits of Hormuz open, we have a large backlog of cargo sitting in India on the west coast waiting to move to the Middle East. And the challenge will be there as to how quickly we can do it, how do we avoid congestion in ports, and how do we as terminal operators step up to serve our customers, the shipping line.
Yes, ma'am has, so I'll just give a bit heads up on this. It is related to this LPG and LNG cargo. The ship, when it has to transit the high-risk area, it has a premium insurance. You will not believe, I want to put it here, that when the ship has to transit, all these people who are into business, they take away this insurance. And that is the time, you'll not believe, it is so quick, the government decision is so quick that we set up a meeting suddenly and it is just from the top. The new insurance companies in India are finally helping it out. And that's the step of government. As Arvind has just mentioned it. So government is very quick in these days, and believe me, we are doing the best we can do.
Truly self-reliance in a way that everybody is chipping in to help and solve a challenge like this. Thank you very much, gentlemen, for joining us on this panel.
Ladies and gentlemen, a warm round of applause. May I please invite on stage Shri Alok Nair now to present a token of appreciation to both our panelists right here. Let's pose for a photo op, please. Thank you very much. Huge round of applause, ladies and gentlemen. Next up, we bring to you another insightful session on capital markets at the crossroads. As India's economy scales new highs and domestic investors reshape the financial landscape, the country's capital markets are standing at a defining phase with record retail participation, rising global interest in Indian equities, and rapid advances in financial technology as well. So on this special edition, let's now welcome our esteemed speaker, Shri Ashish Kumar Chauhan, MD and CEO of National Stock Exchange. And to drive this conversation, may I please invite on stage Shailendra Bhatnagar, Chief Analyst and Editor for Markets on Business Today, and Aabha Bakaya, Consulting Editor, Business Today.
Good afternoon, ladies and gentlemen. A very warm welcome once again. The man on the floor is a very well-known individual in his own right, handling one of India's largest, most necessary corporations, the National Stock Exchange of India. Ladies and gentlemen, a warm round of applause for Mr. Ashish Chauhan. Mr. Chauhan, over the last 20-odd years, has created a fabulous infrastructure where amongst the fastest exchanges in the world, if not the fastest, the National Stock Exchange is indeed a great achievement as far as India is concerned, not only on the digital space but also on the financial firmament. Mr. Chauhan, let's begin the conversation given the kind of pain that we are feeling in the markets at this point of time. What do you think are the 2 or 3 strengths that will help retail investors navigate this difficult time?
No, broadly, just to correct you, the NSE was created in 1992. So 34 years I've been working on this, not 20. It's just that you looked at me 20 years back, so you thought that's how it works.
I added the BSc experience as well.
That's what I'm saying. So, but life goes on. And India broadly is, I mean, you have seen the Indian ships being allowed, which tells you how far we have come from before. But overall, today, India is the fastest growing economy. We are also one of the largest savers in the world. So at $4.2 trillion economy, at 30%, we are like almost $1.2 trillion of savings. And large part of that savings are now coming into the financial economy. Earlier, they used to be in gold and silver and real estate, now banks, and is coming into productive investment. So that's the basically the framework where India does not have a capital account convertibility. And so if you go to, say, Korea or Japan, they end up investing all their savings into American companies. Indians save their savings into Indian companies on Indian markets, right? So it's a stark difference compared to the countries with capital account convertibility vis-a-vis not having that. And so India is in a unique position. We have now 12.7 crore investors being serviced through NSE. which is literally more than 30% of all households in India. And 99.85% of all PIN codes, almost, I think 28 PIN codes don't have NSE investor today. If you go to Ladakh, we have investors. If you go to Andaman, Nicobar, I think the guys moving with the spears also have a demat account and are having mobile app of our brokers. And similarly from Dwarka to Arunachal Pradesh, we have investors who are investing into India's future, right, in the productive capital. Also the technology. India is also the youngest nation. It's the demographics which makes a lot of difference. The China grew from 1982 to almost 2015 on the back of a population which was building up. Today, they are suddenly going down. And in 2024, they had less number of people than 23. In next 70 years, they will become half the size today. That is true with Korea. In next 40 years, they will become half the size of the population today. India is going to grow even further. And that's where I'm going to remain young for very long. And so demographics gives you a great advantage. Demographics with the technology adoption over last 35 years of liberalization. Also kind of together with the technology, which is information technology that came about, India adapted very well compared to rest of the world. Today, UPI or stock trading through mobile or many other things which we do with CoWIN and GST, everything which you do is basically automated. US doesn't have it. I call US sort of a 20th century technology in 21st century. And even China doesn't have what we have. And so for me, the technology adoption of our population also going to help us, because technology is the only wealth creator in the long run. The societies which adapt to new technologies are going to create more wealth vis-a-vis other societies. And those societies which adapt to technology doesn't have to invent them. Sometimes you have been made to believe that you have missed the AI bus, and so you will remain behind. No. If you adapt to this new framework, like what you did with the information technology, you did not invent computer chips. India did not invent Unix nor relational databases, but we became the best users. And that is going to be true now. Almost 3,000 GCCs have come up in India. Many more are coming up every year. Why? It's because this population is young, 24/7 by 365 days, I mean literally 366 days sometimes a year. There is no other population which is willing to work so hard, which is so honest, so diligent. And we have proved during COVID that we not only ran India well, but we ran the world well, because we are running the world's back office, and world continued as is even during their lockdowns, because we were working from homes. And that is where I think people are underestimating India's strength on many of these things. Our inflation remains low, our fiscal deficit is low. So overall, this is the right place, right time. The last part is the least leveraged economy in the world. We have a banking system which is half the size of the economy. Nowhere in the world you have this kind of framework where the banking system literally is like 3:1, 4:1 numbers. You are running at half the size or 60% of the economy size. You have a long way to actually give leverage in difficult times.
Mr. Chauhan, last time we spoke, it was on the eve of the war breaking out in West Asia. Today, when we're talking about a lot of those advantages, they are looking like they're going to be at risk, whether it's the fiscal deficit, whether it's inflationary concerns, the whole situation around the crude basket, and of course, in line with that also, retail investors, SIPs, and overall sentiment impact. So how are you viewing the situation 1 month in? I know you've seen several cycles in the market, but this time, is it looking different? Are you concerned, given that we've had the benefit of lower crude oil prices now for a few years? Are the markets ready for this kind of shock?
Broadly, on a crude situation, we currently, before the war broke out, we were importing almost $120 billion worth crude. Now, the new prices is probably $160, $170 billion. It's a $50 billion extra. Today, with almost $700 billion of reserves currently available with us, we are pretty much in a good shape And of course, we have other alternative ways of generating a fuel, which was discussed one session before. And so for me, the largest and the fastest growing economy, we remain the youngest economy, we remain the most saving economy. On $1 trillion a year, $1.2 trillion a year is very large. And so least leveraged banking system, least leveraged government, the fiscal, and so you have a room to grow in all of them. Suppose like what happened in COVID, this is not a COVID period, but COVID, there was a slippage on the fiscal deficit, right? But we had that room to do that. America today, when they went into COVID, they were less than, the debt to GDP ratio was less than India's. Today, it is like 1.5 times India's, and those kind of things. So we remain actually the most stable economy in the world in terms, and also ready to grow faster. So in a comparative basis, because ultimately it's not, you are not living in isolation. You will also go through some issues, some trouble, because the world is going through trouble, but comparatively you will have lesser troubles.
What's been the immediate impact though? And I understand how you've painted the broader picture and how things are looking intact and we have several advantages. In the immediate term though, are you seeing SIPs looking shaky? Are you seeing FPIs? Of course, they've clearly been sitting out, but are they nervous? Is that making the markets jittery? What is the more immediate impact that you've seen?
Broadly, since the war broke out, the FPIs have taken out almost $54 billion from the Asian markets, ex-China. So that's largely South Korea and Taiwan. They've taken out around 6 billion from India, which is not that large compared to South Korea and Taiwan, because they also performed very well before because of the need for the chips, memories, electronic memory chips and TSMC and other things. So that's where they had gone up substantially. Now the AI hype is also coming down to some extent, but also due to the world market going down. Why? Now you have to understand why the world markets are going down. Is because once the oil starts having a higher price, it's a horizontal thing. So it goes into every little commodity, every little things you consume will have a slightly higher price later on, because the transport, manufacturing, everything requires energy. And that increases the inflation. Once inflation increases, the central banks, which we are trying to reduce, especially in US, trying to reduce the interest rates, have no longer the room to bring it down. So their 10-year bonds came up from 3.9% yield to now 4.4, 4.6%, which is a very large jump. And that has ensured that the gold rally, which was like for $5,400 an ounce, has now become 4,000 or in that range. All the cryptos have come down. Why? Is because when the dollar strengthens, people who borrow the money in dollars and start putting in these assets, they start actually taking it back, which is called carry trade. And so they start taking it back. All the assets in the world goes down, and the ones which had gone higher ups because they had given larger returns, people try to average by selling them more, and that's how you see Korea going down more or Taiwan going down more. And those kind of stuff is why the inflation is going to go up. Already US inflation print last week was very bad. That's why their market has tanked over last few days. But India has not seen that inflation orientation yet. Why? Is because, again, India produces most of the food stuff it wants, which is where the inflation affects maximum number of people. In fact, last week, one of the foreign economists who had come to visit me was asking me that, will this increase your food prices, which will impact other things? And I said, no, because what happens is we also subsidize a lot of food ration, 80 crore people getting minimum ration. And so effectively the impact of inflation which comes into US or other countries which are what we call laissez-faire markets, ours is not, on especially food stuff. And that is the basic of inflation, or core inflation we call it. There we don't see too much of an issue, even if it prints higher, because most people are not going to get affected. And so that's where India is the nuances of India count quite a lot when they don't come into the picture, because all economists tend to think all economies work the same way. They don't, right? The small little nooks and corners make a lot of difference.
Mr. Chauhan, you have often talked about the youthfulness of India being one of the best strengths that the country has to offer to foreign investors. Even your own NSC has this data on the Gen Z being the biggest drivers of growth, not only for the exchange, but for the mutual fund market. They are undergoing a tremendous strain given the correction in the markets. What would your advice be to them, given that they are experiencing this for the first time, the downturn?
Some people, see what happened is, around when Mr. Modi took over in 2014, India had 1.67 crore investors. Today, they're 12.7, so almost 7.5, 8 times. But when we went into the COVID, we had like 2.5 crore investors. And so from 1.67 to 2.5, almost 1 crore investors, which were young, who had come into the market due to the mobile phones, 4G, 3G giving sort of easy access to the stock markets. They had come, they saw the COVID sort of dip almost 40% of the market. And so they've gone through that. Some people who have come later on have not gone through that kind of numbers. But broadly, my understanding is that most people invest for long term, and they have not invested 100% of their assets into this. Broadly, 5, 10%, 2% is what overall sort of their assets are into stock market. So they don't panic. Again, if you look at it the other way around, when Mr. Modi took over, the total market cap of India was like 67 lakh crore. Today, it is 450 lakh crore or thereabout, probably 430 now. So again, 6-7 times, right? So the wealth through the stock market has increased manifold. And we have seen the SIP average now is around 29,500 crore for the fiscal as a whole, right? And which is like very, very large. And overall, the retail investor holding, along with the mutual fund holding, which is retail investors holding, is around 18.5%. The foreigners have come down to now 15-16%, right? So overall, Indian retail is owning more of the Indian corporates than the retail. See, again, when it goes up, they will be benefiting, and that's how I see, right? So again, it's not that we versus them. Those people have more choices to explore, and none of them come here for charity, right? So they would want to take their money away. But why they didn't take out money this time too much is because we were not performing highly over the last 1 or 2 years. So they had to go to Taiwan and Korea to take out money and things like that. So it's not that once they see that our price earnings have become, now today we are in the 20s price earnings on Nifty and all. We were on 24 in that range, right? So we have already come down substantially. For me, price earnings, when they go very high, either the earnings have to reach the prices or prices have to reach the earnings, right? So now we are coming into a reasonable zone. Once things clarify, sort of even in February, they were positive. FPAs were positive in February. Only in March, they become negative because of the new situation, right?
Just a moment. Let me just take this conversation forward on the youth part. Mr. Chauhan, NSC changed the landscape of investing somewhere in the mid-1990s when, online screens came in and faceless transactions happened. Something similar is also happening via the NSC in Gift City. You are now providing opportunities via NSC IX to let Indian retailer investors buy overseas money under the RBI threshold. How has that experience been? What is the kind of growth that you are seeing there?
It's early days. We have just started actually registering the investors. So it's early days. Around 9,000 investors have joined the platform. So I don't think it's going to be that big going forward. But more importantly, one Cyprus company has got listed 2 weeks back on the Gift City in India, NSE International Exchange. One Indian company is getting listed, Indian origin company from abroad is getting listed. A Sri Lankan bank has raised bonds from Gift City. Overall, Indian companies have raised almost $70 billion of bonds on using our platform, NSE International Exchange. And so, for me, when Gift City was started, my hope was that in 10 years' time, if it raises $1 trillion for India's sort of growth, it will be a good achievement. We have reached $70 billion. we have a long way to go. And the Singapore exchange, which used to trade Nifty, all their orders now last 2.5, 3 years, they come in. And we are now trading almost $5-6 billion a day. It's one of the largest derivatives exchanges in the world, although NSE is very, very large. But even NSE International Exchange also has become very, very large compared to the world markets. Like you don't have a similar size exchange in Dubai or other places, right? So for me, it's again very early days for the overall ecosystem there. But the omens are good that people are now taking it as a serious sort of a jurisdiction. And now with what is happening in the Gulf, people want to come to GIFT City to set up those shops and invest out of GIFT City into the rest of the world. So the third party countries will come through GIFT City to invest in fourth party countries. You are just servicing them like what Singapore does and make some income out of that, right?
Mr. Chauhan, I know that work is on for the IPO, but we have to always ask you any further details you can share at this point because everyone's keen to know what's in store. And with market conditions right now, is it being delayed? Is it on track? Anything you can share with us?
It's on track. We have appointed 20 bankers and 7 lawyers. And you can imagine with all of them put together, most of my time goes there, but it's on.
So I have this very interesting incident to relate. We were just sitting in the coffee shop some time ago. One gentleman approached me from the audience saying कि एक सवाल तो आपको पता ही है कौन सा पूछना है. So there are many shareholders of the National Stock Exchange in the audience. 2026 calendar, should we see a listing on the BSE?
Last time you said 4-5 months.
Yeah. So both of you have answered each other.
People want to hear from your mouth.
Broadly, we are on track. So whatever time it takes, see, for me, I have to be directionally correct, right? So I can't be giving deadlines for things which are not in my control, right? That's why, but it's looking feasible today. Whatever sort of you want to say, the 26, it's feasible.
Okay, that's one piece of good news that is coming in the markets, much needed. Thank you, Mr. Chauhan.
Thank you.
Ladies and gentlemen, a big round of applause there. May I please welcome on stage Shri Alok Nair, CEO of Business Today, to please come up on stage and felicitate Mr. Ashish Kumar Chauhan. Thank you so much, Mr. Chauhan, for those fantastic insights. Huge round of applause, ladies and gentlemen. Thank you so much, sir. Our next session, ladies and gentlemen, is navigating the dire straits. When the conflict in West Asia is disrupting key maritime routes, the risks for India are definitely acute, given our dependence on these corridors for energy, fertilizers and other critical imports as well. And against this backdrop, the conversation now will navigate and examine how the war is affecting India's trade flows, inflation outlook, energy security, and what lessons does it truly hold, from building more resilient supply chains to diversifying sourcing to even strengthening domestic reserves at large as well. To talk more about this, let's put our hands together for the next set of panelists. Ms. Vibha Padalkar, MD and CEO, HDFC Life Insurance. Mr. Sanjeev Mehta, Executive Chairman, L. Catterton. Amish Mehta, MD and CEO, CRISIL. Shanti Ekambaram, former Deputy MD, Kotak Mahindra Bank. Sanjeev Krishnan, Chairperson, PwC in India. And I would like to call on stage, Aabha is already here, to co-moderate this session with me. Good evening once again, ladies and gentlemen. This session is titled Navigating the Dire Straits, and at a time when global conflicts are redrawing the trade routes and also testing supply chains, the conversation truly has to be around, is India truly prepared? What are the risks that we are facing? And more importantly, are there any opportunities that India Inc. is already looking at, at this critical juncture as well? So we have the best set of panelists that we could have probably expected for this session from various industries, and to try and understand where do we go from here. Vibha, I'm going to be starting off this conversation with you, and I want to understand from your own lens, how are you seeing this entire West Asia conflict? Is it just another geopolitical flare-up? Or do you really see a structural change in which we are going to be seeing an even more fragile world order? And what is going to be the response from India Inc. towards this then?
So thanks for having me here on this panel. No, it's not like anything we've seen before. Very, very confusing signals. So it's even more difficult in my view to plan for anyway a VUCA world, but this is beyond VUCA world. So where does that leave us, to your second part of the question? Compared to a lot of other nations that are very, very energy dependent, I think we are fortunately in a relatively better placed position, largely domestic consumption. The government has already taken very swift interventions on excise and so on. So hopefully the end is near and things ease off a little bit. If they don't, then I think India will also start feeling the pain sooner rather than later, unfortunately. Sanjeev, I mean, this is could potentially be our worst nightmare, right? In terms of supply shocks, price shocks. At the moment, everyone's in wait and watch mode, but how bad could the situation possibly be?
Every crisis, I think the generation which is facing the crisis, they say it is unprecedented and perhaps the worst. The first thing we have to understand is the era of great moderation is over. We have seen, and I used to run the Unilever business in North Africa, Middle East, when the Arab Spring happened. It was significantly worse than this. Significantly. Yeah. Look at India today. Just before the onset of this war, we were talking about the Goldilocks moment, the famous words of the RBI governor. We were saying that the inflation is contained and the economy is moving at a good rhythm. But still, when you look at it, inflation was hovering at less than 3%. We had an armament of over $700 billion in forex. We were growing well. Yeah, you can't rubbish 6.5% growth, a nominal growth of 9-10% for the size of the Indian economy. Just after the global financial crisis, when the Fed said taper, the rupee crashed. Today there has been some intervention, but if the volatility increases, I'm sure RBI has the arsenal to kind of control the volatility. So the first most important thing as a nation we have to do, or as leaders we have to do, is not panic. Panic doesn't help. That doesn't mean we should be living in a cuckoo land. I call the world brutal optimism. Brutal optimism is it's a paradox. Blood, sweat, toil and fear, but ultimately we shall prevail. That's what the country should be looking at. It is going to be tough, and more so if the war continues for, say, beyond the next couple of weeks. That's when the pressure will be really high. But I don't think this is going to have an indelible impact on India's macro story or the long-term story of India.
Amish, do you also believe that India's own Goldilocks scenario is under threat because of these external headwinds that we are facing at this point in time?
So I think Sanjeev has nicely articulated the macro scenario
I think if you look at India and over the last many years, I think Ashish spoke about it a little earlier, the growth story of India has been doing well on a consistent basis. We have been able to manage COVID crisis. We had the geopolitical crisis which happened in 2022. We had the tariff uncertainty and you have the current geopolitical crisis. I think if you look at the global volatile index, it is at its peak at this point of time. But if you look at India, given the domestic consumption story, the growth story, the infrastructure investment, the policy measures, I think, if you look at what India has been doing proactively to manage each of these crises over the last many years has helped navigate and bring us to a position where we have a very good current account deficit right now. The buffers that we have, as we call them, I think they are in a good place. The fiscal position is reasonably good. I think the debt to GDP, and Ashish spoke about it a little earlier, I think India relative to other parts of the world, I think is in a good place. I think that gives us the, I would say, confidence to demonstrate that we are resilient. It is a challenge. I don't want to take away that thought that it is not a challenge. But I think the environment that we are operating in, if you look at the way the government is proactively managing the fuel prices to trying to cushion the impact for the retail out there, the way they are managing the stocks and the buffers and the ability to negotiate and talk to various countries beyond to diversify supply chain. I think India is in one of the better positions if you look at some of the other countries in the region and outside. And I think all of us hope that this ends fast, because the longer it prolongs, I think that's where the challenge is likely to be.
Shanti, let me bring you into the discussion. Lots of interesting points raised, so I'd love to get your perspective on whether you feel we're adequately hedging right now, talking about the government's moves. Was it more reactive? Are we actually preparing alternative solutions? And even in terms of the scale of the shock to the economy, is this going to be something that will have a structural long-term impact in your view?
So let me just say additional points. Sanjeev talked about resilience of macros, right? Which is growth, inflation, currency stable, the kind of reserves we have, etc. We went into this conflict with stable macros. We also had stable micros, strong corporate balance sheets, strong bank balance sheets, very low leverage in the system. And since COVID, looking at the growth we had, even the SMEs had all built resilience in terms of capital. Growth capital has significantly funded corporate India, mid, small and large. So while this will increase costs, it will cascade. You know, oil at $110 and India basket at $146 billion will make it expensive for input and raw material. So it will cascade. But you know, when you had inflation at 2.5, you can take it up to 4.7. It will be resilient, right? Yes, growth will take a little bit. So as again 7.2, perhaps we will grow at 6.2 or 6.5. But that still will be the best in the year. I see another silver lining. You know, I believe in every adversity, there is something that you can do. And I think the extent of reliance for LPG and oil on West Asia has come to fore even to the common man. And I'm very positive that something will come out of this in terms of reducing and diffusing the risk. It can be alternate fuels, it can be energy transition, it can be different forms of sourcing. We've already been talking about Atmanirbhar on manufacturing for the last 2 years. We moved on semiconductor, we moved on exports. But I think there is an opportunity for us to really look at how you can reduce and diversify your risks as far as concentration on oil goes. And I think I'm positive about that. If this continues for the next up to, I think, 30 to 60 days, we're still okay. We'll have a 6-month impact. We will bounce back because we are resilient. But if this continues for 6 months, there will be an impact. But I'm confident that we have a strong leadership at the country level, at the corporate level, at the governor, the RBI level. I think they all work together and we will come out of this, but we need to watch closely.
Sanjeev, let me come to you, and I want to understand from you at this point in time, how are you gauging what India Inc. is doing? Do you think with these unprecedented risks that we are facing one after the other, it's been some time now that we've been facing different forms of risks, Have we become smarter as India Inc. dealing with the risks? Are we still taking bold bets or have we become risk averse?
Well, I think first of all, I think we're getting used to it, let me just say that, because earlier we used to say that maybe some of these events happen once in 10 years. Now these are happening once in 10 months. I mean, from COVID to a bit of a financial meltdown and now this, and of course AI and technology and so on and so forth. So I think India Inc. is more or less getting used to it, and I think it's in a positive way, because we are also embracing it. It's not as if that we are fearing it. As I mentioned earlier, whatever I might say today might turn out to be equally untrue 1 year later when we are speaking on this forum, because as many of my co-panelists have said, one doesn't know as to how long that will last. I do believe that if it lasts longer, to what Shanti was just saying, I think things might become worse before they become a bit better, because we'll get used to, what's happening. I think two elements which I see. I certainly see India Inc. being a lot more resilient. Obviously, there are challenges, particularly on the supply chain side. There are significant challenges on anything which is petroleum or petroleum derivative. I think there are certainly costs going up, including fertilizers, in chemicals, anything. I think there are certainly supply chain challenges that many of those businesses are facing. Many of them will possibly not even reflect in the March results. They'll possibly come through in the June results, but they are being resilient about it. I think that's the one good thing. And just as we have been, today nobody is talking about AI, for instance, right, which was the biggest discussion point maybe just 3 weeks back or 4 weeks back. I think just as we were showing resilience on that, I do feel that will come through. There are two things which are very, very important. One is, and when we define the word resilience, the need to continue to invest. And I think that's something which comes through, because capital and technology, embracing technology and making sure that you are putting capital out are going to be two key elements. As many have said, Indian balance sheets are strong. They have the ability to navigate this. The critical thing is execution. Because yes, otherwise there'll be a lot of naysayers who say that the Indian budget was made at $65 a barrel, and how would a fiscal deficit go through the roof at $110? So there'll be a lot of naysayers, but I do believe that this is the moment when India Inc. has to get counted, show up, continue to invest, continue to innovate, and we'll come through this.
So on that note, and talking about India Inc., everyone, the regulators have already been grumbling about the lack of private capex, and the numbers were a little better this time around. And we are hearing reports of capex, but it's still dependent on consumption. And I know this is a slightly more longer-winded question and answer, but if we do see that oil shock coming in, if we do see this lasting a bit longer, there will be an impact on consumption, and we're going to see the story get worse from that point of view. How are corporates likely to react in that sense? How are they thinking at this point? If you could, any of you want to take this and maybe give us an insight into really what's already working in your minds as you prepare for the next couple of quarters. Sanjeev?
Sure. If we have to look at it from a lens of cooperation, I think the first most important thing is the mindset you bring to a crisis. And in Chinese language, the word crisis is made up of two characters. One is danger, the other is opportunity. Yeah? So whenever there is a crisis, there is an opportunity lurking in the corner. So you have to ask yourself that what do you need to do to harness that opportunity. The second important bit is whether it's a nation state or it's a corporation, your North Star. And the North Star is look after your people. And the second is ensure that your long-term purpose doesn't get destroyed. Yeah. So, and when you look at it from this lens, then the third important bit which comes in is Sanjeev has been, Amish has been talking about resilience. Linked to resilience is agility. What is agility at its core? At its core, agility is the speed with which you identify challenges and opportunities, the speed with which you decide to take an action, and the speed with which you act on it. When you have this kind of crisis, throw away your 5-year plans. Yeah, they don't matter to you. What you have to do is very clearly, whether allocation of resources, whether it is capital or whether it is human resources, you will have to be looking at it from a very different lens, very flexible lens. And when you put those things into view and keep your North Star intact, when I talk about look after your people, it's not just looking after your own people, remember, looking after your consumers. Don't take short-term actions. Yeah, don't worry if there would be a small hit on the profit and loss for a quarter or two. Don't end up destroying your core proposition. That's important.
Shanti, go ahead.
Yeah, I'd like to add two things. And I go back to take a lesson out of COVID. And I talk about the financial sector. We leapfrogged on digital when COVID happened. Because people couldn't come out of their homes, could not access banks, could not take cash, and everybody started using digital. I remember an 87-year-old surgeon who learned to pay his staff salary using phone sitting at home. So I think we leapfrogged on digital. I think every adversity, like Sanjeev says, I said that earlier, has an opportunity. I think when crisis hits, teams come together. You know, the unit starts becoming one. Leadership starts getting together. When they get together, ideas form. What will happen? Growth and margins take a hit. That's what happens in these times. I think we are resilient enough not to have violent deaths unless this goes over for 3 years, then in which case all bets are off the table. I'm counting on the fact that that's not going to happen, right? But growth and margins ultimately are impacted, and companies will learn how to become more efficient, how to manage, and how to survive. So I think the survival instinct kicks in, but I'm more passionate about something new, something different, because everybody is in crisis mode, comes together and think differently.
But Shanti, what will be the shape of the economy after this crisis? After COVID, it was a K-shaped recovery in the economy. What are we going to be seeing now?
When we went into COVID, it's very pertinent to note, our economy was actually going down. I don't know how many of you remember, but growth was 4.5%. I'm repeating, 4.5% was the GDP growth. We went into this crisis at 7.4% GDP growth, the highest in the world. Okay? So from that perspective, we have gone in with a very strong resilience on every macro. Even if it lasts 6 months to 1 year, yes, there will be an impact. Yes, there will be an impact on growth. Currency will take a hit. But I think our ability to bounce back will be probably stronger than what we did during COVID time.
I think everyone has a follow-on, but Vibha, let me bring you in.
Yeah, I would add to that to say never waste a good crisis. And it does bring out the innovation in India. And COVID really taught us that in more ways than one. And even during the trade crisis and the tariffs, you could see the weavers in South India figuring out alternative sources of supply chain. Yes, it will take some time, but the same analogy of finding different solutions. There might be some temporary pain, and exactly like Shanti said, growth might slow down, but slow in the context of rest of the world, not really in the true sense that there's going to be negative growth or very low single-digit growth. It will be a shade lower than where we have been tracking. But I do think that we will find alternative solutions to wherever we are hurting, especially on some of the key supply chain, energy and so on. But we will figure out alternate ways with government support as well. So I would see this not as a permanent setback. I would also see it as relatively better than how the world is faring. Yes, some short-term pain will be possible if this is prolonged, but I don't see this as a showstopper that we can't bounce back.
Amish, I want to come to you and I want to ask you, how is India being looked at from a global lens amidst all of this at this point?
I think, in fact, if you ask from a global perspective, you are looking at more bilateral versus a multilateral globalization that you were seeing some time back. And if you look at India's relationship with the region, whether it is the Middle East region and all the countries out there, you look at the other major economies in the world, developed economies, whether it's Europe, US, Russia. We just had something opening up with China coming into India. So I think India is being seen as possibly a growth, a global leader whom people are looking up to and saying, okay, how do we leverage the relationships that India is building with different stakeholders, right? Diverse stakeholders, and being able to manage that to help India as an economy as well as to help the global side. I think India is playing a larger role. It can be seen as a global leader and as a global partner. I think that's something which is changing over the last many years. I think the other thing is if you look at global investors and you look at how they are looking at India, I think the global macro being resilient, the corporates and the banking institutions in India being at a very good place over the last 10 years. I think Shanti spoke about it. The gearing ratio, the interest cover have actually, so interest cover has doubled over the last 10 years. The gearing ratio has become half, which means that corporate India has deleveraged over this period of time. The ability to invest, to absorb shocks, the ability to invest in the future, I think all of that looks pretty healthy at this point of time. And I think the new norm is going to be to handle chaos. I think, all of us are talking about resilience and agility. That is what we will have to learn to deal with, whether it's supply chain, whether it is demand, whether it is, impact on your core products, and how do you plan for that, including investors, because I think financing conditions in some parts of the world might get impacted if this prolongs for a period of time. I think India, much more stable compared to many other places, and I think global investors are looking at India relatively much better. That's what I would say.
So, Sanjeev, this is a very, very bullish panel. and if anything, it should reassure all of us as we walk away from here today. But, Sanjeev, last word from you in terms of if you're looking at the big opportunity going forward and you're coming at it from, of course, a bird's eye view, where is the next big thing going to be when it comes to the ecosystem, industry? Where are we going to see the biggest opportunity?
So, I think the challenges remain the same as they were even before this crisis happened. I mean, you look at our productivity in our industry, labor productivity, that's been going down. There are a lot of surveys which actually indicate that labor productivity has indeed been going down in India. We still do not like scale. There is still a preference for everything small, etc. And scale gets you the competitive advantage. If you have to be competitive, yes, of course, with all the supply chain shocks, what will happen is that our cost of supply will become even more adverse. So we will become less competitive in some ways, right? So that's going to be a key area for us to focus, that how do we remain competitive with all the uncertainty that is around us. I think we have made significant progress, I think as Shanti and others were saying, and we're going into it 7.4. But the question is, can we do it consistently? Can the average factory of tomorrow be better than the best factory of today? Is the challenge that is in front of us. So I think that the devil really lies in the detail and how we can execute. I think the plans are there. Yes, we can say that, the government's fiscal might suffer, privatization has to happen, FDI has to open up. I think those are all very well understood topics, but the challenge, I think, is in execution. And much of what we said prior to this crisis remains possibly even more relevant today.
Okay, I think Sanjeev last.
Yeah, one of the big opportunities staring at us is the energy autonomy. And it has really come home to roost now. One is, how do we diversify the supplier base? The second very important bit is, today, if you look at it, our non-fossil fuel based capacity has touched about 50%. We need to accelerate on that. How do we double down on nuclear energy? How do we go down the path of modular nuclear reactors that we have been sitting on the fence but not really taken a big leap? How do we accelerate EVs in the country and reduce our reliance? I think this is a fabulous opportunity, and I'm absolutely confident that this will not have a big impact, and if we can look at it as an opportunity, we will go a long way.
Well, thank you so much. I think this has been a panel with many compelling insights. Thank you so much. A warm round of applause, ladies and gentlemen. May I call upon stage Mr. Alok Nair, CEO of Business Today, to please come up and felicitate all our panelists. And if we could also request Mr. Ashish Kumar Chauhan, MD and CEO NSE, to please join us on stage, sir, to present a set of token of appreciation for all our panelists for this one, sir. Thank you very much. A warm round of applause, ladies and gentlemen. Thank you so much, dear panelists. Our next session is the corner office leading through disruption. As the global economy gets reshaped by geopolitical tensions, trade, realignments, supply chain disruptions, energy shocks, rapid technological change, and the CEO's role is being redefined in real time. For India Inc., these shifts definitely present both risk as well as opportunity as well. To talk more about this, for this session, let me call upon stage our next set of panelists. Mr. Madhav Krishna Singhania, Joint MD and CEO of JK Cement, to please come up on stage. Sharvil Patel, MD Zydus Life Sciences. Anurag Chaudhary, CMD Himadri Specialty Chemicals. Karan Bhagat, MD and CEO 361 WAM. Harsha, Director, Sri Naman Group. And I'd like to invite on stage my co-moderator, Shailendra Bhatnagar, Chief Analyst and Editor, Markets on Business Today, to please come up and drive this entire conversation with me.
Ladies and gentlemen, this is going to be a very, very interesting conversation. The tip of the spear, veritably, you have the who's who of corporate India trying to navigate this crisis that is upon us on the 29th day. So there is a cement player, there is a pharma company, there is a chemical company, as also there is hospitality, and of course, if all of us is there, how can wealth management be behind? So, ladies and gentlemen, let's start a very interesting discussion. I'll start with the commodity space, cement. Not many people know, ladies and gentlemen, that India's most inexpensive commodity is cement, 6.5 rupees a kilo, and extremely energy intensive, but facing a lot of crisis given what we are seeing around. Mr. Singhania, how do you see this, this event that is unfolding upon us? Is this something of an opportunity for you or companies in your sector to somehow overcome this challenge and come out stronger?
So firstly, thank you very much for acknowledging that cement is one of the cheapest commodities which is existent today. Actually, it's also concrete is the second most consumed on a per capita basis after water globally.
So we're the second largest producer globally.
So that's the second aspect. But coming to the implications, I feel we are energy intensive, and what we see with the impact on crude and gas, while we don't end up using crude or gas directly, is whenever there is an impact on any one sort of energy basket item, it does impact something else. So, so if you look at crude, we end up using petroleum coke, which is a byproduct of refining. And with crude going up, the prices of pet coke have gone up, and which is now forcing even Indian coal pricing to go up. So if you look at the sort of inflationary impacts on the sector, energy is probably 30 to 40% of our cost. And the second big cost item is bags. So if you see bags, actually about 90% of cement is still sold in bags, which is PP bags. And when there was this gas shortage, so a lot of the when refineries were pushed to produce more gas, then the PP production did drop. So that also put sort of inflationary pressures on packaging. So if we look at the overall impact, it's probably about 30 to 40 rupees a bag. Not that it has been, we've been able to pass it on as a sector, but that is today, the sort of consequences. And I feel, why just cement? Sometimes we don't realize, but there are these cascading impacts on almost every sector. And I'm sure, we'll hear that as we go ahead.
Dr. Patel, I'll come to you, and I want to understand, when it comes to leaders of essential sectors like healthcare and pharma, how are you gauging the impact?
when cement prices are passed on, that's okay, but when medicine prices are passed on, that's where it hurts the most. Plus, it's, this kind of a geopolitical crisis is not just a business crisis. It's also a kind of a crisis on the trust factor. So how do you continue to maintain the trust of your stakeholders, continue to take bold decisions, at the same time ensure that the, last of the pyramid is not impacted?
So, I think the first thing is, I think for us, which you alluded to in the end, which is trust, it's very important. So, we don't, in our sector, medicines are essential. We don't play with prices. We can't go up on price when the markets change, because everything is regulated. So we need to make sure availability is first maintained. This challenge has been very different. We went through this COVID challenge some time ago, and we saw the resilience across in India for people to make sure that medicines were provided. This is a very unique challenge because it is so upstream with the oil and gas that we would generally assume pharma would have less of a challenge. But actually, maybe two months down the line, it will probably see a very tremendously large issue. And if I just say, starting with solvents, starting with simple materials like acids, which are used to make a chemical compound, to the weirdest of problems that we all will face. We all have to label our drugs. There's no solvent available for print manufacturers to print labels. So I assume I solve everything in my supply chain, and I'll be stuck with either not a bottle or a print label, because they form such a small part of that supply chain that they probably don't get the priority of supply of such essential materials. So I think that's going to be a very big challenge. The second, I'm a little bit pessimist on this, but even if we solve this crisis and oil and gas start moving as it should, we don't have enough boats or containers to ship this much a requirement that has been sort of left behind. So I think this is going to be a long drawn affair. We all will have to make important choices to make sure that essential medicines are made available to India and the rest of the world. When we say we are the pharmacy of the world, it's not just by words, but in US, 60% of what is consumed is made in India, and so in many other markets. So this is going to become very important. I would lastly only say is that if companies are purpose driven and they know that what they're trying to do is make sure they serve patients, they'll find a way, and that has to be the only reason for us to do what we need to do. So we hope we'll come over it, but yeah, this is a big challenge today.
Mr. Chaudhary, I come to you. The specialty chemical space is not having a great time over the last 3 odd years or so. Supply chains were in a bit of an issue because of the Ukraine crisis. Now you have an equal amount of pain being generated because of this Middle East event. How is industry in general and Himadri in particular tackling this issue?
Thank you for having me here. So, first of all, today disruption has become the real normal situation. The way we are seeing, if there is no disruption, then we feel uncomfortable. Last 4 years, see whether it is geopolitical, before that COVID, then geopolitical continues one after another. In this year itself, there have been so many geopolitical events. So the company has to be really resilient, and now we have to take all our decisions looking at all these aspects together. For us at Himadri, the supply chain is not dependent on Middle East or West Asian country. So we have gone through a lot of ups and downs in the history, and that is how we have been able to make a sustainable business model. But definitely, yes, with this, a lot of challenges are there, which has to be.
Harsh, what are you really penciling in? What are the biggest challenges as per you that the industry is facing at this point in time? And do you think we are in the position of overcoming it, even if the war continues for some more time to come?
Yeah, so we're into both the real estate and hotel and hospitality industries.
Now, take hospitality. It's a very obvious one. You see a huge negative impact with the drop in tourist numbers. You see business conferences and large events getting cancelled because of all the disruption to flights in the Middle East. So you have seen that impact already. I'd say about 5% revenue impact in this last quarter. Most hotels, based on what I've heard. In real estate, you've not yet seen it hit yet, but we are seeing a lot of our supplies, as common theme as you've heard, a lot of our supplies have already started getting delayed. A lot of vendors already calling in force majeure as a event and saying that now our timelines are getting, delivery timelines are getting delayed. And as a result, we're going to have that trickle-down effect across the board. So you'll see the impact on real estate a little bit later. On hospitality, we're seeing it already. The good thing is, in Indian hospitality, we're still largely reliant on domestic demand. And so this whole concept of Atmanirbharta, it's supporting the industry. It's making sure that, you're not seeing too much of an impact yet. But over time, if this continues, you'll see that impact there as well.
Harsh, we were hoping for a great discount at the bar today evening because of this crisis, but it doesn't seem to be happening. Be that as it may.
No, in fact, you have to support us more at this time.
Okay. We'll talk about it post 9 p.m. Mr. Bhagat, I come to you last because you manage everybody's wealth and therefore have a lot of insights into how this thing will eventually pan out. We've seen a crisis, almost a near crisis on stock values. How are you holding hands of ultra HNIs? What are you telling your top 20, 50, 100 clients whose wealth you manage on how to put this behind us?
Thank you for having me here. I think let me start off by saying, and if I just look back at the last 25 years, and this is a great example I like to give, I think adversity is always the best opportunity. I think every time we started business, if you just go back 25 years, because we're in 2026, I think we had September 11th in 2001. I remember I was getting out of campus, I got laid off before I could start working somewhere. And in some ways, I think it does 2 or 3 things. Number one, it throws up many new opportunities. Number two, it makes us very modest and humble because we plan for our resources much better. We don't have that much of an ego like we always have. And thirdly, it keeps us very, very tight on our resources. So whether it's every cost we kind of do. So I think overall, as a business, it's a good time for a reset. There will be some challenges, but we'll all emerge out with some great business models over the next 12 to 24 months. Having said that, from a client perspective, I'll just put a great example. Let's assume we are, somebody in the room here is Nostradamus, and we just go back to the year 2001, or maybe 97. Let's go back 29 years, and or let's make Sherville Nostradamus. Okay, so in Sherville predicted in 1997 that all of these things are going to happen in the next 29 years. You had the Asian currency crisis in 97. You had the massive tech meltdown in the year 2000. You had the WTC attacks in 2001. I think you had the Parliament attack in 2004. You had the entire global financial crisis in 2008. You had the currency depreciation in 2013. You had COVID, amidst many things. And now you're having this, multiple wars and a huge oil shock. And yet, if you see the last 26 years, with a lot of volatility up and down, we are in a place where Indian markets have grown at maybe 12, 13% in nominal terms, 6, 7% in real terms. US has grown at 5, 6% in nominal terms. So overall, I think, this too will pass. And when we are sitting together in 2030, this will be another event in the last 30 years. Having said that, that doesn't mean we get excited and say that everything will pass and get into it in a big way tomorrow. So I think I'm not that worried. Clients understand it. And at the end of the day, stay nimble and stay diversified. So all our clients are diversified across multiple asset classes, which gives them the strength to carry through volatility.
Okay. Mr. Singhani, I'll come to you and I want to understand, you moved from a world of efficiency to probably a world of resilience. So what has fundamentally changed in your decision making as a CEO that probably the entrepreneurs can learn from?
You see, the biggest thing what we are seeing is, number one, you don't want to be dependent on any particular country for your supply side, for 100% of your supplies. So geopolitics has changed, just buying from the lowest cost supplier to ensuring that you diversify your raw material supply chains. The second is also on a market side. You don't want that all your product is going to a particular market. Let's say today the trade tariffs came in. So there were a lot of companies which actually found it very challenging to recover from it. So how do you make sure that, globally, again, you are diversified in terms of your market presence? And lastly, I'd just say, I still feel looking at the Indian economy today, we are in a, while there may be a few months of turbulence, but it's still maybe one of the best places to be, especially when you look around us. So would just like to, end with that.
Mr. Patel, to you, how is the pharma industry in general looking at this crisis? Is this an opportunity to maybe diversify your raw material sources? Nothing much comes out from the Middle East, but then a lot of supply chains are dependent on the energy flow for factories to function properly. What is the general view of the pharma space?
So as industry, we are definitely diversified. We have multiple facilities in multiple geographies. So one is on that part we have. The other part is, we are very careful on inventory and carrying inventory. So we, anywhere from 60 to 90 days of starting material to almost 120 days of finished drug inventory is something that we carry. So I think we generally can sustain 2 months, 3 months, and that's what we have learned over COVID and before that. One must, I know it's a little of cost of carrying inventory is there, but it's important because we are into life-saving medicines and we cannot say we're not going to be able to provide those medicines. So the second part is you have to plan better in terms of what you can hold and make sure you do that. And the other is indigenize some capabilities within the company and also in the country to make sure that you have a supply chain that exists. However, saying that, every country is also looking the same way as we are. Everybody wants to localize. Every country wants to make sure that they protect their critical capabilities. So in this world, while we also have to think about how you localize, but we also need to think that in every country we may need to localize also, at least where a company has a very important footprint to play. So I think that's going to become very, very important. And as I said, the disruptions are still to come. We believe in 3 months, 4 months, the disruptions are going to come because everybody's holding inventory, everybody's carrying all of this. But simple things are not going to be available, and that will make it very complicated going forward. So we all are anticipating the trouble and we're trying to solve for it now.
Karan, I want to ask you one question that everybody has probably thought about, if not asked aloud, and that's whether markets are being manipulated with some leaks on peace talks, the outcome that could come in. There have been reports about how some people in the US have bet on certain things and therefore the outcomes have been as per predicted, but that has sent ripples across the global markets.
It's clearly above my pay grade. I honestly don't have any better insights than any of you here. But I think these things get adjusted. It's impossible to stay above board at all points in time. And I think it's fair to say any kind of arbitrage outside normal regulatory screens as well as normal infrastructure related providers will eventually run away. So I think no real insight on it, but eventually it comes to an end.
Mr. Bhagat, you are the best equipped amongst us to look into your crystal ball and tell us whether Diwali of 2026 will be better than March of 2026.
I wish I knew. I would have been in the Caribbean having a drink, but I think it's fair to say that these things take some time. So I would definitely not say Diwali of 26 is going to be dramatically better. I think we have some time to go. But things are much more attractive than they were a year back. I think it's another 12 to 20, maybe 12 to 18 months you will still continue to see good growth. You'll see time for growth to come back. So I think next 12 to 18 months is the time to deploy capital rather than expect returns. 18 months onwards is really when you start seeing the rewards of the hard work you'll do in the next 18 months.
18 months before, the Nifty was exactly where it is today. So it's virtually given no returns. We're hoping that the next 18 months can reverse that for sure. Anurag, I want to come to you. What is the single...
18 months starting from there.
Okay. Anurag, give me an understanding of what's the single biggest risk out of all the impact that we are assessing of the geopolitical crisis that is keeping you up in the night right now?
See, I started Himadri 35 years back, founded a company, and since then have seen lots of risks and lot of dispersion happening. So, but I firmly believe all these gives you a lot of opportunity. Challenges always brings best time, and the best of decisions are taken during these times only. So I firmly believe that I believe in something that I should have a good sound sleep rather than worrying about this thing, and get up in the morning with a fresh mind to convert challenges into opportunities. That is why I believe in.
I think that's the most sensible and practical thing to hope for, that you get sound sleep and you wake up the next day refreshed, trying to take this on. Harsh, to your sector, it was in a huge expansion mode about 2.5 years ago. That expansion still continues. Any chances that those plans might get derailed or postponed because of this crisis?
Yes, in a way I do worry that, this both real estate and hospitality, we were, running at lightning fast speed. It was a bullet train that's been slightly derailed in its tracks. But we've seen remarkable resilience in both sectors across all the different shocks that Karan has mentioned. So I'm not too worried. I think you'll see an impact. You'll see a few months impact in terms of deliveries. You'll see delays. But as it's been commonly said, there's a lot of opportunities here as well. You think of Dubai as a place that's been built in the last few years, taken advantages of all the dislocations that have happened in different parts of the world. India is right now looking like a very bright and safe spot relative to a lot of our neighbors. I think this could be a real opportunity for us to take advantage of those situations. Whether it's the largest trade fairs, conventions, weddings that were all happening in those places, why can't they now come to India? So if we play this smart and play this right, I think we can more than compensate for the few months of turbulence that we're facing.
Mr. Bhagat, I again come back to you on a corollary that Harsh has raised. For far too long, this Dubai and Singapore syndrome is afflicting India, where the best brains go there and then look at the Indian markets. With this crisis, do you see GCCs moving from the Middle East to India? Do you see a lot of talent coming back to Indian shores? What does the investment climate over the medium term improve for us?
I think for sure there is going to be some benefits. I think people will, like maybe 3, 4, 5 years back, every family wanted to have one individual or one relative having a fort in Dubai or Singapore. It's fair to say everybody who's moved there will definitely now want 1 or 2 feet back in India. So I think that obviously has its own advantages, right from investment in real estate all the way to other related items.
Okay, thank you so much. A warm round of applause, ladies and gentlemen. Time's up. But let me request Mr. Siddharth Basu Chatterjee, publisher of Business Today, to please come up and present a token of appreciation to all our panelists right here. Big hand, ladies and gentlemen, for this fantastic panel with thought-provoking insights. We'll move on to our next session now, which is Powering India's Fertilizer Resilience. So how does one run a robust fertilizer business when the sector is highly regulated and offers low margins? It is a conundrum confronting every company, and the way to do it perhaps is through tight cost structure. We need several players in the industry to do that now, but we'll hear it from the industry expert. I'd like to call on stage Mr. Arun Alagappan. He's the Executive Chairman, Coromandel International, to be with us for the next session. To moderate this session, I'd like to call on stage Aabha Bakaya, Consulting Editor, Business Today, and joining her will be Shailendra Bhatnagar, Chief Analyst and Editor for Markets on Business Today.
Thank you, Arun, for joining us here today. We've heard so much about your phenomenal business growth, taking the company to an enormous scale of 30,000 crores and the kind of legacy business that you've continued to build on. It's a really tough industry. Tight cost structures, regulated, and yet you found a way to really drive this growth engine. What has been the secret? I know that one of the key things that you've done has been a backward integration model that has really worked for you. You took a chance on that. Tell us a little bit about that and how it worked out.
Thank you for having me today. And actually we've done a lot of work at Coromandel over the last few years, and you correctly said about the backward integration pit, because that is something which we said that is going to, because it's already there, the value is there and it needs to get captured. And we've gone back in the last few years up to getting a mine. So we've now got a mine in Senegal, and now we make most of our phosphoric acid, which is the key raw material. We make that in India, which is pretty much, I think, where we've actually changed track in the last few years, which, because see, market is always there, market has been there, so what do we do new? And the easiest one was to go after backward integration, which I think in Coromandel we did in the last few years. Like I said, phosphoric acid has been a key raw material which we've now made, and of course, because of that, we've also made sulfuric acid. So we are the largest importers of sulfuric acid as well into India, and now that is also now pretty much made there in our plants. So that's something that we've kind of done over the past few years.
Ladies and gentlemen, I'd like to point out a very interesting statistics about Coromandel International. Very, very few people would know that over the last 10 years, each year, the stock has appreciated 26%. This is a multi-bagger company which has created a lot of wealth for its patient shareholders, and the person behind all that fantastic growth is on the dais.
It's not only me, I think there's been people before me as well. Thank you. So I came in 6 years ago, but I guess the family was there longer, and then my cousin who was, recently passed away, he has actually created, he really started it off in 2002, and we've kind of taken it from there.
So let's now look at the crisis that we are in, sir. India is a fertilizer deficient country, and we just have the next sowing season upon us in less than 40 odd days. Frankly, how do you see this? Will sowing be delayed? Will we have a lower agricultural output? How do you see it?
See, I don't think the first quarter there's going to be an issue, and that is, I think we echo the same thing. I think government has also been saying the same thing, and there's no problem for the first quarter, because I think most of the companies are pretty much covered for the first quarter, and so are we. And the other thing is, urea was kind of imported in a big way in the last quarter of last calendar year. So India holds a lot of urea as well. So I don't think the next season should be a problem in my view, because going by what we have at the moment and what we see, the next crop shouldn't be a problem. That is, I don't see an issue there.
How are you placed in light of the current ongoing crisis, the concerns around it? Given your scale and size, are you still perhaps in a better position? What are some of the smaller companies saying? And are you all working together to find some kind of solutions? Are you working with the government? You, of course, have a critical stand here in terms of your size and the kind of influence you can have in what happens next.
No, basically, has to be collaborative effort right now. And the good thing is that we've got a ministry, like it's called the Department of Fertilizer. Literally, it's a ministry on its own. And literally, they are on the ball with the industry on a daily basis. And I think that's a good thing because this collaborative effort, we've had issues even the last 3-4 years, we've had issues and we've kind of come out of them. And it's really the collaborative effort of both government and industry. And it's the small players, the big players, everybody are called and kind of discussions are going on a daily basis literally with government on this front. So it's a collaborative effort, I feel.
What's the situation looking like on ground? Give us an insight into, what's happening in those closed door rooms.
No, so, basically I think government is as concerned and I think rightly so on the availability and they're ensuring what can be done to kind of get this, kind of availability to the farmer, which is one of the basic things, right? Because fertilizer availability will kind of take place before anything else because, that's primary thing is food security. So I think government's playing a good role and same way industry is playing a good role to ensure. And we are kind of, if you see how India is kind of covered in the last few days on the raw material front, it's been pretty good. So I believe that, like I said, the next crop is not going to be an issue and I hope the problems get sorted out and, we get along fine after that.
Sir, 3 months hence, you have enough raw materials for now and there is enough finished product as well. 3 months hence for the fertilizer sector, do you see either a price shock on the raw material side or do you see a supply shock? God forbid both.
See, pricing, I think, there is, if you've seen the kind of pricing and even the international market pricing of a lot of the products or fertilizer products, we've kept a kind of steady level over the last few years. And government has ensured that, we've got a steady kind of level in terms of pricing. I don't think they will go away from that and I don't think, you'll be able to kind of price high. So there will be moderate, if at all there will be some moderate price increase. I don't think there will be much of price increases. I don't think that will happen. But at the same time, on availability front, I think if this eases out, there should not be any problems.
What are some of the other factors or what else can the industry do to mitigate some of these risks? See, whether we like it or not, I think fertilizer imports most of its raw material. And that is a fact. So, if we need to, kind of look at that and say, look, if you're going to import so much of your raw material, there is a certain amount of risk to it. So, but if it keeps carrying on, then we'll have to see what to do. But I don't see that. See, right now, even things like, I'm just saying that, if you take product-wise, which are the products that, right, India is getting? Yeah, I'm saying even in NPK, you go back to the raw materials, or the phosphate acid, for example, I don't think India will see a problem because of things. Rock phosphate, we shouldn't see a problem because of African West Coast. But certain amount of things that come to the state of Hormuz, things like that, which is, a lot of urea which comes through it, we'll have to see what we do after the 3-4 months. What about nano fertilizers? How does it work? Do you feel that it helps? What's your view on this?
See, we've had there's been a lot of talk about nano fertilizers. We've had a very good run with nano fertilizers. In fact, I was recently at the institute in Hyderabad, where we've done a lot of trial plots with the industry, with the institution, that is the Hyderabad Agriculture Research Station, and we feel that the nano is a good product. It has to be applied correctly, and there's absolutely no problem with nano as a product. So, and the farmers, so the proof of the pudding is, right, you go to the farmers and ask them. So we've met a lot of farmers who've kind of used our products or our nano fertilizers, and they're now swearing by it. And the application is also easy. It's done through drone application. So that is also something which is kind of catching on very, very quickly in this industry.
since you've been a multi-bagger stock over the last decade and a half, how would you characterize this crisis for shareholders? For Coromandel International, do you see a dip in maybe sales or profit or profitability over the next 3 to 4 quarters because of this event?
See, we can't be oblivious to what is happening here, but and what is happening with the Middle East crisis, and there's going to be some amount of impact. But I think what a good company will have to mitigate it by taking some actions, and that's certain things. Like I said, at least we don't see too much of issues for the first quarter in terms of in terms of the raw material coverage. But then with the rupee going the way it is going and things like that, what effect it has, we'll have to see how it plays out. So that's something we'll have to see, because that we are hugely import dependent.
In terms of feedstock, how are you keeping your factories alive? Is there an issue with LNG? Is that something that worries you?
So the good thing is that none of our plants need LNG, right? So we are pretty much run through steam, and the good thing is even Kakinada, which is one of our main plants, and by next year will be the largest phosphatic plant in India, any single site fertilizer plant in India, will run without it, because we are generating steam through making sulfuric acid. Because we do that, and we just in fact have started the plant hardly a month ago. So it was literally nick in time, 2 days, and the plant's running.
That's amazing. So tell us a little bit more about that, because you are an integrated play when it comes to this particular space, and that gives you, of course, a unique positioning when it comes to the ecosystem. You could dive a little deeper into that.
See, Coromandel has taken a position that we serve the farmer. And if we serve the farmer, we got to serve the farmer all the products. So we've got our fertilizer, which is farm inputs. We've got crop protection in terms of our crop protection. We've also recently bought a company in crop protection. So we've solidified our base in crop protection. We brought a company called Nagarjuna Agrochem, which is NACL, and our own crop protection company. So today we are the third largest crop protection company in India as well. So we are, and then we've got our own retail. We've got bio products. We've got nano products. So clearly we want to address the farmer fully, and that has been where Coromandel play has been, is to address all facets of the farmer, because we are all dealing with the same farmer, right? And the farmer once he deals with Coromandel and goes into our retail stores, he walks into an entire product range that is available to him.
Mr. Halagappan, how do you characterize the Indian fertilizer industry's problems versus those faced by our neighbors in this current crisis? Are we better off? Are they worse off? How are you stacked up internationally?
I think we are better off. I don't think we're worse off. I think we are much better off in terms of, like I said, in terms of our availability to, what we have, in terms of raw materials that are here, in terms of finished products that is here. I think we are far better. We've seen the kind of tenders that have come out recently, where people, and they have a country risk also on those countries versus India. So I think, India is doing fairly well there. There's no problem.
How do you see the agricultural story playing out here on? Not just in the near term. I know the next thing everyone will talk about is the monsoon and so on. But given the kind of progress that we have seen, how you're describing it, even in terms of advancements, how do you see it playing out?
No, agriculture really, like I saw in the last few years, which I've seen the way, tech and digital are getting into agriculture is quite huge, and it's going right down to the farmer. And that is what is important, right? You actually see the farmer today, and good to see youngsters coming into agriculture, because it was always thought that they will not come back. And I'm really happy when I go to a lot of these farms and see youngsters come into agriculture and kind of, embrace digital, embrace AI, have IoTs, drones. It's actually completely, it's growing. I think it's doing very well. I think agriculture will do, when I came in, I came in from, Cholamandalam. And then I came into this business. And really, the way I see, I never thought that agriculture could be so interesting.
Absolutely. The kind of ferment that is happening because of the drone revolution in agriculture It's phenomenal. There's so many companies who address 70, 80,000 farmers sitting online somewhere, in a different city and making a revolutionary change into the ground that's happening. What's been Coromandel's experience over the last 5 years?
See, specifically with drones, I can talk about because we invested in a drone company as well. And the kind of response today we are seeing in the industry is huge. For example, in the last, for the first year, trying to tell a farmer to use drones, we did about 40,000 acres. That was about exactly 2 years or 2.5 years ago. This year we are talking about doing 1 million acres, that we will, I'm talking spraying through Coromandel's drone network. So Coromandel itself will spray, and believe me, the way the farmers are embracing drones, see, because you're not seeing, the efficacy is very good, yield is as good or equal to what they've been getting or better. And so today, and the way, and you can talk to, and the best part is, it's not young farmers versus old farmers. Everybody seems to, the minute you're able to provide the service, they don't mind paying for the service at all.
Going forward now, what is the biggest challenge you see and what is the biggest opportunity you see?
See, the challenge, like I keep saying, is, raw material availability is going to be, and we are hugely dependent on raw material. So the way, the current risks, and this can happen anytime, any place. So that's something which is the, biggest risk. But but opportunity, I think, in this industry is huge. I mean, I never expected, because, today people are talking, just 2 projects, right? The Polavaram project, which is coming in Andhra. And, so these kind of projects are literally changing the number of acres that are getting sowed in, having sowing happening in the country. And that really is, really improves output. And today, for example, Andhra government, for example, is, district-wise, they are, kind of planning different products. They are talking about products which, for example, if there's less water, what do we need to do? Then fruits and vegetables in Rayalaseema. So, government itself is getting into a lot of kind of nitty-gritty in terms of how we get into different kind of, products and in different kind of markets. And it's not just about growing paddy or things like that. And that is something which is really encouraging. So I see a lot of opportunity in this industry.
Mr. Halappan, I hesitate to ask, from what you've told us over the last 10 odd minutes, do you think that the market is overreacting, especially in the fertilizer space, given the comfort that you mentioned on inventories, both raw material and finished products? Is this a bogey in the market?
See, what I'd say is, more than saying it's a bogey or anything, I'm saying we are adequately covered. So, sometimes these artificial, stocking takes place with people, right? And people get worried and try to stock, and that happens in any industry. And that will happen. Because see, the thing, unlike any other industry, right? Whether it's fertilizers or crop protection, it's that few days. And if you don't have that product for those few days, you lose the crop. And so that is very important to the farmer. So his whole thing is security. I need to secure myself. So, these artificial things, but as far as I see, I don't see a problem in the first quarter or for the first sowing season.
And there is absolutely no issue with the capex that you had planned, the pipeline that is there in terms of capacity expansion, that is full and fit.
Absolutely. We just, in fact, a month ago, we had our sulfuric acid and phosphoric acid plant, which came, it came to, production. And like I said, thank the Lord it came, because the steam got generated from the sulfuric acid. So literally, today all power needs and all are taken care in the plant itself. So I think it's been pretty good. And we've got a new train that is coming up, like I said, which will make Kakinada the single largest site of fertilizer, of phosphatic fertilizer in India. And we are pretty much steam on that to get it on stream soon.
Wonderful. I think this has been one of the most uplifting of interviews that we've had since afternoon. Thank you so much for your time. Here's wishing you a wonderful, wonderful time ahead.
Thank you. Thank you. Thank you. Thanks so much.
A warm round of applause, ladies and gentlemen, and may I request now Siddharth Chatterjee and the publisher for Business Today, to please come upon stage to present the token of appreciation to our guest here. Let's pose for a photo op, please. Thank you very much. Ladies and gentlemen, we'll move forward to our next session now, which is titled A Leader's Journey. Having seen the banking era in a space where unionization was quite rampant, or managing the business at a time when there was no technology or connectivity, to then seeing off the global financial crisis and then demonetization, it has actually been quite a ride. To offer more insights on the subject and where does the space look forward from here, I would like to call upon stage our next guest. Please put your hands together for Ms. Arundhati Bhattacharya, the President and CEO at Salesforce South Asia. And to moderate this session, I'll invite on stage Aabha Bakaya, Consulting Editor, Business Today. Huge round of applause, ladies and gentlemen, for our special guest, Ms. Arundhati Bhattacharya.
I think it's a great opportunity on an evening like this to sit down here with Arundhati and get an insight, and we never ever get tired of hearing her story, because every time you speak with her, she has a fresh anecdote, a fresh twist, and also contextualizes it in terms of whatever is happening at the moment. Arundhati, it's again a very uncertain time. And at a time like this, everyone's wondering how businesses should be thinking, how leaders should be positioning themselves, worrying about their firms, worrying about a hedge strategy or a risk management strategy. I want to first just get your thoughts on how the world is reacting to what is happening in West Asia.
First of all, thank you very much for having me here today, and good evening to everybody who's present here. You know, in times like these, which are very, very uncertain, you can only fall back on your abilities to first of all envisage what could be the risk scenarios that you are looking at. Second, try and learn as much about the situation as you can, because the more data points you have, the greater is your ability to sort of navigate the uncertain times. And last but not least, try and understand that things can be really, really wrong, and if they are, what is it should be your response to it, okay? So do risk scenario plannings. Now, having said that, I can tell you risk scenario plannings are never, the best things to do, because if I remember right, and I have said this often enough, we used to do a very, very detailed risk scenario planning in the State Bank of India when I was chairman there. We had what was called an ICAP document, and the document was really thick, and we would go through it diligently every quarter. And if I remember right, at that point of time, we used to have about 62 risk scenarios about what could really impact a bank. And COVID was the 63rd, okay? So the fact of the matter is that all the times that we spent pre-COVID trying and determining the risks, none of them really prepared us for what happened. Now, this war may be similar, okay? But having said that, that doesn't stop us from trying and understanding and learning from the situation to try to see what best can be done and how things can be made a little more, predictable, because that's what we are trying to get, okay? And if there is one thing that is anti-business, it's uncertainty. More than anything else, what impacts a business is uncertainty. So yes, try and be as sure as you can be.
So the consensus in the earlier panel seemed to suggest a little bit of optimism, and they said that given India's growth trajectory at the moment and the fact that we're still not leveraged to the hilt, that there's enough scope to handle anything that may come our way. Having said that, I think this was a near-term outlook, let's say 1 to 3 months that possibly everyone was talking about. Would you agree?
See, I do believe that India has certain abilities to be resilient because we also have a very large internal consuming community. People that are very dependent and are very much part of the global supply chain, they have far more worries than we have. And to that extent, I think India does have some amount of leeway. Secondly, as you say, India is not as leveraged as many of the other countries. And that does give you some scope, some leeway to make certain adjustments, both fiscal and monetary. But having said that, as you also rightly said, these are all short-term. When I joined, for instance, when I joined Salesforce, I joined it on the 1st of April 2020. That's just 1 week after the hard lockdown for COVID happened. And at that point of time, in my mind, I thought that this is probably a 2-month, 3-month phenomena, okay? It became a 2-year phenomena. So yes, you know, there is that fear that this could be much longer than what we are capable of handling. But at the end of it all, you know, I still am very optimistic because India is resilient like very few other countries I've seen. Means whether it be handling something like demonetization, whether it be handling something like COVID, I have not seen the kind of agile and, you know, jugadu response, as you may call it. And here I use jugad in the right sense of the term rather than in the, you know, in the other sense. Because, for instance, during COVID, we are there in some 30-35 countries in Salesforce, right? But ours was the only country that came up with an insurance policy for home care of COVID patients. And this insurance policy not only had, you know, the insurance for providing you medications, but we had a nurse visiting the patient twice a day. We had a video conference with the doctor scheduled every single day. So it had a number of features that you wouldn't find in any normal insurance package. We were the only country that did it, okay? Because we knew that, you know, no matter what happens, India doesn't have the infrastructure to admit this many people into hospitals. Now that is true of most countries, and especially if you think of the second stage of COVID, the second wave of COVID, that's exactly what happened in most countries. But none of them were prepared like we were, or none of them could respond with the speed and agility with which we did. Okay? So that's why I feel that no matter what the challenges might be, we have the agility and the nimbleness to be able to come up with solutions that could specifically address the problem at hand. And therefore, you know, in spite of all the challenges ahead of us, I think we still will manage to get through it.
Fantastic. I want to ask you about consumption because we're still seeing it's perhaps not where everybody would like it to be. Everyone's betting on consumption, and at the same time, it's not at the pace that we'd like it to be. And if we do see pressures coming in terms of things becoming more expensive, then that story is likely to be further postponed, so to speak. What's your view on that?
So, you know, at the end of the day, the one thing that I have seen that happens in India, because 50% of our people are on the land, it very much, the demand sort of rolls up from the bottom, okay? And if the monsoon is good, and if the farmers are, you know, looked after, and there again we have some scope of ensuring that the farmers get the right kind of inputs, that they get the right kind of liquidity. If that happens, then in my mind, I feel that we should not be too worried on the consumption front, at least not as yet. Now, having said that, I do understand that there is a problem regarding fertilizers, that we still are not sure about the monsoon outcome. Those things, I think, will be more, you know, pertinent and more important to address, because that's where, you know, the rub will come from. if the rural areas, if the farming community is not able to prosper or not able to have, disposable income, then there is a knock-on effect even in your urban areas, and that's where then the consumption starts getting impacted.
Talking about the Indian demographic story as well, we've had a lot of commentary today talking about a lot of youth that are coming into different sectors, including agriculture, and how that's a positive sign. But there's still a lack of perhaps enough trained resources or enough willing resources in areas like manufacturing as well. So while there are positives, at the same time, perhaps there still isn't enough supply for the kind of ambitions that we have. From your vantage point, what are you observing about the next generation and the kind of talent pool that we have and where it's moving?
See, the good thing about India is that demographically we still have a very deep talent pool. There's no doubt about that. If I look at our company, for instance, and the way that we are going about looking for talent across the globe, it's not only a cost leverage, it's also a skill and talent leverage. Because again, the fact that our demography allows us a lot of young people also means that these people are quick learners. Even when they are challenged with something very, very new, they are able to pick it up very, very quickly. And that makes them a very attractive kind of place to be in, because you can manage to get the right kind of people. They may need training on the job. They may need to be made industry ready. And by the way, one other thing that I'm seeing amongst many of the academic institutions, because we work with them as well, is the fact that their relationship with industry now has become far bigger. In fact, in many of these management schools now, they are aiming to have 50-50 professor of practice and professors from academic backgrounds. Of course, they haven't yet reached that stage, but many of them have reached up to 30% of professors of practice. Now, what that does is actually give you talent that is ready for industry, and not something where the industry has to spend another 12 months getting them ready for the job. So to that extent, I think that while there is still a gap between what really is wanted and where our skilled talent is, but I think there is a lot of work going on in order to bridge that gap, and people are finding it not that difficult to source the right kind of employees, and to ensure, that if they put up units here, at least that one thing, that is a talent scarcity, is not really hitting them.
Arundhati, digitization has been core to your journey, whether it be at SBI, whether it be at Salesforce, of course. You've always powered this particular vertical. How do you see us placed when it comes to the leap into AI, when it comes to digitization overall? And I think we're at a critical juncture now when this will become significant to our growth journey. How do you see us placed?
One thing that I was very surprised, I shouldn't have been, but I was, when I went to the AI Impact Summit that happened very recently in the month of February in Delhi. We had a pretty large pavilion, and I had thought that there would be a lot of questions from the youngsters that were visiting, and there were multiple people, means there were a lot of people. The crowds were really quite unmanageable on the first day, in fact. I had thought that many of them would come with questions regarding the certainty of their future, the uncertainty regarding jobs, the narrative that AI is going to eat up jobs, that there would be a lot of questions on them. What I saw instead actually was a lot of energy and enthusiasm, a lot of curiosity, but actually speaking, a lot of positive, feeling for the AI initiatives. And that was something that was very different from the gatherings I've seen in the West, where there seems to be far more negative sentiment and far more fearful acceptance of the fact that AI was something that people needed to accept as something that's going to come. Okay. Now, in a way, when I also did a fireside chat in that summit with Nandan Nilekani. And I asked Nandan that you're also seeing the enthusiasm of the youngsters here, and you've been to these other conferences abroad, so have I, and we have seen the kind of fearful response that people have been giving. What do you really believe? Why is there such a big difference? And what Nandan said made a lot of sense. He said that, look, India has been one country where people from the top to the bottom have actually benefited from technology. And that's so true. For instance, if you look at just the financial sector, the Prime Minister Jan Dhan Yojana, which I had led when I was in the bank, at that point of time, not more than 58% of families in India had bank accounts. By the time we finished, we had 98% of households covered with at least one bank account. And you know the results of those bank accounts. So much of financial inclusion has happened as a result of that. So many people who could never even believe that their banks could give money to them are now they are able to leverage their cash flows because, you know, after the bank account came the QR codes and the ability of people to actually pay through the bank accounts, thereby establishing a cash flow which they could then take to the banks and the NBFCs and get money from the formal system. So much of financial inclusion has happened from there. Actually speaking, they have seen the benefits of technology, which has enabled them to improve their standards of living. And what Nandan was saying is precisely this, that India and Indians have actually benefited from the march of technology. And therefore, there is this much more positive outlook in the sense that people are believing that if AI is used, then actually speaking, our lifestyles will become better. And they're very correct in that. Because if you look at the kind of pedagogy that is available in rural schools, if you look at the kind of medical care that is available in the rural areas, all of these can be made so much better if you use AI. Without AI, by the way, making it to all those 600,000 villages is an impossibility. It can never happen. Brick and mortar is not the way that we can manage in this country. And therefore, to that extent, I think they're right in being enthusiastic about AI, enthusiastic about digital, because it is our ticket to a better lifestyle, to a better standard of living, and for better services to be rendered.
Fantastic. So just a final question. You've, like I mentioned earlier, seen so many different key moments, financial crisis, COVID, Demon, and a whole host of other events as well. In your personal leadership style, what would be some of the key takeaways? We're going to be awarding some of India's best CEOs today, and you've been on that list for many, many years. What would be some of your key learnings along the way?
Well, one key learning, of course, is that, you know, you talked about leadership style. Leadership style cannot be a single style. You know, it changes with the situation. Say in a period like COVID, you have to lead from the front. You can't expect, you know, collaborative leadership to quickly give you solutions. Same is the case when you have something like demonetization. But then when things are okay, when things are normal, there is no need for you to actually always have to lead right from the front. It's best to have a far more collaborative kind of leadership, because at the end of the day, you know, every single person has only one brain and two hands and two legs and 24 hours. So if you're going to try to do everything, you're not going to get much done. You'll get stuff done, but not that much. Whereas if you really leverage your entire teams, you're going to actually ensure that you're getting much more done than a single person can achieve. And at the end of the day, the reason why, you know, you have so many people is so that you can leverage all of them in order to do a whole body of work. You may lay the vision, you may convince people about the goals, but once they're convinced about the goals and they adopt it as their own, then it's time to allow them the space to enable them to run on their own. That's the way to get more and more work done in a very short period of time. So if you ask me what are the learnings, well, one of the learnings, of course, is you have to learn to understand what could be the scenario 3 months hence, 2 years hence, and maybe 5 years hence. At least this much of a runway you must be able to envisage, okay? Once you have done that and you are convinced it is the right thing or maybe right things, then you need to convince your team that this is something that is worth working for, and then to ensure that your team comes up with the ideas as to how to meet that situation. Because unless they own it up, getting them to actually run with it is much more difficult. So once they own it, after that actually your job is only to monitor, to make sure that that they are course correcting as you are going along, because they will do it all. Once it's their idea that they are executing, the ownership becomes much better, and therefore the outcomes also become so much better.
So for those, since we have 1 minute left, but for the retail investors, for the younger companies, startups who are still nervous about the current situation, actually I'm not sure how nervous they are because everyone seems to be hoping this will end soon. But since you said immediate term, let's say 2-year outlook, would you advise them just be resilient? Are you saying that perhaps we're over-analyzing what's happening currently?
See, if you look at startups, my one advice to all of them is that if anything can go wrong, it will. It doesn't matter whether there is an Iran war or not, For all entrepreneurs, if you're an entrepreneur and you're not anticipating things going wrong, then you're living in la-la land. Frankly, that's not the way it's going to be. So you have got to be resilient, Challenges will come your way. But challenges also bring opportunities. They are the same coin with two sides. So while you are facing the challenges, try and understand what is the opportunity that this is also providing you. And if you can do that, then, no matter what, you will still prosper.
Amazing. Thank you so much. A big round of applause, please, for Arundhati Bhattacharya. Thank you so much, ma'am.
May I please request Mr. Siddharth Zarabi, Group Editor, Business Today, and Mr. Alok Nair, COO, Business Today, to please come up on stage and present a token of appreciation to our special guest. We need to give a warm round of applause, ladies and gentlemen, for Ms. Arundhati Bhattacharya. Thank you so much. Ladies and gentlemen, we'll move forward to our next session now. This one is titled, Making a Future-Ready Conglomerate. Running diversified businesses in today's world definitely means quick and accurate decision-making on every issue, despite all the challenges that we are facing. Be it pursuing new business opportunities or letting go of the ones that do not fit anymore in the new world order are only some of the many challenges that will be talked about in our next session. As the world is facing increasing disruptions, we just have the person to help us understand what are we looking forward to. Please put your hands to welcome Mr. Anish Shah, Group CEO and MD, Mahindra Group, and to moderate this session, Mr. Siddharth Zarabi, Group Editor, Business Today.
Thank you very much. When you think of legacy Indian corporate brands and groups, you might end up thinking of groups that are perhaps past their heyday or have seen the best of sunrise. But the Mahindra Group is completely different. It's a story of reinvention, and that's why, Anish, it gives me great pleasure to have you here with us. Tell us, how does the Mahindra Group continue to rise? And rise is a particular brand that you have internally coined, and continue to reinvent itself from tractors to information technology and in so many other sectors, including EVs.
Siddharth, good evening. Pleasure to be here. The Mahindra Group is a story about purpose. And I'm going to start with an advertisement that our founders placed in the newspaper in 1945, 80 years ago. The advertisement talked about dignity of labor. It talked about neither caste nor creed nor color shall come in the way of a meritocracy. It talked about opposing antisocial trends. It outlined the principles under which the company was founded. It did not talk about products of a company. That was the beginning of purpose. That purpose translated into our RISE philosophy in the early 90s. And our leaders have lived that purpose through many years. And that is the reason the group continues to rise. Because we've always believed that if you lead with purpose, profits will follow. And investors have often asked me, we care about profits, and why don't you focus on that first? And our response to them always is that, yes, you care about profits, but we care about purpose. And what you have seen is that we have delivered significant profits over time, and that is driven because of the trust that's created, the trust with every stakeholder, with our associates, with customers, with the government, with everyone else. And that really is what has helped us continue to rise.
Anish, therefore, what is the unifying theme across all these diverse businesses that you are in terms of the core corporate philosophy?
The unifying theme is about talent and about enabling each person to contribute their best to the company, about giving them the freedom, the empowerment, and which is why we always say that it's our teams that really drive results for the company. And that's really the power that we have.
Since we are talking about the making of a future-ready conglomerate, and with all that uncertainty, I guess that process is continuous. It's not a 5-year plan. I think it's plans may be changing every 5 days. Since you've taken over, tell our audience here, what is that one big thing that you can share with us that you've kind of set in motion to drive even greater adaptation towards being a future-ready company?
Siddharth, I would actually say that we've been continuing to look at the future and prepare it for many years. I go back to the early 2000s when the Mahindra Research Valley was put in place by Anand. And that is the secret sauce for our vehicles today. That's the R&D that goes behind everything we do. And similarly, it's very heartening to hear that we've done well and we've reinvented ourselves. But we have been reinventing ourselves for many years. And it is that passion that our leaders have had over the years that brings us to where we are today. We've got a unique culture which is a blend between a caring culture and a performance-oriented culture. And therefore, when I came in as the first non-family member after 75 years, with Anand, the plan was to ensure what we call continuity in change. And there had to be a set of things that we kept constant. And some things that we changed, yes. And what we did change was bring in 3 behaviors that we wanted each of our associates to drive. One is being bold. And that's something we've done in everything that you've seen, which is set higher targets, in some ways aim for the sky, but be realistic and grounded in doing that as well. And giving our leaders the freedom to do that, the courage to do that. The safety net, if something doesn't work as it was supposed to. That's about being bold. The second is about being agile. We realize that in the world today, a large conglomerate will fall in its own trap and its own bureaucracy if it's not agile. We are competing with startups. And for that, we have to be able to drive that level of agility, decision making. And there have been a number of key decisions that some of our leaders would tell us that we made literally in 5 minutes and we've gone ahead with it. And the third is about being collaborative. As a federation, we've given freedom to our leaders, but we also emphasize that for us to be able to harness the power of the group, we have to work together. We've got to help each other succeed. And that collaboration is most important. So bold, agile, and collaborative are the 3 things that we've emphasized as we've continued this journey.
Anish, when I have reported on large conglomerates that were set up by charismatic founders, and then maybe a generation, second, at best third generation, and then professional managers have come in. Like you said, you were the first in 75 years. 2 parts. How does a professional manager ensure that that entrepreneurial streak of the founder continues through the organization? And second, how do you get acceptability for yourself because you don't share the same surname?
I think great questions, Siddharth, both of them. I'll take the second one first, and that was actually much easier than I had expected. I had joined the group 6 years prior to that, and I would just credit the people in the group, a very, very warm set of people, very friendly, and I felt accepted and at home on day one. So from that standpoint, while it's not quite the answer to your question, to me, it never really felt as an issue at all. The first one, how do you take forward not just the entrepreneurial spirit, but I would add to it the values as well, because that is very important. And there I can tell you that there were a lot of questions, and there were a lot of people who were looking at me coming in and saying, will we still be the same Mahindra that we were before? Or will we become a GE? I had spent many years at GE, and that was an actual question that I had heard from the grapevine saying that was a question that was coming up.
That you'll bring the GE culture.
I would bring the GE culture in, and we would become only performance oriented. We would stop caring in that sense. And that was a real concern that people had. So that was something that literally took 2 or 3 years to be able to convince everyone by our actions. We could say whatever we wanted, but that was just words. So our actions had to be such that they showed purpose, they showed caring, and that's when people realized that that continuity in change is important to us, and that we will continue with that. At the same time, the entrepreneurial spirit must stay. And one of the things that we've seen about entrepreneurs is that they don't care about quarters that the stock market cares about. And that is one that I've had to adapt. And I do tell our investors that don't look at quarters for us. Right? We don't care about quarters. We're building a business here for the long term. Decisions we're making are about 15, 20 years in future, about the value creation that we will have for investors in 15, 20 years. Now, we've been lucky that we've done very well every quarter for the last 5 years. The real test will come when we haven't. So I'll reserve the rest of my answer when that test comes.
We hope that test doesn't come for your sake and for your shareholders. In case you're wondering why we are talking only about sort of management and core corporate issues and not about contemporary issues, because we are coming closer to the finale of this evening, which is India's best CEOs that we are recognizing. And that is why I wanted to focus on management and how it's to be in the corner office. But Anish, given your standing as an industry leader, the audience here and those who are watching us would also expect me to ask you about contemporary issues. So I'm going to dive into the great energy disruption. You're an automaker as well. So far, petrol diesel prices haven't changed. There is no impact on auto directly from that point of view, but the world energy as we know it has been disrupted. Your first thoughts, how serious and severe is this crisis?
So far, it's under control. And I would give a lot of credit to the government for this because they've acted very quickly. We're aware of a number of deliberations they've had, and the ability to bring in more ships, the ability to allocate LPG very quickly, and a number of other decisions have helped keep things stable. At this stage, we are not seeing any impact on demand. We are not seeing any impact on production either. And that's across a large group that plays in 70% of India's GDP. So today, I would say that we are still good. We do need to be prepared though, if the war continues much longer and if the Strait of Hormuz continues to be closed and we don't get the ships that we need to, then there could be a greater impact. But at this point in time, yes, there's been a lot of scrambling our teams have to do, a lot of work that they've had to do to address various issues, including tracking LPG availability for 400 suppliers every morning. But so far it's been good.
What about second order, third order effects, particularly from your input supply chain? We are seeing a cascading impact across sectors. There are reports about how semiconductor production could impact it because of a helium shortage. And there are tons, you know, including the rubber for tires. What's your sense? What are your suppliers telling you?
At this point, again, everyone's gearing up for the worst, but we are not seeing that direct impact as yet. That's also a function of capacity or for raw material inventory that has been stocked up for some time. But I would say a lot will depend on how long the war lasts and the free movement of ships that comes in. If that continues to happen, then I think we will be fine. If that doesn't happen, then we would have to gear up for some trouble along the way.
What happens when inventories start reaching critical levels?
We'd have to stop production at that point in time, right? So at this point, at least our raw material, our finished goods inventory is fairly reasonable as well, especially for tractors. For auto, it's a little lower because demand has been very high, and that has been continued to be high for us for the last few years. But when inventories start reaching those critical levels, we have to do what we did in COVID. But even through COVID, our teams were very agile in trying to find different solutions. And in some ways, I look back at COVID and look at that as a huge learning ground. If we had not gone through COVID, today would look very, very difficult. Not just today, all the crises we faced over the last couple of years, including rare earths, including crisis on memory chips and everything else, we've been able to live through that. And I look at this in the simplest form as this game I used to play as a child called Whack-A-Mole, where something popped up and you knock it down and something else pops up. That's exactly the world that we are in today. Something keeps popping up and you put one thing under control and something else goes out of control.
Absolutely. The only constant seems to be crisis, particularly in the last few years.
So you've got to enjoy playing the game and then you're fine.
Absolutely. Two follow-ups to that. What happens to pricing? I'm not asking you specifically for an outlook there. I don't want you to go ahead of the market and your results, but is there realistically a possible that at some point industry like yours will have to pass on to consumers rising costs?
So we always try to be very balanced, and even through COVID, even through the various crises we've faced, we've never passed on significant costs to the consumer. We've tried to absorb some of them along the way and keep our price increases on track with what we've always done. So that is a philosophy we use so far, and I would hope that we continue with that philosophy.
Okay, now let's step back to something that your group does very well, which is manufacturing. I'm linking this to Atmanirbharta. This crisis is teaching us yet another lesson, that there is no option towards self-reliance. We lived for 3 decades in a world of just-in-time deliveries. You were part of global supply chains. You could just order and it would be there in 2 days, 3 days, depending on the product cycle. That seems to have completely fragmented, Anish. How much of Atmanirbharta do you think we should aspire for as a nation across sectors?
100%. Right? We need to have options for everything. The world has gone from just-in-time to just-in-case, and therefore there has to be a backup option. But Atmanirbharta does not mean we make everything ourselves. There is friend-shoring as well, so we will have some capacities with some of our friendly neighbors or friendly countries that are there around the world. And if you look at the ASEAN region as well, that's one region we haven't done as much with, that we can do a lot more. But there will be some things that we need to do ourselves, and we need to put in the capacity to do that ourselves. And in the current crisis, one of the biggest things is around Atmanirbharta, and the only solution to that is use less. And on a lighter note, on a bias as well, more electric cars.
Okay, if more electric cars are the future, how do you see a ramp up happening in this country? We've seen the progress of EVs, yet consumer adoption is also going at a sort of steady pace. What's the future of EVs in India at an industry level?
I would expect EVs to go north of 50% in the next 5 to 7 years. And the reason for that is it's a much better car to drive. And that's something we've always said. It starts with a great product. It's not that someone should buy an EV because it is something that helps us with oil or something that is a lower cost of operation. It starts with the consumer looking at the EV and saying, I love driving this car. And that's what a Tesla did when it came in the first time. And therefore, our approach has been to create vehicles that someone looks at and says, wow, that's fantastic. The next question there is there enough range? Will I get stopped somewhere because I don't have enough range? And today we have 500 kilometers real life range with the ability to add 100 kilometers in 5 minutes at a charging station. The third question therefore is, how is it priced? It's priced at par with ICE. And then the final one, which we haven't answered, is will I get a charging station everywhere I want to go, exactly when I want it? Right? That will take a couple of years to build out. And which is the reason why we will see a slower penetration for this couple of years. But as that happens, that's something, and again, the government is very keen on driving that right now. That will really change the game for electric cars.
Anish, what does the government need to do in the present context to boost EV adoption even further and faster?
I would say stay the course. They've done a great job in incentives. We don't need any more incentives. They've done a great job in ensuring that EV is kept separate from hybrids and everything else, and that's important because we need to set up a charging infrastructure. And the third is to set up the charging infrastructure. So there again, there's a lot of activity that both the PMO and MHI are driving, and that is a function of time. Setting up infrastructure will take some time. So as that happens, we will see a faster adoption of EVs.
You referred to the ASEAN Trade Pact. So I want you to expand on that. When you said not enough, what did you mean? Are you talking about access to ASEAN markets as a producer from India? And how much more can our recent trade pacts, we have 5 of them, more are in the works, deliver for Indian industry?
I see the trade pacts delivering a lot because that is our opportunity. It does open our markets up, so yes, we have to gear up for more competition. In the auto industry, we've been facing that for the last 25 years, so we are not worried from that standpoint. But industries that haven't seen it will have to gear up for more competition. But the flip side is opportunity for us to be able to export around the world. We have the ability to make in India for the world with quality and cost that requires a strong focus on R&D and that requires scale and very strong manufacturing practices. And there are many companies in India that do that very well. So that should be something that we should take forward. In terms of ASEAN, I spent the last 3 days with a number of leaders from various ASEAN countries. And there is a feeling there that India is a market that's growing very well, and they want to do a lot more. And for us, the ability to partner with them to be able to create some of the backups that we need to in certain cases is what we should take advantage of.
Well, ladies and gentlemen, the India advantage in a fragmented world, I think that's what Anisha just told us in his comments just now. I think despite all the chaos, the uncertainty, the volatility and unforeseen events, India remains a market that the world wants to interact with. There might be a blockade of the Strait of Hormuz, but hopefully that will get resolved soon. Anish, thank you very, very much. I wish you all the very best for the future and for overcoming all risks and difficulties to continue to drive further growth for all your shareholders. Thank you very much for your time with us today.
Thank you very much, sir, and a huge round of applause. May I request you to stay back while I request Mr. Alok Nair, COO of Business Today, to please come up on stage and present a token of appreciation to Ms. Anisha. A very warm round of applause, ladies and gentlemen, for those fantastic insights. Thank you so much, sir. Thank you so much, Siddharth. Our next session is the Murugappa value creation story. For a conglomerate that's been around for about 125 years, which business to be in has always been a big decision. But after all, there must be value creation at every stage for every stakeholder. Just how does the diversified Murugappa group go about it and continue to do it right every time? For this session, I'd like to call upon stage Mr. Velayan Subaya, Executive Chairman, Cholamandalam Investment and Finance Company, Vice Chairman, Tube Investments of India, Chairman, CG Power and Industrial Solutions, and chairing this session is Mr. Siddharth Zarabi, Group Editor, Business Today.
It's rare that you get the opportunity to have on stage a company that is at least 125 years old, a group, a conglomerate, 10 listed companies at last count. And Mr. Subaya here is someone who does not necessarily chase headlines because headlines constantly chase this group. Thank you very much for being here with us today. There is so much to unpack, but I want to focus on the big theme which is part of this event today, which is value creation. For a conglomerate, for a group with such a storied history, how do you ensure value creation for your shareholders? There are generations who've been managing this. You are now at the helm. What's the core philosophy behind value creation as a business?
So I really think that the core comes from an incessant focus on growth, right? Because as long as companies are growing, as long as kind of organizations are growing, I think value and other things follow. Obviously, you got to pick the right sectors to be in. But I think the core of it is always growth, right? How are you constantly thinking of growing? And the only way to grow is to constantly adapt to the environment, right? Because 75 years ago, if the bicycle was the right thing to make, you've got to think of what's the right thing to make at this point in time. And as long as you're constantly thinking of that, then you usually you're ensuring you're creating value for your shareholders.
What does the present crisis mean for your group? I'm not talking about immediate impact of disruptions, but in terms of learnings to adapt, because you spoke about adaptability being core, what does this present energy supply and price shock tell you and your group?
So I think it affects different industries in different ways, clearly. I think Arun obviously talks about the impact on the fertilizer business, which is very different. But when we think of other business in the chain, they might not be as directly affected. But I also really feel that every crisis offers a lot of opportunities, right? Because right now, everybody is beginning to rethink how they globalize. I mean, where the risk around their supply chains has become a very, very key area of focus now. And so everybody is beginning to think of, how they diversify. And so interestingly, even in our semiconductor business, where we are building out an OSAT, there was not, so we had to go out and really sell it because, it's the first time India is doing something in the space. But what's interesting now is that we're seeing a lot of people approach us because they want to diversify. People actually worried about, having, previously it was China plus one, but now everybody is worried about where you're sourcing, whatever you're sourcing from. So I think in every industry, we're beginning to see this play out more and more, and I think that offers us a lot of opportunity as a country.
Does the helium shortage that seems to be building up impact your semiconductor operations, or is your part of the business separate from that? The foundry part.
So right now, we're basically only going to start manufacturing next year. So right now, by the time, if we haven't solved the helium shortage by then, I think that we'll have other problems in the world.
Absolutely. Anisha spoke about just in case versus just in time. What would you add to just in case as operating philosophy?
I don't know if just in case is necessarily just as an operating philosophy. I mean, to me, operations are very different, right? Kind of operations is just basically ensuring that whatever your strategic direction you set, you achieve. So for us, so I don't know. I mean, I'm not sure I can have a good answer to kind of what I would add to just in case.
The context really was how global supply chains are being reshaped. The way we were doing trade, and groups as large as yours are interlinked with global supply chains. There's no escaping that. And that seems to be fragmenting. Trade policies, tariffs have changed. The context for that question was that.
So I think the broad thing that I'd agree with is that actually it makes no sense anymore to tie yourself to one alignment, right? So basically, previously it was, are we tied up with the US? Are we aligned with Japan? Are we tied? So I actually feel like now that will not hold anymore. You actually have to be open to many different alignments and have to learn how to work with those alignments as potential sources and as potential customers for everything you do.
You're a fourth generation leader. How do you blend the entrepreneurial wisdom of the forebears who really started it and marry it with current modern management practices and the imperatives of doing business in the age of AI?
So, So in most family businesses, there's a fairly classical view, right? When the founder starts it, they start with a particular mindset. It's called the founder's mindset, and they shape the business in that particular way. The second generation is usually growing it from there, and usually by the third generation, some amount of wealth preservation begins to set in, right? Versus wealth creation. But I actually think that that offers the fourth generation a lot more opportunity, because you can go back and start thinking like founders, right? And that means, looking at everything de novo, starting to take risks that previously people might not have taken, because the base is there. The base is very solid, and that allows us to think in saying that if the solid base is there, then we can afford to take a lot more risk than we were taking before. So once you establish that, then a lot of it is beginning to think of where are the new horizons going to be, right? I think the good thing with family businesses is most of them tend to take a very long horizon in their thinking. So we think of 25 years as short term, right?
25 years is short term. I just want the audience to register this.
Yeah. And so when we start looking at businesses, we're really saying what's going to be around for the next 50 years, for the next 75 years, and start picking and identifying sectors like that. And then saying, okay, now's the time to get in, now's the time to establish a beachhead in those sectors. And when the beachhead actually kind of develops into kind of being a full-blown business, could take 10 years, could take 15 years, but you just got to stay the course and be patient.
Mr. Subbiah, since you said 25 years, has AI, the advent of what we are seeing now, shortened or changed that time frame?
So I think, AI's got this whole, nobody knows most things, right? So it's bad to try to be the expert on something that we understand very little about. So I try to dodge any AI questions, because honestly, it's definitely going to have a lot of impact. There's no doubt about it. So you've got to embrace it. But what impact it's going to have, it's a classic line, right? Which is a lot of these things, you're going to basically underthink the impact in the short term, but it's definitely going to have a lot more impact in the long term.
What's the AI app that you use on your phone?
So I tend to use a combination of Claude and ChatGPT. I actually think it's like a bit dangerous going all with one, because then they know everything about you.
Okay, that's a good point. Coming back to, fourth generation, and I want to ask you, how do you take business decisions between data on a spreadsheet and intuition? How do you take a decision? Is it a mix? What is the ratio?
So actually I saw that next you have Swami Gaur Gopal coming and talking, right? So I'll give a slightly an interesting twist to that answer. So in yoga, there's this concept of the human feminine and the human masculine, the Ida and the Pingala, and both are there in all of us, right? The human masculine is usually kind of how when I think of, McKinsey and analytical training, a lot of it is about data, rigor, that's how you make decisions, right? So that's the one side, your spreadsheet side. The human feminine is a lot more around intuition, right? And one thing that's usually well established in yoga is that this intuition is a far, far more advanced form of intelligence than data and spreadsheets. And the interesting thing is that actually what you're trying to achieve is a good balance between the two. So I actually think that thinking that it's one or the other is a bit Western. But in the East, we understand that it's a marriage of the two. It's a balance. And actually that balance is what creates the best answers.
A round of applause for that fantastic answer. Mr. Subbiah, I want to also dwell on one of the key points that we are seeing, and this is new business forays. Coming back to semiconductors, conservative group. I don't mean that negatively, sir, but you're conservative. You won't just make an announcement for driving up your share price or influencing headlines. That's not how you work. What prompted you to go there? Obviously, it can't just be some production-linked incentive also. What drove that decision?
So you really, like I earlier articulated, the biggest thing is that I think that there's an opportunity to look at industries that need to get built in India for the next 50 years. Right? And if you look at India in that perspective, there are a lot of white spaces that are not filled. Right? Semiconductors is definitely one of them. Right? It is a real imperative national need, but it's also something that India is very well suited to. Right? 20% of the world's semiconductor engineers are Indian. Right? So it's actually a travesty that we've not had fabs, we've not had packaging facilities in India yet. But when you look at the global balance, you've seen a massive shift away from the Western world, which is where the original fab started, and the original packaging facilities started. A lot of them have started moving east. Now, if you look at the future, a lot of these sectors in manufacturing are going to be dominated by the east. Right? A lot of manufacturing is going to move away from the west and move to the east. A sector like semiconductors is almost natural, because if you start looking at what's going to start playing out here, is it's going to be more of a marriage between fabless design of semiconductors, a lot of which happens in the east now and a lot of which happens in India. And then that getting married with production technologies, including in the fabs and in packaging. So we already have a lot on the fabless design side. So it's really about, so it's almost a natural corollary to then marry that with the packaging and fabs. I mean, so packaging is what we're doing, and Tata is doing a fab, and Tata is doing both. But we're doing a packaging facility.
We wish you all the very well for that, because India's first initiative in the semiconductor space started in the mid-70s in the public sector, didn't take off. Great national loss. Had it been there, it would have been fantastic. I want to turn to another part of your business, because you're such a big group, and ask you about the finance business from the point of view of credit cycles. The Indian economy has been very resilient, in fact, in a Goldilocks phase. The last 1 month has been an external shock. We hope it ends soon. But overall, our fundamentals are very, very strong. What are your thoughts about the credit cycle, consumer offtake, and lending rates in the new financial year going ahead?
So one thing is that I'm not very good at prediction. I'm always worried about people that are, because most chance you have a coin flip chance of being correct. But I think the good thing with India has been that if you look at history, and the thing is that most companies have most financial services companies have been able to manage in a fairly tight band, right? So if you take us, we've been between 3 and 4% pre-tax ROA over the last, I'd say, 12 to 14 years. So when you talk about the effect of a credit cycle, you're talking about a 1% total movement in pre-tax ROA. And actually, I would say that that's not that bad, right? So just the fact that India has been able to hold, and most of the well-run companies have been able to manage in that fairly tight band over long periods of time, right? I'm talking about over 20 years, is actually very, very, it really points to the strengths that India has, right? So I don't think we've seen any shocking, events. Even when we saw 2005, 2008, that crisis, the impact on India has been highly mitigated, and I think that comes from a combination of good, governance at the center, and very good, monetary policy and controls by RBI and the others, and they've just been, I think, great in terms of how they've managed things over cycles.
Mr. Subbiah, since you're one of the best CEOs this evening, I want to ask you 2 questions in the time that we have left for our panel. One is, how do you avoid risk? What is it that one thing or many things that you stay away from, regardless of how lucrative it may seem to you as an opportunity?
So first, I don't think it is possible at all to avoid risk, right? If somebody's found a formula to that, I'd love to learn. I think business is fundamentally, it involves risk, right? If you're in financial services, it definitely involves risk, right? So I don't think it's about avoiding risk. It's just about managing risk, right? And I think that in the end, you just got to ensure that whatever you're producing as outcomes kind of, mitigates the amount of risk you take, right? And I think that that's all good business people do, right? But I don't think it's ever possible to avoid risk.
But would you plumb for growth in this context?
100%. I think at any point in time, you need to be, I think businesses that are really successful over long periods of time are always focused on growth, right? Growth is like oxygen, right? I mean, without growth, businesses stagnate, businesses die, right? And it's the same, at a personal level as well, right? I mean, without growth, we stagnate, right? and we die. So I think the only way to look at businesses is that, right? Kind of being very, very focused on growth. Now, obviously, if you get carried away and growth is the only metric, things can go very wrong, right? So that's why, one of the things that I say, kind of, we are Chettiars, right? So as a community, we're very focused on cash. So so one of the things we have is an obsession with free cash generation, right? And I think that if you have growth without free cash generation, you could get into trouble, and you will get into trouble, especially for manufacturing. Obviously, financial services is different, but growth without free cash generation is a recipe for disaster. So we obsess on it, right? So everything, if it's not in the hundi at the end of the month, it doesn't count, right? And so that's the way we look at it.
Great answer, and one final bit. We have L&T here, not just India, but one of the largest conglomerates of its kind in the world. So I want to end this session by asking you about the future of the diversified conglomerate. You have a storied history. There are so many more, but the way business is changing, not just in India, but globally, are diversified conglomerates going to stay 10, 15, 20 years down the line?
So there's no single formula, right? I think it's not that certain companies are very, very good at being monoline, right? But I actually think in a place like India, there is always room for diversified conglomerates, right? I mean, Anish spoke before me, and you talked about SNS and a lot of the others as well. The reason for this is that there are tremendous advantages to basically having a certain amount of scale in this country. Right? I mean, when you talk about access to resources, access to talent, right? All of that basically gets attracted to, to what they perceive as safe harbors to go to or good harbors to go to, right? And I think that so basically, if you have that inherent capability to attract that talent, to have access to financial resources, and if you don't use it, then that's not that great a move, right? And obviously, in that process, people pick diversification because one thing it does is it does mitigate risk to a certain extent. But the other thing it does is it also allows, you to grow, because in certain sectors, you won't be able to grow more than a certain percentage of the market, right? But having the diversification then allows you to scale. And I think India offers that opportunity for scale, right? Honestly, Warren Buffett used to talk about winning the gene pool lottery, right? He said being born, kind of in America straight after the Depression gave him, I don't know how long he's going to live, and I wish him a long life, but how many ever years of unfettered growth in the US. In a lot of ways, I think we won that same gene pool lottery in India. And I think if we don't use it, it's ours. It's ours to lose, right? And so why not? Why not kind of leverage it where we can?
Absolutely. And one final point, how much of yoga do you do every day?
So I probably do about 3 hours a day, 2 to 3 hours.
Wow. A round of applause for that. A round of applause. Thank you very much. I've just been told that I can extend the session by 5 minutes because this is a master class, if you allow me, on the Chettiar way of doing business. So since you said that, please talk about your daily yoga practice because I know a lot of people would want to be inspired.
Isn't this business today? No, actually, I think, well, my journey into it actually started, the real culprit there is Kanika, who's there in the audience. She got me into it, so she's the one to blame. But no, I mean, I honestly think that it's a phenomenal technology, right? Because it's something that we've understood in the East, that basically we're hardware and software, and that we can totally rewire our software and make us just, much, much more effective and efficient human beings. So when you understand that there's a technology like that, I think it's a huge opportunity to use it, right? And so yoga, as it's interpreted again in the West, is all about asana for the physical body. But when we talk about it here, it's a combination of asana, pranayam, meditation. It's for the physical body, the mental body, the emotional body, the energy body. So it's such a comprehensive science. And honestly, it's a pure science and technology that once you understand it like that, yeah, you're just going to use it. I mean, it's a drug that's very difficult to get off of once you understand what it can do for you.
Absolutely. You nudged me back to business, so I have a few questions in the time that we have, the extended time. And the first one really, which is one or maybe more of your businesses where the market has so far underestimated its true potential, growth potential?
So if I were to look at it, when I take CG Power, right, and CG Power is actually based here in Mumbai. It's a business that we were originally attracted to because of motors and railways, but the thing that's now really where we're not leveraging its potential enough yet is in the power side, right? Actually, the name is CG Power, so I guess we should have got the hint. But basically, we make transformers and switchgear. But what's happening in the power sector globally and in India is actually just a massive opportunity. Why I say we're under leveraging it is because it's also undergoing a massive shift. But the biggest areas really are when you begin to look at renewables, when you look at what they're beginning to do, and when you begin to look at consumption on the data center side, EVs that Anish was talking about, all of that requires a lot more electricity. And the charging infrastructure that Anish was talking about, right, setting up across the country is going to require a lot of power. And that, I think, just offers huge opportunity for us to rethink. And honestly, India has the opportunity to rethink the way all three, generation, transmission, distribution of power is done. And therefore, that offers the country a huge opportunity in that sector.
Therefore, linking to what you just said, which sectors do you think will drive future growth, or let's say a medium to long term for the group?
So I would honestly say that there's a lot of opportunity, in a lot of the areas that we get into, right? So basically, financial services clearly, I think is a business that will continue to grow in the country, and I can see that. As long as India needs to grow, like financial services is something that the country will require for it to grow. So you can see a lot of long-term growth legs there. We've talked about, the power side and some of the newer areas. Clean mobility that, Anish talked about, I think is going to be a huge opportunity for growth. The fertilizer sector obviously is something that, again, the country needs a lot of. So I would actually say that it's a great portfolio. Insurance is something that's also kind of, there's a lot of opportunity in that sector as well. So across the business set, I think that there are a lot of businesses that, all have a lot of opportunity. I just think that India is still so nascent in its growth cycle that it just needs so much, right? And so that creates a lot of opportunity for businesses in the country today.
Mr. Subbiah, but is there a risk within your entire portfolio of import dependence? For example, on fertilizers, there's a big lesson that we are being taught, but there are no easy answers. It's not about flipping a switch. We are not blessed with certain natural resources. What can you do? Is import dependence a risk that is now right in front of you as a CEO?
So 100%, but I think, the Prime Minister is also very, very much on the bandwagon of how to correct for this, right? And I think that that's a huge, it's something that the country has to do, right? Reduce its dependence on fossil fuels, reduce its dependence on a lot of things we import. But that's why all of these things are happening, right? I mean, like basically, if you look at it, though we assemble a lot of mobile phones in India, a lot of the components are still imported, right? Hence semiconductors, right? Hence all the electronics that needs to go, because honestly, we are very, very far behind. And pretty much anything we do, any of these devices, including this one, probably has most of its components imported, right? The device itself may be imported, right?
To interrupt you, many years ago, I was shocked and dismayed to learn that even this plastic around this gun mic, as we call it in our industry, was completely imported. So, you know, that's the kind of import dependence that we have had. But please continue your points.
So absolutely. So I think that there's a huge focus on this now, and everybody is beginning to look at it in sectors that they know, right? So in the sectors that we know, we definitely see a lot of opportunity to do that. And semiconductors is one area where we're making a big play to reduce that import dependence. And I think it's really going to happen. It's going to happen sector after sector. But each sector takes responsibility for their own area and backward integrating so that they don't have less import dependence. And I think India will get itself there.
So at the group level, how do you make decisions on capital allocation? And if I may also add, from the past, what was that one lesson that you learned on capital allocation that perhaps went wrong, which you would tell younger CEOs, other CEOs as a lesson to remember?
So, capital allocations actually, I think, a very interesting area, right? And it's not an area that can get covered in a short period of time. It's actually interesting because it's the one thing they don't teach you in business school. I don't think they teach capital allocation at all anywhere, right? So it's not like there are very clear principles for it. It's not very clear as to how companies should actually go about it. So, I actually think a lot of good decisions, obviously there's this whole thing, right? First off, one thing that I hold that is very, very important to do in companies is that you need to separate out two engines, right? I talked about free cash flow earlier, but I believe that where companies make the biggest mistakes are by clubbing the free cash generation engine and the capital allocation engine together. So almost always the people that generate the free cash aren't necessarily the right people to be the best capital allocators. So it's almost like once they generate the free cash, you've got to take it away from them and then say, okay, now where do I need to allocate it, right? And the allocation mindset is very, very different, right? Because generally, if you have a division that's generating free cash, they'll come up with ideas that can also use their free cash. But how do you determine whether that's the best place to put the free cash? So it's almost always better, and we have a separate group of people that just focus on where the cash should get allocated. And they're very different from the group of people that are focused on generating the cash.
My colleague Krishna Gopalan has a question for you. I'm going to request Krishna to step into the spotlight. And can we get a mic to Krishna?
Hi, good evening. It's something we did bring out for the interview as well, but we spoke about conservatism in terms of going about business. And you did mention this bit about how the South is viewed on that particular parameter. But I think for the audience here, that will be something to hear, Will. And if you can tell us how the conservative quotient has evolved over time in the South and what makes it different today.
Yeah, so, you're right, Krishna. I mean, the South has always been viewed as very conservative. But, I don't necessarily see that as kind of a net liability, right? I mean, because basically, you talked about earlier, right? There are ways that you could again, linking back to capital allocation, I would say that what you're seeing now is actually, a South that is actually willing to kind of focus a lot more on growth than it has in the past, right? It still might be conservative in the way it kind of allocates capital, but it's getting a lot more focused on growth. And if I look at it, right, we've always had a lot of engineering talent. I always joke that, if I come to Mumbai, I can get along better in Tamil here than I can get along in Chennai because, you go to the leadership in almost most of the companies in Mumbai and you'll find a South Indian in the top 3 or 4, right? I mean, we started with SNS and SNS is here, so kind of, there's no shortage of, right? And that's true across, I mean, I guess you can name all of the leading groups here, and it's pretty easy to name the South Indians in the top 3 or 4. So it's not that we've never had the skills to do it. It's just that we chose to kind of operate in a particular way. And I think that that's beginning to change a lot, right? And so we're seeing that, a lot of groups in the South, we're seeing TVS, folks like Sudarshan Venu, we're seeing so many people who are basically willing to take on, a new level, kind of a new desire to grow at a much faster pace than they've traditionally grown. And I think that that's actually going to be a huge opportunity because, the South is very ripe, for a lot more industries to come in and kind of grow out of there. So I think that's going to be a lot of opportunity in the future.
I'm going to take the liberty of requesting Mr. Alagappan. Sir, one question that you would ask Mr. Subbiah here on stage that you haven't asked in person but can now do that.
This is, I keep saying the way he's kind of growing, and he's saying that, he's broken the conservatism in our group. So, it's interesting to find out from him how he's done it actually, because he's already broken the mold, and he's like really pushing us to do more now.
Honestly, I think obviously, thanks Arun, but, I think that the opportunity has always been there, right? And like I said, what the fourth generation allows us to do is that because we start off, and we kind of, we actually have the opportunity to take a lot more, what you won't perceive as risk, but I actually don't kind of, like if you look at our balance sheets, right, I don't think any company in the group, I would say right now, I don't think any company in the group has any net debt except for Chola. Chola obviously kind of given that we have to borrow a lot, it has a lot of debt. It probably makes up for all the other companies combined. But basically, if you can look at engines for growth whilst keeping your balance sheet strong, right? I think that, you definitely will find a lot of opportunities, right? And so the way we look at it is if we set a metric for ourselves, right? And one of the metrics that we set for ourselves internally, whether we look at TI, CG or Chola, is saying how can we grow at about 26% a year? And why you like to set a very high threshold is because it pushes your ordinary thinking, right? So you can't say I'm going to grow at GDP, even twice GDP, because if you have to grow at 26%, you have to think of ways that are not going to, you're not going to get to by the natural way of growth. And then basically what we do is break it down, right? So we ask the existing businesses, existing divisions, on your own organic level, what rate can you grow at? And let's just say that that is 7 to 9%. Then what you've really got to start thinking of is, how do you generate that delta, the 17 to 18, 19%, with the free cash that you basically generate? And so separating that out and kind of beginning to think of growth differently from how the current business is run is one of the formulas that I think works well.
Mr. Subbiah, I want to follow up on the point of generational continuity. In many of the groups that I have covered, I have noticed that by the second generation or the third generation, that generation is invested in the business, but they primarily look at themselves and think of themselves as investors. They don't want to operate, they don't want to get their hands dirty, they don't want to be on the shop floor. What do you make of this? And if you could possibly share, what are your thoughts for your next generation, and how do you see them being in the diverse businesses? Are they going to be manager, operators, or just promoters and capital allocators?
So, so I think that's a great question and very, very pertinent to family business in India. Like you asked earlier about the conglomerates, I think conglomerates in India exist. A lot of them have been family businesses, right? 76% of the traded stock exchange are family businesses, right? And like I said, family businesses have an inherent advantage, right? Because, you have a reputation, you have so many things that going for you. So I think that for family businesses, it's very, very important to be an operator, right? Investors are a different group, but I think that if this country needs, like 100 groups like the Tatas or the Ambanis, the Adanis, right? So basically, we have to think of it as the only way we can create those 100 groups is by having more people that operate, right? You cannot get there by basically being an investor. So I think it's really important that family businesses continue to be operators. And that's something that you have to create in the DNA of the business, in personal DNAs as well, right? As growing up, we never even thought it would be an option to be an investor, right? We knew that we had to get out there, go out to where the plants are, focus on what it kind of requires to be a strong operator in the country.
Absolutely, and we wish groups like yours, and like you said, hundreds of groups that a growing country and economy like India needs. Thank you very much for your time and for being such a great sport and sharing so many insights, including on yoga. I don't know how many of you, but 3 hours per day, I don't think many would probably be even doing 3 minutes per day. But Mr. Subbiah, all the very best, good health, and lots of business success and prosperity. Thank you very much for this wonderful masterclass with us.
Thank you. Thank you so much.
A huge round of applause, ladies and gentlemen. Thank you so much, sir. But stay tuned, and I will request Mr. Dinesh Bhatia, Group CEO of India Today, to please come up on stage to present a token of appreciation to Mr. Subbiah. Big hand, ladies and gentlemen. Thank you so much, sir. Ladies and gentlemen, we move forward to our finale session now. This session is titled The Inner Anchor in Turbulent Times. In an era defined by disruption and constant change, it is the ability to handle adversity that has become a defining trait of successful leaders. And this session will now be unpacking practical approaches to build resilience, maintain composure, and make thoughtful decisions even in uncertain times. Ladies and gentlemen, please join me in welcoming our very special guest, Swami Gaur Gopal Das, on the stage, and the session moderator, Mr. Siddharth Zarabi, Group Editor, Business Today, and also joining him is Gaurav Sawant, Senior Managing Editor, India Today Television.
Swamiji, namaskar, swagat, a very, very warm welcome to this final session before the awards ceremony. Your arrival gave me an extended opportunity to talk to one of India's foremost CEOs, Mr. Vellayan Subbiah, and that just finished. And he was mentioning that your session is coming up. So I want to begin by asking you about this world of uncertainty, world of turmoil, a world of trade disadvantage that Indian CEOs are facing, because this event is, after all, recognizing India's best CEOs. In such a world and in such an environment, what management book or philosophy should a CEO follow?
Okay. A very good evening to you, ladies and gentlemen. Okay, I thought you're not very happy seeing me. A very, very good evening to all of you. My sincere gratitude to Mr. Arun Puri, I just saw him here. Of course, to Mr. Siddharth Zarabi, Mr. Gaurav Sawant, and to everybody present here. Also, later this evening, we are celebrating some of the leaders of the industry who are going to be awarded. Congratulations to all of them. And my sincere apologies for being a bit delayed. No public speech or an answer is meant to start with an apology, but I'm making an exception to that rule. And I'm making an exception to that rule because in my apology also kind of lies an answer to the uncertainty that we are facing today. I started off from where I live in South Mumbai, bang on time, to be here at least over 25 minutes ahead of time for the session. And I was right here at the corner, not aware that at the MMRDA grounds there's a musical concert going on and the entire place is absolutely chock-a-block, absolutely beyond my control, and I'm stuck there I'm just meant to take one right turn, and it's about 3 minutes away from that right turn, and I'm sitting at that right turn for 23 minutes. 23 minutes before I turn right.
Swamiji, you seem to be describing the situation at the Strait of Hormuz where oil tankers are stuck.
Exactly, that's why I said, in my apology lies clarity to a lot of what's happening today. And trust me, the first thing that came to my mind as I was stuck in that mad traffic was just to get out of the car and probably walk my way here. Now that's not an easy game though. My driver tells me it's still about 1 kilometer. What if the traffic gets cleared and I'm on time, right? Number one. Two, it's not an easy game because I'm going to be bugged for selfies all the way. Right. और पहले ना 30 साल पहले मेरे पास कोई सेल्फी के लिए नहीं आता था. आज सब लोग आ रहे हैं सर, स्पेशली लड़कियां. #monkswag. और मैं कई बार बोलता हूँ, a lot of times I'm saying, are they taking pictures with me? No. They're taking pictures with my good times. Good times, they're here. Tomorrow times change, nobody is coming. इसीलिए मैं कहता हूँ, जिनके ना आते थे जवाब उनके सलाम आने लगे. जिनके ना आते थे जवाब उनके सलाम आने लगे. मेरा वक्त क्या बदला, मेरे नीम के पेड़ पे आम आने लगे. Seriously guys, I'm telling you. So walking this 1 kilometer means it's not an easy game. And third, I'm on Business Today, national television. Imagine me sweaty, coming for a session sweaty, which is why in terms of uncertainty, the most certain thing to do is not be impulsive. While I was sitting in that car, the most thing that I wanted to do was act by my impulse, get out, walk it out here. And that's what most business leaders, or why business leaders, everybody wants to do when we are confronted with a challenging situation and uncertainty. Act based on impulse. Act based on gut. Somehow, for some reason, we all love closures. We all love instant closures because we don't want it in our mental space. And how do we get those closures? Shut it down by acting right away.
So perhaps the American president is looking for a closure the way he's bombing Iran. And it's leading to the war flaring up even further. When we look at the fallout of that, not our doing, but everyone here is facing the impact. For CEOs and for the employees of their CEOs, kal naukri rahegi ya nahi rahegi, that uncertainty, what would you tell the CEOs and what would you tell the employees?
Yes. Number one is that I think the theme was beautiful. The India advantage in a fragmenting world, right? And when we are talking about the India advantage, we're not just talking about demographics, we're not just talking about tech, we're not just talking about digitization, we're not just talking about governance policies. We are talking about the India advantage in terms of psychological and civilizational strength as well. And that's why I'm here. My session and my answers are more focused on what we have at the very core of the fabric of this nation. The ability to respond with clarity. It's not new to us. Tragedies are not new. Catastrophes are not new. Crises is not new. 1,000,000 times we have been invaded. 1,000,000 times we have gone through this. Even during COVID times we went through this entire catastrophic turmoil. We bounced back. Because in this country we have the ability to connect to our inner selves. We have the ability to pause. We have the ability to reflect. We have the ability to bounce back. I'm not saying that the world doesn't have it. I'm saying we have it specially. We have it specially. One of the greatest epics of this nation is the Mahabharata, in which is seated the philosophy of all times, the Gita. Now here we have in Mahabharata the gentleman Arjun, who's wanting to fight a catastrophic war. And as he's wanting to fight, Krishna takes his chariot before Bhishma and Drona Those who were meant to be his allies are right now his foes. Those who are meant to be on his side are fighting on the opposite side.
You are describing Trump's world order, sir.
You take whatever you want, sir. I'm just talking the India advantage from the Mahabharata point of view, sir. Thank you, sir. And panic strikes. Chapter 1 of the Gita is panic. Ladies and gentlemen, impulsive reaction and panic is at the very core and gut of human beings. It's nothing unnatural. It's nothing out of the road. Absolutely unnatural. You see, like you said, employees to take care of, businesses to lead. How would someone not panic? How would someone not impulsively react? It's absolutely natural. So, ladies and gentlemen, I have a can of Sprite here, right? I wanted a bottle of champagne, but it doesn't look good in my hands. Imagine this. Imagine this. This is what the current situation is doing to every single one of us. There have been stimuli before in the form of COVID. There have been stimuli before in the form of the 2008 recession because of Lehman Brothers. There have been innumerable stimuli that were shaking us all up. And guess what, ladies and gentlemen? This is what is happening to all of us. Reacting. What good does it do? What good does this do to me? What good does it do to my employees? What good does it do to my mental health? What good does it do to solve the issue, the challenge that lies right ahead of me?
So, but if there's so much turmoil, what do? Keep it? Sit on it?
Sir, that's the India advantage. That's the India advantage. What good does it do by pouring out? Goodness me, the India advantage. What is it? Which brand? No brand. The India advantage. What good would this have done to anybody? Would it solve the current situation in the world? No. You're shouting, you're yelling, you're reacting, you're getting worked up, you're getting stressed up, you're losing sleep, you're throwing tantrums. Does no good. But when you start going by this is the Gita advantage, stillness. Stillness. Why have we been known for stillness? Because in stillness you can reflect better. In stillness, you can prioritize better. In stillness, you can respond better. It's in stillness that we can do it, ladies and gentlemen, and which is exactly why there's no point getting worked up. The Gita teaches us to separate the controllables from the uncontrollables. What is the point in being focused on the uncontrollables? All we will get is depression, all we'll get is stress, all we'll get is getting completely messed up internally. What if we shifted to the controllables?
But what if bottom lines also have to be protected? Any CEO here has the responsibility to protect his bottom line.
Correct.
But should he retain every employee? Not bother about the bottom line, but tide over this crisis. And if this crisis lasts longer than 3 months or longer than 6 months, then what? Revenues are not going to come in.
Correct. How many of you guys played Treasure Hunt? Any of you? Oh my goodness me, nobody? Don't tell me. Wow. If you played the game Treasure Hunt, we know that there's a treasure hidden somewhere and nobody gives us the entire map with clarity that the treasure is there. If they give you the entire map with clarity, it's no longer a game, it's a logistic workout, right? So what are we given? The first clue. Clarity is not about having answers to all the questions right away when there's so much chaos and mayhem. Clarity is about what's my next step in keeping the ship afloat both for myself and my people, right? So what I do is I take the first clue and go to the next step where I find the next clue. From that next clue comes the next clue. And trust me, when the intention is sincere, when the effort is consistent, and when the concern for others in our organization is a priority, clues come our way. I'm not saying we don't work. I'm not saying we don't do what we are meant to do. I'm just saying answers to all the questions are not right there right now. Take the first step, find the next clue, take the next step, get the next clue, and that's how we're going to move forward in times of darkness. That's why current situation is about playing the treasure hunt, ladies and gentlemen. Don't look for all clues right away. Look at the clue right now. Do the best with whatever is at hand to keep the ship afloat. Right now it's not about growth. Right now it's not about P&L. Right now it's bloody about nothing. Right now it's about keeping the ship afloat and making sure that we don't sink and drown. And if we can do that, the next clue waits ahead, and in that next clue probably is the blueprint for growth as well. Yeah?
Amiji,
Thank you.
what distinguishes, in your view, a business CEO from a sports person or a movie star? What I mean to ask you is that for a movie star, it's all about himself, his ability, how he delivers on screen. There is a support staff. Similarly for a sports star. But when it comes to managing a massive business, you have tens of thousands of employees and you can't do it all alone.
Correct.
In your view, is the ideal CEO style of working one of an alpha, the leader of the pack, or is he an organizer and team player at heart?
I would say, like we've been talking about human tendencies, and one of the human tendencies is always to be on an extreme. Extremism and polarization is a human tendency, whether it's religion, whether it's politics, whether it's business, whether it's entertainment. We tend to be on one side or the other a lot. So we'll find leaders who are on one side of the spectrum being alpha, without really being empathetic and sensitive to the needs of the people whom they lead. And we find some of them on the other end of the spectrum being touchy-feely and empathetic. And then when we don't have the alpha element, then it's hard to grow. I think in one of these sessions, I was here earlier, probably one of the editions of the MindRush, and I remember saying there that somebody said very beautifully, I don't care how much you know until I know how much you care. Right. I don't care how much you know. People who we lead are human beings. They have needs as much as you have needs. They have emotions as much as you have emotions. They have challenges and problems as much as you have challenges and problems. They are affected by daily struggles as much as you are affected by daily struggles. They have family issues and relationship conflicts as much as you have family issues and relationship conflicts. They have mental health issues and mental stresses as much as you, probably more. At least the privileged have money and power to deal with situations which they don't. Which is why when we are talking of a good leader who's not simply someone who's an alpha personality who will create a strategy and a blueprint and be a leader of a pack and say, bloody get it done. To lead a group of people, you need a high sense of morale. And especially in difficult times, you need a morale. People whose morale is high always will deliver more than what is expected of them. So when we simply take the alpha-Bayesian approach, we might probably be able to reach X by pushing people. But if we are able to build up the morale and inspire people, we'll probably be able to bring that same number to 10x. And which is why I think a balance between the two is necessary, sir. Sometimes taking just the touchy-feely, inspiring morale approach gets us nowhere. And sometimes just the alpha approach of just getting the numbers gets us nowhere. I hope I'm making sense.
I once called a CEO after that company had...
Sorry?
I once called a CEO after that company had laid off a few hundred employees, and I wanted his reaction to the story. Because a lot of those sacked employees had approached us, they were giving us internal details, uncomfortable details. They were blaming the management for wrong decisions which led to job loss. So I put all of those questions to me. And he kind of stopped me midway and said, Siddharth, I hope you realize what I am going through. I realize that the livelihoods of many people have been impacted. And I fear for my future and my family कि इनकी बुरी नजर ना लगे
mujhe, because I've had to take this tough call. This is the reality of business. Sometimes very tough, very hard, very painful decisions have to be taken. I wonder if anyone has that thought inside, what guidance would you give to any business leader? How should he approach taking tough decisions, especially those that involve human beings?
Wow. The situation is tough and the question is tougher. Right. There are going to be times where we have to do what we need to do. Right? At the end of the day, you're a CEO of an organization. You don't own that business. I have a friend of mine who owns a business, has 4 verticals to his business. And one of the verticals, there was a fire in the factory, right? There were 1,000 people working in that particular factory, in that particular vertical. The fire in the factory, the first thing this man said was, called all the 1,000 people in, addressed them, said, we're not chucking any of you out. You're the ones who make us who we are. If you are the ones who toil for us, you are the one who give your sweat and blood and tears for us, you make us who we are. Without you, our blueprints, our strategies, our plans, our growth ambitions and aspirations are all only on paper. So it's you who make us who we are. Naturally, the first thing I want to do is not take you out. Currently, I'm in a very tough situation. The whole factory's down. Now the only option I have is absorb all of you in our other 3 verticals at a full salary that I'm paying you right now, here. And it's going to take about a year before the insurance claims are settled and before we rebuild ourselves and we reabsorb you in the same vertical back again. Now the gentleman did that. Wasn't an easy thing for him. 1,000 guys absorbed in 3 other verticals were being paid for practically not what their skill set was. And then a year later, everybody was brought back to the main business, that particular vertical. The loyalty that these 1,000 people have to this man is beyond words. Naturally, because in the times of calamity, look, in times of calamity is when you actually buy loyalty. It's not in times of prosperity that you buy loyalty.
Was this Arjun's dilemma as well on the battlefield?
Absolutely. It was Arjun's dilemma as well. What I'm trying to allude to here is, for a person who owns a business, it's still not all that hard. For a person who leads a business in a high position and is being paid for it, it's at the end of the day not his or her decision.
But what if the business is not making money?
Exactly.
Or if AI is taking away?
Exactly. So in which case it's very, very critical. It's human beings involved. और आपने तो एक और डायमेंशन ले आया कि किसी की नजर लग जाएगी, किसी की बद्दुआ लग जाएगी, इतने लोगों, ये तो मैंने कभी बिजनेस पैनल पे सुना ही नहीं था पहले. बट ये सवाल मुझे आया कि भाई ये सब करने की वजह से सामने वालों की बद्दुआ कितने लोगों के जॉब्स जा रहे हैं, कितने लोगों की लाइवलीहुड अफेक्ट हो रही है. I have always believed in one thing, sir. Sometimes hard decisions have to be made not because we want to make them, because the situation demands it. The situation demands such decisions. Can I finish this part? Because the situation demands such hard decisions at times. At least one thing can be clear. The intention to help, the intention to bring them back, clear, empathetic communication, connecting to others in our network to see how we can help them get relocated. With this friend of mine, he owned a business, he could do it in his own verticals. With the others, good leaders, of course the numbers are large and it's not all that easy. It's sitting on the stage, it's easier to say, I know what you all are thinking in your minds. It's easy to philosophize and sermonize from a stage. Nevertheless, when the intention is there, where attention goes, energy flows. So if we make that intention and a little bit of effort, at least a few people can be helped even in such a crisis.
You know, you spoke of crisis, and in crisis, the real character of a person is known.
Right.
We've all been through COVID and we've all survived the COVID crisis. There, and perhaps even now, there is a section that's being accused of either hoarding or black marketing or, profiting from misery. how should one deal with that situation? Because are we getting far removed from our civilizational philosophy, where we were growing up, we were reading Sant Kabir saying, "Sai itna dijiye jame kutum samay, main bhi bhuka na rahun, sadhu na bhuka jaye." But now people want to hoard. How do you reconnect with roots?
Yeah. First of all, let's just take out this whole thing about what's coming up. Right. Let's not create this false information going all around in terms of the lockdown situation coming again. You know, there's so much going on all over the place. Whatever happens, we don't know, and nothing's certain at the moment. We have no idea, no clue of what's coming up. One thing is for sure, you know, in a group of people, you will always find some people who go by the negative that exists in the society. There will be people, no matter what we do, no matter what we represent in this country, no matter how many dohas and shloks they've heard, no matter how much philosophy we know, they will go by not the most pleasant and not the most right thing to do. By and large, however, that's not what people are. Somehow or the other, I see goodness existing in the world more than negativity. I see people who are wanting to help and wanting to offer a helping hand, extend a helping hand to people more than people who don't, in whatever way they can. And which is why I feel fanning goodness, focusing on goodness, is so much essential as well, because people who are hardwired to do wrong, no philosophy, no legislation, no governance, no nothing can change them anyways, right? So why focus on those who are doing that stuff? Why not bring our attention and inspire those who can live rightly, who can give? And COVID showed that. During COVID times, we had hundreds and thousands of stories of individuals, of leaders, of organizations, of influencers, of entertainment stars, celebrities, who came out to help, who came out to stand strong for the world out there. So this is the message that needs to go out there. For those who are not going to listen to it, why focus on that stuff? It's all right. They will anyways be who they are. And let the laws of karma, let the universe come back to them. They will. No matter who we are, we live in a world of choices and consequences. If somebody makes a certain choice, the consequence to that is certain. Today, tomorrow, a year down the line, or 10 years down the line, consequences will come their way, for sure. Let consequences handle them. But let's prepare people by spreading goodness, by inspiring people, by boosting their morale, by preparing in a way that we stand strong together, and together we can bounce back the way we bounced back in
So
COVID.
in this Mahabharat, we need, every Arjun needs a Shri Krishna and not a Shalyaraj for a Karna.
Absolutely. We need Shalya and Karna. Shalya और Karna का बस verbal battle चल रहा था. I always love to share this story. Shall I? No, but you had a question. Let's have you ask me.
Please go ahead.
Please. I'll have 10 things to say. 10 pop-up windows open in my mind when one question is asked. Please, sir.
I really did that. Please continue.
No, because he was talking about Krishna and Arjun. I was just reminded when Albert Einstein was going around speaking on the relativity of space and time, his theory. One day he had given 5 talks on the theory. He had to go for the 6th. And his chauffeur, his driver, told Albert Einstein, "Tired, Albert?" He said, "After 5 talks, what do you expect?" The driver said, "Well, don't worry. Nobody's seen what you looks like. Right? I can go and give the talk because I've heard you so many times. I can repeat verbatim what you said." Albert Einstein said, "No worries, I'm so, all right, worth trying." So there was a community of scientists. The driver came up on stage to speak on the relativity theory. And Albert Einstein went and sat in the last row to just see how this guy was doing. And he was bang impressed. This man's like spot on, just repeating every word the way I do. The problem was not when the talk was being given. After the talk, one scientist raised his hand to ask a question. Now he only knows how to give the talk which he's learned by heart. So he said, "What's your question?" So the scientist asked this question, and this driver who was posing as Einstein said, "You call yourself a bloody scientist? Which scientist asked such a dumb question?" It's such a dumb question that even my driver sitting at the end can answer. Driver, can you answer the question? And Albert Einstein sitting at the back answered the question, and the scientific community was thinking, bhai, driver aisa hai to scientist kaisa hoga? Now, Albert had a driver who didn't really kind of go beyond what he knew. Arjun had a driver, Krishna, on the battlefield of Kurukshetra, who was not driving a chariot, who was driving the spirit. And in today's world, while we are driving and navigating through this crisis, we need less of driving strategies and we need more of the driving spirit, and which is where the Gita truly comes to our rescue in terms of how that spirit can lead us ahead.
Swamiji, one quick question, and this is, what according to you is the role of faith, and can spirituality actually make a business leader a better decision maker?
Oh, 200%. Spirituality is no longer a choice. If you ever thought it was a choice, sorry to disappoint you, it's not a choice. It's an absolute necessity, but not faith-related spirituality. Faith is very personal. That is up to you. Which faith you choose, which faith you believe in, which faith you want to follow, that's all up to you. But objective spirituality is not a choice. It's I was at Salesforce in the US, and I was talking to someone who was very close to Mr. Benioff. And there they told me that on every floor of their headquarters, they have a mindfulness zone where their employees can go and practice mindfulness every single day in their own time. Reason? Stillness. Reason? Clarity. Reason? Perspective. And in the corporate world today, what do we need? Stillness, clarity, and perspective. So spirituality is not a luxury. It is a necessity. Objective spirituality, I repeat again, not faith-based spirituality, that's an individual choice. Objective spirituality is no longer a luxury, 100% necessity.
Ladies and gentlemen, a round of applause for the Gaurav Gopal Das
Thank you.
protocol for being a business leader in these fragmented and challenging times. Swamiji, thank you very, very much for your time with us today.
Thank you again. Wonderful to be here. Thank you.
Thank you so much, Swamiji. May I please request Mr. Alok Nair to come up on stage, COO Business Today. And if you could also request Mr. Dinesh Bhatia, the Group CEO of India Today, to come up on stage to present the token of appreciation as well. Mr. Dinesh Bhatia, if you could do the honors, please. Thank you so much. A big hand, ladies and gentlemen, for Swami Gaur Gopal Das Ji. Thank you so much, sir. And now, ladies and gentlemen, we will move forward to also felicitate our partners this evening. And for this, I'd like to call upon stage Mr. Dinesh Bhatia again, Group CEO, India Today Group. Also, if Mr. Alok Nair, COO of Business Today, can also join him on stage. We are going to be felicitating our partners now. Let me call upon stage Mr. Arnab Basu, the Clients and Industrial Leader, PwC India, to please come upon stage. Can we have a token of appreciation being sent on the stage as well? Thank you, Mr. Nair. Can we please have the token of appreciation sent on the stage, please? There we have it. A token of appreciation for Mr. Basu here. Thank you so much, sir, for being our esteemed partner in this entire journey.
Thank you. May we now call upon stage Mr. Jack Bastian Nazareth, CEO Adani Realty, to please come up on stage. We'd like to felicitate you as well, sir. Thank you so much, sir, for being a valued partner. Next, we'll invite on stage Mr. Harsha, Director Sri Naman Group, to also come up on stage, please. Thank you so much. Sapna Jeswani, Brand Manager, ABD Maestro, to please come up on stage. Thank you so much, ma'am, and thank you for being our valued partner. Thank you so much. Thank you so much, Mr. Bhatia, and thank you so much, Mr. Nair as well. And now, ladies and gentlemen, I'd like to call upon stage Mr. Arun Puri, Chairman and Editor-in-Chief, India Today Group, for his special address this evening. Huge round of applause, ladies and gentlemen, for Mr. Arun Puri.
Good evening. Swamiji is very refreshing and a very difficult act to follow. So you'll excuse me, but I will try. Distinguished CEOs, ladies and gentlemen, welcome. When we held the first Business Today MindRush 14 years ago, the world felt far more predictable than it is today. There was a broad sense that global economic progress and the era of open trade, however uneven, would continue to move in one direction. That sense of optimism has faded. Last year, we were hit by the Trump trade tsunami. This year, and no thanks to him, again, we have an unprecedented crisis next door. It is war with a difference because it has global ramifications. We are currently experiencing its severe impact on our oil and gas supplies, coupled with price shocks, shortages, and shutdowns. I believe opportunity often comes wrapped in adversity. US trade policies forced us to look for other export markets. And in about 12 months, we've tied up 5 free trade agreements, and more are in the works. Hopefully, the current crisis will make us closely evaluate our energy security policies. Why is it that we've not been able to be self-sufficient in the commodities which are giving us so much pain today? We had a very enlightening session on this subject today. One of the biggest hurdles in our to our international competitiveness is our suffocating regulations, which constrain our business and stifle our entrepreneurial capabilities. I think everyone in this room not only knows this, but has probably experienced it as well. Consequently, the central government set up a deregulation commission last year. They made some progress, but I think they have a long way to go. I said in my speech last year at this function, deregulation must be an act of surgery, not homeopathy, and I still maintain that. Maybe we need a Doge without the excesses of Elon Musk. Deregulation should be an ideological choice, not an economic necessity. Real entrepreneurs, like many of you present here, don't need protection from competition. They need freedom from friction. We desperately need greater FDI's inflows for us to grow. Ask any serious foreign investor who looked at India and chose to invest elsewhere why they made that choice. They will not say our talent is insufficient or our domestic market is too small. They will point to the wide gulf between well-intentioned policy and extractive on-ground practices in some instances. I must add that this is not a one-way street. Deregulation without accountability means chaos. A lack of accountability can lead to rent-seeking and market manipulation. What we need is a government that trusts the entrepreneur. What the nation also needs are entrepreneurs who earn the trust through good governance and transparency. One without the other will certainly fail. Both together is what would deliver Viksit Bharat for hundreds and millions of our people and not just a select elite. Today, geopolitics is no longer in the background of business decisions. It is in the center of them. And periods like this tend to separate those who move early from those who spend too long interpreting what is happening. India must move among those who move swiftly. Let me say something that may sound uncomfortable, especially after a decade in which India has done reasonably well, but we are still not realizing our full potential. The China Plus One shift created a significant opening. On paper, India had all the advantages: scale, talent, a large domestic market, a democracy, and an entrepreneurial culture that has repeatedly shown resilience. And yet, other nations have moved faster in many spheres. This is not about criticism. It is about recognizing that opportunities do not wait indefinitely. Windows open and windows close. If we approach them with urgency, we benefit. Although I belong to a profession known to be of skeptics, I remain optimistic about India. Not because optimism is fashionable, but because there are tangible reasons for it. The expansion of the consumer base is real and is no longer confined to the metros. Demand is spreading across smaller cities and towns in ways that was not visible a decade ago. Digital public infrastructure has created efficiencies on a scale that very few countries have managed. Our capital markets have deepened with tens and millions of individuals participating directly. And perhaps more importantly, there's a visible shift in ambition among younger Indians. They are more global, more confident, and less constrained by traditional limitations. And that matters. This is the 14th edition of India's Best CEOs Awards. And its credibility is anchored in a process that is rigorous as it is transparent and largely based on objective data. I must extend my deepest gratitude to our jury chairman, Mr. Harsh Mariwala, and other distinguished members of the jury. Over the years, at these awards, I've noticed a pattern. The most effective leaders are not necessarily those who operate in the easiest conditions. In fact, often the opposite. They're the ones who maintain clarity when circumstances were uncertain. Clarity of purpose, and more important, clarity of values. Clarity about what they would not compromise on. The leaders we honor tonight have passed that test. Their balance sheets are as strong as their values. In the long run, trust is the only currency that compounds. I firmly believe that fortunes can be made and unmade, but reputations once lost is lost forever. Let me end with a broader reflection. When I founded India Today 50 years ago in 1975, our nation was plagued by scarcity and stifling license raj. Some years later, in 1992, I founded Business Today, soon after the landmark liberalization of 1991. The nation had heaved a sigh of relief then, and industry flourished in the aftermath. But liberalization was not complete. Much has to be done. Today, India is more confident, more open, more willing to engage with the world. But progress can sometimes create its own complacency. The risk is not that we fail to grow. The risk is that we assume growth is inevitable. It is not. It requires continuous effort, constant adjustment, and a willingness to confront what is not working. That is what all smart chief executives practice. I congratulate all the winners of this evening. As CEOs, you have set high standards in your respective fields. The challenge, as always, is to keep raising them, and hopefully others will follow. Let me now welcome two very distinguished guests to this event. Our guest of honor today is Shri M. Nagaraju, Secretary of Department of Financial Services in the Union Ministry of Finance. A 1993 batch IAS officer, he played a key role in opening India's coal sector to private participation. In his current position, he oversees India's public sector banks, financial inclusion, the insurance sector, and the implementation of financial sector reforms. It is also my privilege to welcome Sri Ashish Shelar, a senior leader of the Bharatiya Janata Party in Maharashtra and the Cabinet Minister for Information and Technology and Cultural Affairs in state government. An advocate by profession, he's also a prominent figure in sports administration, including cricket. In his ministerial role, he's closely associated with advancing the state's digital and technology initiatives, including artificial intelligence and responsible social media use. Thank you, sir, for being here today. Thank you.
Thank you very much, Mr. Arun Puri, for your warm words there. And let me now invite on stage our chief guest for the day, Sri Ashish Shelar, Cabinet Minister for Information and Technology and Cultural Affairs, Maharashtra, to please come up on stage and, of course, give a brief remark on the kind of environment we are in right now, sir. Thank you so much.
Good evening to everybody. Shri Arun Puri ji, founder India Today Group, Siddharth Zarabi, editor, distinguished CEOs, industry leaders and friends. It is a privilege to join today for the 14th edition of Business Today, Best CEO Awards in Mumbai. I am fortunate that I am being the guardian minister of this part of suburb. So very happy to welcome you all for this August gathering. Your conference theme, India Advantage, CEOs, Geopolitics and Growth, is very relevant to today's world scenario, marked by shifting alliances, rising uncertainty, and fragmented global order. Much like the rest of the world, we are navigating a period where geopolitical events are affecting our daily life, impacted by energy security, maritime trade route, supply chain, and ultimately the growth and well-being of our business and the nation. Under the leadership of our Honorable Prime Minister Shri Narendra Modi ji, India stands steadfast in its commitments and focused on its efforts to achieve the goal of Vikasit Bharat. The discussions held today should not remain mere the conversation, but these ideas and thoughts from the boardroom must translate into the actionable advantage for Bharat. Today we celebrate excellence in leadership through the Business Today Best CEOs Awards, which recognize business leaders who steer their organization through complexity and help strengthen India's position in the global arena. To all the distinguished winners, my heartiest congratulations. Your work represents the resilience, innovation, and the vision that defines the rising new Bharat. In an era where many global CEOs are grappling with uncertainty and volatility, our business leaders continues to demonstrate confidence in the nation's growth story. I commend you for turning challenges into opportunities, building success entrepreneurs, and while contributing to the national development. India's demographic dividend, our digital infrastructure, policy reforms, and strategic positioning give us a unique edge in today's India's global landscape. Realizing this advantage and requires continued collaborations between media, society, industry, and government. The CEOs recognized today are already showing the way by embracing the innovation, fostering sustainable growth, and thinking strategically about India's role on the world stage. I applaud Business Today and Shri Arun Puri ji for creating this powerful platform, and India Today Group unwavering commitment to the insightful journalism. I again congratulate all the winners of Business Today Best CEOs Awards and thank you for this opportunity. Jai Hind, Jai Maharashtra.
Thank you so much, sir. May I also request Mr. Arun Puri to please come up on stage to present a token of appreciation to our chief guest right here on the stage. A warm round of applause for our chief guest and Mr. Arun Puri as well. Let's have a nice photo up, please. Stay. I'll also request Shri M. Nagaraju, our guest of honor, the Secretary DFS Ministry of Finance, Government of India, to please come up on stage, as we would also like to present a token of our appreciation for you, sir. A warm round of applause, ladies and gentlemen. Let's have a nice photo up there. And now, we're going to be also looking forward to the launch of our special edition, so we will request all three of you to stay back onto the stage as well. And for the special launch of our Business Today magazine that highlights the success stories of India's best CEOs, may I also call upon stage Mr. Dinesh Bhatia, Group CEO, India Today Group, Mr. Siddharth Zarabi, Group Editor, Business Today, and Mr. Alok Nair, COO, Business Today, to also join in onto the stage as well for this special launch. Remember, this is the BT PwC study that celebrates outstanding business leaders across sectors who have steered their companies to a robust and sustainable growth path. Let's have the magazines, please. May I also please invite the person on our cover, Mr. Velian Subaya, Executive Chairman, Cholamandalam Investment, to please come up on stage, sir. Thank you so much. That's a brilliant moment. Thank you, everybody. Thank you so much, sir. I'd like to request our chief guest and our guest of honor to stay back. Mr. Arun Puri, please, you also stay back. We're going to be starting the awards presentation now. The BT MindRush and BT PwC India's Best CEO Awards honor India's top corporate leaders, and since 2013, the BT PwC India's Best CEOs ranking recognizes outstanding leaders across various sectors who have steered their companies to a robust and sustainable growth path and have also contributed significantly to society. This year, we celebrate the 14th edition of the awards, which is a testament to the visionary leaders who have shaped India's growth story. For the first set of the awards, I will also like to invite on stage Mr. Amish Mehta, MD and CEO of CRISIL, to please join in to present the awards. The first category of the award is Urban Visionary Award, Oil and Gas. May I also invite Mr. Alok Nair, COO of Business Today, to also be on the stage, please, for this award, please. The Urban Visionary Award, Oil and Gas, goes to G. Krishna Kumar, the former CMD BPCL. Many congratulations. This award is being given to you for being a successful marketing engine, continuing your thrust on digital and moving into new energy. Many congratulations, sir. Thank you. Many congratulations. Many congratulations to you, sir. We'll move on to the next award category. This is Market Infrastructure Institution. And this one goes to Nehal Bora, MD and CEO, CDSL. This is in recognition of a surge in investor accounts, a successful foray into new areas, and making the right moves on technology. Many congratulations, Nehal Bora, MD and CEO, CDSL for Market Infrastructure Institution. Many congratulations to you, sir. We move on to the next award category. This is Pillars of Progress Award for Chemicals. And this one goes to Anurag Chaudhary, CMD Himadri Specialty Chemicals, for being an integrated manufacturer of carbon-based products, setting up capacity at scale and maintaining a strong capital structure. Many congratulations, Mr. Anurag Chaudhary, CMD Himadri Specialty Chemicals. Many congratulations. We'll move on to the next category. This is for Manufacturing and Retail Excellence Award in the auto space. And this one goes to Mr. Anish Shah, CEO and MD, M&M. Many congratulations to you, Mr. Anish Shah. This is for product innovation across portfolio, increasing market share, and a clear focus on long-term growth. Many congratulations. Mr. Anish Shah, Group CEO and MD, M&M. Moving on to the next category, this one is Urban Visionary Award for Infrastructure. Many congratulations. The Urban Visionary Award for Infrastructure goes to Mr. S.N. Subramanian, CMD of L&T. Many congratulations to you, sir, for being the nation builder, diversifying into new big-ticket areas and using technology at scale across products. Many congratulations. Many congratulations. We'll move on to the next category now. The next category is the Wealth Makers Awards, AMCs in brokerage and insurance. And this award goes to Mr. Karan Bhagat, MD and CEO 361 WAM, for providing holistic solutions to ultra and high net worth base plus individuals in digital to enhance the overall offering. Many congratulations, Karan. Many congratulations. Thank you very much, Karan, and thank you very much, Mr. Mehta, also for joining in for this award as well. We'll now invite on stage Mr. Sanjeev Krishan, Chairperson PwC India, to join in for the next set of awards, please, onto the stage. The next category is Pillars of Progress Award for Cement, and this one goes to Madhav Krishna Singhania, Joint MD and CEO, JK Cement. Many congratulations for large-scale expansions across regions and improving cost efficiency driven by green power. Many congratulations. Congratulations, Mr. Singhania. We'll move on to the next award. This is Services Vanguard Award, Pharmaceuticals and Healthcare now. And this award goes to Dr. Sharwal Patel, MD, Zydus Life Sciences. Many congratulations. This is for retaining leadership in key categories, sustained product launches and growth across markets. Many congratulations to you, sir. We'll move on to the next category. This is Services Vanguard Award, Transport and Logistics. And this one goes to Mr. Karan Adani, MD and Adani Ports and SEZ. Since he couldn't join us today, I'd like to invite Jack Bastian Nazareth, the CEO of Adani Realty, to collect the award on his behalf. Many congratulations. Thank you, Alok, for being with us for this award. Let me invite on stage Mr. Siddharth Zarabi, Group Editor of Business Today, to join us for the next set of the awards, please. Moving on to the next award category, and this one is manufacturing. This one is, beg your pardon, India's Best CEO Award, and this one goes to Mr. Ashish Kumar Chauhan, MD and CEO NSE. This is in recognition of a commanding market share and going beyond equity trading into SME markets, bonds, derivatives, and even ETFs. Huge round of applause, ladies and gentlemen, for Mr. Ashish Chauhan. Big hand, ladies and gentlemen. Many thanks, sir. Many congratulations, Mr. Ashish Chauhan. We'll move on to the next category, and this one is the Farm Champion Award for Agriculture and Allied. And this one goes to Arun Alagappan, Executive Chairman, Coromandel International. Many congratulations for leadership in complex fertilizers through an effective background, integration strategy, and sustaining growth in corporate protection. Many congratulations. Round of applause, ladies and gentlemen, Mr. Arun Alagappan. We'll move on to the next category now. This is, ladies and gentlemen, the Business Icon of the Year Award. Ladies and gentlemen, put your hands together for Velian Subbiah, Executive Chairman, Cholamandalam Investment and Finance Company, Vice Chairman, Tube Investments of India, Chairman, CG Power and Industrial Solutions, in recognition of an impressive turnaround of a distressed asset, moving his companies into new forays like semiconductors and the EV plus demonstrating the art of compounding growth. Many congratulations to you, sir. Many congratulations to you, sir. We move on to the last award this evening, ladies and gentlemen. This one is the Lifetime Achievement Award, and this one goes to none other than Ms. Arundhati Bhattacharya, President and CEO, Salesforce South Asia. Many congratulations to you, ma'am, in recognition of a remarkable journey from a probationary officer at SBI to becoming the first woman to head it, executing a complex merger and going all the way on digital. Many congratulations. Ms. Arundhati Bhattacharya. Huge round of applause, ladies and gentlemen, for the Lifetime Achievement Award for Ms. Arundhati Bhattacharya. And may I now invite all the winners with their trophies back onto the stage so that we can take a group photo with our chief guests and our guest of honor, Mr. Arun Puri, also right here, Mr. Sanjeev Krishan and Siddharth Zarabi. Let us have all of you back onto the stage with your trophies so that we can have a wonderful photo opportunity right here. Many congratulations to all the winners tonight. May I also call upon stage Mr. Dinesh Bhatia, Group CEO India Today, and also Mr. Alok Nair, COO Business Today, to join this group photograph, please. Many congratulations to all the winners. This is a momentous occasion, ladies and gentlemen. The Trailblazers of India Inc. right here in front of you on the stage. A big hand, ladies and gentlemen, for all the winners tonight. This is for the 14th edition of BT MindRush and India's Best CEOs. Thank you very much, everybody. Thanks, you've been a great audience, and thank you everybody on the stage as well. Thank you everybody for joining the 14th edition of Business Today MindRush and Best CEOs Awards. I'll take a moment again to thank all our partners, our presenting partner for BT MindRush, PwC India, Conglomerate partner Adani, celebration partner Art Horse and Earth Glassware, hospitality partner Sofitel Mumbai BKC, real estate partner Sri Naman Group, power partner REC. Dinner is now served. Please join us for dinner and networking. This is Sakshi Batra signing off. Many thanks for tuning in onto Business Today Television.
REC has always been at the forefront of embracing new and upcoming technology-based initiatives in the green space. With each investment, we are reducing the country's reliance on traditional fossil fuels and coming closer to our goal of a greener tomorrow. Our goal is clear: development with sustainability to fulfill the needs and dreams of today while nurturing the earth for generations to come. At REC, green is our compass. Every step we take today shapes the emerald horizons of our shared future.
Ladies and gentlemen, good afternoon. Today is day 29 of the UN